Porsche 911 Carrera T.
Nice.
So it's not
55.
at all
Purple, pink. Does it have fuzzy dice?
It's not at all discreet. It's very conspicuous. And so if I'm flying, in the free lane, next to a whole bunch of people lined up for an exit, and I try and sneak in at the very last minute, and the police see me, I'm dead.
You're dead? All right.
Yeah.
Bring that into the courtyard. We want to see that. All right, let's get to these markets here. We got green on the screen. Let's break it down. We'll do a little round table here with Jess Menton. She covers all the equities for us. And I looked up, and Mike McGlone is on my Zoom screen. I have no idea why, other than oil's just ripping, and we're going to get to him on that in just a second. Mike McGlone, he covers all the commodity stuff for us for Bloomberg Intelligence. Jess, what are you looking at today with a pretty strong market?
Well, looking over what happens with energy once again today, if you look at the energy sector in the S&P 500, up, and also on a monthly basis, up about 5%. So when you are seeing stocks obviously getting a boon there, when you are looking at the correlation between Brent and WTI, some individual names, though, if you're looking at Marathon Oil, ticker symbol MRO, up about 2.7%. So it's best day since September 12th. And then also Devon Energy is up about 1% there. That's ticker symbol DVN. So still continuing to see big moves there in the energy sector, Paul.
Yeah, I can imagine with the oil prices at this level, the energy sector would be well supported. Why are we seeing...
I blame Mike McGlone for this.
Let's go to Mike McGlone right now in Miami. Why are we seeing, what looks like a Brent price on WTI? It's over $90 a barrel here in New York. What's going on?
Well, you should blame me because I've been I'm the perma bear on crude oil for good reason. Its high was 2008. That was a long time ago.
146.
Yeah, there you go. And here we are. We're worried about 89 in WTI. The key thing that's happening right now that's missing in most of the media, and I think the people pointing it out, is it's all the other commodities are missing in this rally. So it's very much what's been happening with OPEC. OPEC is doing a great job boosting prices. We're getting managed money positions, hedge funds very long, but it's within a broader big bear market. So what's not been following is copper hasn't been going up, corn hasn't been going up, natural gas has actually collapsed this year, and it's bouncing a little bit. But that to me is what happens in crude oil. It is basically its worst enemy. It goes down because it goes up, and right now it's in the up stage. It's the most autocorrelated asset. Now you saw that last year. It went too high, and then it bottomed at 63 this year. So now we're up inching near the upper end of the range. Now I thought that was lower levels. It's still higher. You have to stop out some of those people first, and then it tilts lower. But just what happened, look what happened those last inflation data. It was higher than expected on the back of bouncing unleaded gas and stuff. What does that do for the Fed? They're still on track to keep hiking. So you see the lose-lose there? To me, this is what's going to happen in crude oil. It might bounce a little higher, might even get to 100, but then it's going to be its own worst enemy. It always does, and push it back lower. And the key thing is it's not having demand pull. It's not having companionship with other commodities at the moment. It's kind of a lone bouncing wolf.
Hey, Miami Mike. So you brought up copper prices. Obviously, people watch that as a key gauge for just not the economy, but the global economy, where it's headed. What is the copper-gold ratio telling us right now?
It's it's a bear market. If you look at copper first, I like to look at the gold copper ratio that way around. It's clearly a bull market. Gold has been outpacing copper almost forever. It just usually does, certainly on the last 5, 10, 20-year basis, and it's just starting to inch higher. The key thing about that ratio, gold beating copper, usually spikes when you have U.S. recessions. Now, the U.S. economic model from our Bloomberg economics team is at 100% in the next 6 months now. And you saw what happened today. We still have higher rates in Europe, yet they're tilting towards recession. They all get it. So to me, what's going to happen, this is kind of the gradually part of suddenly we're going to get that recession. It's just a matter of time. The hikes are still, the central banks are still hiking, and gold is probably going to be one of the best performing assets. I'll end with this. There's only one asset, one main asset that the average price here is the highest ever, and that is gold. It's around 1933. Now, it's a little bit below that now, but it's just kind of backing off a little bit if we have these animal spirits kicking in the stock market for a short term, I think.
What's the key level on copper where if it breaks below that, you'd be more concerned?
Well, I already am. Copper put in a new high last year, which was profound because crude oil didn't. But right now, around $3.80 a pound, I think it's more likely to head towards $3. That was the price right before we had this massive pump in COVID, and I think that's a key gravitational pull level. It needs to sustain above $4. It's $3.80 right now, at least to show some signs of strength with crude oil going up. But right now it's saying crude oil is not going to sustain. Copper's saying the economy is a bigger problem globally. So I think it's more likely to head 3. And the key thing about copper is it has been showing longer term for the last 20 years, higher highs and lower and higher lows. Crude oil is the opposite, lower highs and lower lows.
All right, guys, thanks so much for joining us. Mike McGlone on the oil move. And again, WTI crude oil up 1.7%. We're at $90 for WTI crude oil. We appreciate that. Jess Mensch, she covers all the markets for us for Bloomberg News. And we're still waiting on that ARM IPO.
Jess is a stocks reporter.
She does it all,
But I feel like she's fascinated with the commodities.
I know. Well,
I mean, I've covered cross assets before, so I still pay attention to their assets.
I didn't know if are you anchoring Business Week again?
Tomorrow I am.
Tomorrow, because I felt like maybe she was preparing for a future show.
Well, I think she should. I mean, she's a player. I mean, she can do it all. And Mike McGlone's okay, too. So, all right, let's talk about this ARM IPO. What's interesting to me, for somebody who was in the IPO business for a long time, I think fewer and fewer companies are going public because you can get so much capital in so many different places. Plus, it's just a hassle being public. Let's check in on that angle as we wait for a couple of IPOs, including ARM today. Still has not opened.
Still not trading. I want to point out.
Still not trading. Exactly.
That's my call.
Because you were on the over on the 11 a.m.
I was over 11 a.m. I'm thinking closer to 1.
Really? Okay, very good. We'll see how that plays out. And we're on to 1 o'clock, or at least I am. Andrew Silverman, government analyst covering tax policy for Bloomberg Intelligence, joins us. Andrew, how are you looking at this ARM IPO in the context of just the IPO biz in general?
Yeah, thanks, Paul. I actually wanted to respond to your comment about companies going public at all. I think you're onto something. I mean, the number of companies that are public in the United States is almost half of what it was in 1996. It's dropped down to something like 4,300. And companies can get cash in lots of ways. They don't have to go public to get their cash. I mean, there's about 6.3 trillion in assets that private equity funds have. Compliance costs are really high. Right now, it's about an average of 4% of a company's market cap. There are more regulations than ever, not just the 33 and 34 Acts, but Sarbanes-Oxley and Dodd-Frank. And companies have to take a short-term view in the sense that they have to put out quarterly filings and make distributions to their shareholders, and so they have to take the short-term view over long-term priorities. And a company like ARM really has to prioritize a long-term view. It has to invest in R&D, and so thinking short-term not the greatest. And one other thing that I would bring up. There's going to be this new standard which comes out pretty soon from FASB, the Accounting Standards Board, called NOCLAR, which experts believe will double or even triple the fees that companies have to pay to their auditors. And what it does is it essentially says to the auditors, if there's any regulation, law, anything around the world that's going to have a material impact on a company's filings, it has to be included. And so that means that auditors are responsible for checking everything everywhere in any country that the company operates in order to make sure that all material risks are covered. So it's not a great time to be a public company.
Those are all the reasons you wouldn't want to go public. And I mean, clearly, if you're a billionaire and you don't have a fantastic valuation, you take your company private. That's the smart move. Andrew Silverman. Hang tight for a second because I want to bring Kunjan Sabani, lead semiconductor analyst for Bloomberg Intelligence. Kunjan, having said all that, and I'm sure you know all the reasons why you wouldn't necessarily want to go public, why is Masasan, why is SoftBank taking ARM public right now rather than any other exit strategy? I think you're muted, Kunjan. You got to unmute yourself there.
There we go.
Can you hear me?
Yep,
yes,
let it rip.
Yes.
Yeah, I mean, the simple reason is they just need liquidity right now, given what's happening in their parent business, SoftBank. So they're just in need of some cash. And this is one of their biggest assets, which might not be the perfect time, but it's still relatively in the past. It's a better time today to go public with this. The other thing to keep in account, they're limiting their float to really like only $5 billion, less than 10%. So they are holding on to get a higher price later in the future.
Hey, Kunjan, as I looked at this prospectus, it looks like this is a company that designs chips for telephones. Great. But they are pitching this company now as, hey, we're going to be an AI company going forward. So they're asking me to pay an AI-ish type multiple for a phone chip manufacturer. Is that kind of what they're asking the market to buy off on?
Yes, that's exactly right. I mean, look, they're asking the market to underwrite the future, sort of the next NVIDIA moment. And their current business is primarily, like you said, smartphones and consumer electronics and to some degree IoT. But the AI server and the automotive market is where they have had recent design wins, which they expect to grow their share there. And that is what they're selling to the investors. Like, hey, you can bet on us for this coming in the future, so you don't miss out.
Hey, Andrew, back in the day, you know, I could take a company public with not much more than a business plan. But today, it seems like the market wants not only revenues, but profits. I mean, that also maybe thins out the herd for potential IPO candidates.
Yeah, that's exactly right. And in this case, why do you invest in a company? I mean, on the one hand, you want to get your returns. On the other hand, you have an expectation you're going to have some sort of control over the company that you're investing in. And this is not one of those cases, because SoftBank is going to keep controlling it after the IPO, and it's going to be what's called a foreign private issuer. And so the shareholders won't even know as much about it as a typical U.S. company. Won't have to make quarterly filings, won't have to have quarterly shareholder calls, and not subject to Reg FD, so it can share material non-public information selectively, not just to a select group of shareholders, not all shareholders. So yeah, I mean, if the only thing that people are investing in ARM for is a shareholder distribution, I think they're also going to be disappointed in the fact that this company has to invest so much in its R&D, and it also has such high operating expenses.
So, and it's a good point that this is all about SoftBank. Kunjan, ARM isn't reaping any of the proceeds from this IPO, right? It's not like they're going to be able to reinvest and build their business. This is just cashing out from Masa's son.
That's exactly right. None of the proceeds are going to ARM to be invested in the business.
Kunjan, just real quick, 30 seconds. Of the chip makers out there, which ones do you think are best positioned for this AI move?
I mean, NVIDIA, of course, we all are aware of. This second closest is AMD. They are also betting big on AI. And I would go Broadcom and Intel also have significant AI exposure.
And do you expect, can a company like ARM make that pivot, do you think? How do you view that opportunity?
They could. I mean, look, currently they have low single-digit share, but they have had recent massive wins. Amazon, Google, startups like Ampere adopting ARM technology, Apple. So there's room to leverage and build on those wins. And they can, I mean, look, they don't need to be the dominant player. Even if they grow their market share by another 5%, that's talking about billions of dollars adding to a company which is below $3 billion in revenue. So significant growth from just a little bit of an increment share gains.
All right, Kunjan, thanks so much for joining us. Kunjan Sobhani, he is the technology analyst for Bloomberg Intelligence based in San Francisco. And Andrew Silverman, government analyst covering the tax policy, looking at the IPO market in general. He does all that stuff for Bloomberg Intelligence based down in Washington, D.C. We've got BI analysts basically everywhere they need to be. If you need tech, we got folks in San Francisco. If you need the policy stuff, we got folks down in D.C. right where it all happens. So the BI folks know what they're doing down there. S&P 500 up 0.7%. NASDAQ up 0.8%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Caesars and MGM have been hacked by the same group within several weeks of each other. Bloomberg's Ed Baxter has that story.
Caesars Entertainment is expected to disclose details of the hack of its system soon, but Bloomberg sources say it looks to be tens of millions of dollars. The group behind the attack and the one on the MGM are attributed to a group known as Scattered Spider, or UNC 3944. The Caesars hack first hit an outside vendor before gaining access to the company's network. Members of the group are believed to be young adults, some as young as 19 years of age, residing in the U.S. and the U.K.
Well, shares of Caesars right now, they are up just a fraction. MGM shares up about 0.5%. And another airline is trimming its outlook due to higher fuel costs. Delta Airlines says it also reduced its expectations for third quarter profit because of larger than expected maintenance costs. The carrier did reaffirm its full year guidance on earnings. And Delta is also changing up its Sky Miles loyalty program. Bloomberg's Steve Potisk has that story.
Starting January 1st, it will use only cash spent, not miles flown, in calculating member rewards. The change follows similar moves made by other carriers designed to benefit the increasing number of people using co-branded credit cards for everything from flying to buying groceries.
Now, shares of Delta right now, they are down about 0.5%. And JetBlue says delays in aircraft deliveries and planes waiting for engines or repairs are hurting its growth. The airline tells Bloomberg it will get just 19 new Airbus aircrafts this year instead of the 30 that it originally expected. Shares of JetBlue right now, they're up about 2.5%. I'm Lisa Mateo.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 hovering around 4,500 right now. Both retail sales and producer price figures topping estimates amid higher fuel costs. So traders seem to have latched onto the narrative that the stronger data indicate a soft landing for the U.S. economy. You have West Texas Intermediate oil hitting $90 a barrel for the first time since November. Still waiting for ARM Holdings, indicated to open higher at $58 a share in its New York debut. And also, after the close of regular trading today, we're going to get earnings from Adobe. The S&P 500, 30 points higher, up 0.7%, just around 4,500. Dow Jones Industrial Average up 231 points. That's a rise of 0.7%. The Nasdaq 100, 120 points higher, a rise of 0.8%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that as always. Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Just head over to youtube.com and search Bloomberg Radio. Let's talk gaming, one of my favorite sectors to cover, the casinos. But we're not going to be talking craps or blackjack or any of that kind of stuff. We're talking hacking. I think some of these casino companies have been hacked over the past couple of days. I'm talking the big ones like MGM and Caesars. So let's break this down, see what the risk is here to these companies. Brian Egger, senior gaming analyst and lodging analyst of Bloomberg Intelligence, joins us. And Jody Lurie, credit analyst with Bloomberg Intelligence. She joins us via Zoom, both via Zoom. There, Jody's down in our Princeton office. Brian, let's just start with you. What's going on with these big casino companies and some hacking?
No, it came about that we found out a couple of days ago that MGM has been the target of an ongoing cyber attack attempt that has resulted in system shutdowns across a wide range of services. That's casino, hotel, other systems that have had to revert to manual operations. Obviously, it's been significantly disruptive. So there's an ongoing effort to remediate this, but it has certainly been an ongoing topic of interest to anyone following the industry.
Hey, Jody, from the balance sheet perspective, talk to us about these two companies or the industry in general, about kind of where we are in terms of the capital structure and the debt loads and the leverage. Are these balance sheets in decent shape?
Yeah, so I think that's definitely a great question. These companies have been very much improving their balance sheets since the pandemic, but it's a little bit more complicated than that and a little bit more nuanced. If you take someone like Caesars, they've been directly deleveraging proactively. MGM, it's a little bit touch and go because they opted to sell out of their assets through a sale leaseback. And so a substantial portion of their quote unquote debt, or if you consider adjusted leaseback debt, is leasebacks. I mean, that's about half of their debt load outstanding. So from a debt perspective, you say, all right, look, these companies are actually pretty good shape, but if you add leases, it makes MGM look less favorable than Caesars.
But there's no issue here, Jody, just kind of like if there's going to be a material hit to their profitability or their cash flows for either of these companies, do you think?
Yeah, so I think that's the key is that, and Brian and I have been talking about it all week, is at least for now, the expected effects for their cash flows from a long-term perspective might not be so grand. It's really a question of what is the sort of echo effects for these companies over time that could impact margins and therefore cash flows. And I think, the issue is, if insurance is going to cover a good portion of it, what sort of knock-on effects to things like reservations might be affected. If MGM's site is down all week and it's right during their peak season of bookings because we have a lot of events going on that Brian has talked ad nauseum about, does this mean that MGM is going to lose out to competitors when people are starting to book for things like Formula One and things going on in the fourth quarter?
Brian, Jody is sick of hearing you talk about the events. Come on, man.
They're big. Events matter, absolutely.
But in terms of, just to wrap up the hacking side of this, are MGM or any of the other casinos more at risk of hacking than other, I guess, financial companies?
I mean, we've begun to view this as at very least an industry-wide risk. Caesars had an 8K report out this morning indicating that they were the target of another effort to hack into their systems. Along with that, some of their loyalty program members' information was tapped. So this is an ongoing risk. Caesars managed to weather that particular incident without the very visible systems-wide outage that MGM is still undergoing. But I think it's fair to assume this is going to be an industry-wide risk requiring really coordinated remediation and containment efforts. And we'll get some offset, presumably from MGM, from cyber insurance. We just do not know the degree to which we'll get those offsetting streams.
All right, let's step back and look at this industry in general. Jody, when you talk to creditors out there, credit investors, how do they view the gaming business? Is this something that is a really solid credit out there for a lot of investors? Do they buy the industry? Do they buy individual names? How do they approach it?
I think if you like gaming, you're in gaming. You're full-fledged in gaming, and then you're just picking names. I think there's a lot of creditors who say, I don't even want to touch the space because it's too cyclical. I mean, let's remember that back in 2008, MGM got a little bit over-levered with City Center. They were able to get themselves out of it. But comparison to that, Caesars, and we're not talking the Caesars of today, because the Caesars of today is El Dorado. But historically, Caesars was LBO'd, taken private, and then they ended up going through restructuring. So it's definitely an industry that if you like it, you really like it, and you're involved in it. If you don't like it, you don't really go near it.
But to be clear, I mean, Paul was talking about craps and blackjack, and I mean, that's not, is that still the lion's share of their revenue, or is their revenue more like, bankers booking conferences at the resort?
They're definitely shifting their mix, and we're seeing that with Sands over in Macau. I mean, they're focusing so much on their non-gaming portion of their business, and I think you're seeing that in Vegas as well, and they would hope for the regional casinos that obviously gaming is the bread and butter of the business, but they want to give people the other element. They want to give people the shows and the shopping and the experiences, because that's what's going to keep people. That's also going to bring other types of individuals than just your dedicated slot users or craps tables players.
I'm a Vegas guy. Mr. Vegas, of course. But Brian, I understand in reading your research and talking to you that the regional gaming business is a big part of it. Talk to us about some of those kind of like non-Vegas aspect to the U.S. gaming business. How's that performing? Because gas is expensive. It's going to cost me a lot to get to my Mississippi River kind of casino.
Yeah, the regional gaming trends have performed well. We've probably leveled off, certainly above pre-pandemic levels, but compared to last year, things have begun to perhaps flatten. I think the bigger challenge, not only for Vegas, but for regional properties, is on the cost side. As the companies are reinstated full pre-pandemic service levels, they may find it tougher to sustain the very significant margin gains they got relative to pre-pandemic experience. I will point out that this cyber incident is affecting MGM's regional properties as well as its Vegas properties. So this is really a kind of a national issue for MGM.
In terms of where they're getting their revenue, you mentioned, Jody, Macau. Is Las Vegas dwindling as a revenue source? Are they getting more revenue overseas now, the bigger companies?
So if you look at it from more than revenue, we care more on EBITDA, especially from a debt perspective. And from an EBITDA perspective, Macau is still coming back. So Macau was roughly 22% of MGM's EBITDA or EBITDAR, which includes rent, before the pandemic, so 2019. They're not quite there yet. They have seen a significant uptick, but Vegas and regionals are still certainly the lion's share of what's going on in their business. No pun intended on the lion, because that's MGM's logo. But I think that's the key, is that Macau is this source of momentum that's happening, but it's not quite to pre-pandemic levels, and that's a function of the fact that it's only been open since the beginning of the year. I think that provides some nice tailwinds for MGM to make up for the fact that the U.S. business is having this little blip of an issue, and even if things start to slow down in the U.S. and people aren't doing this revenge spending that we saw over the past year and a half, 2 years, we might see Macau help to sort of offset that a little bit.
Hey, Brian, is there any new property coming online in Vegas?
So there's a couple of things that are underway for future developments. Nothing like really imminent.
Got the orb, right? There's that very cool orb where, like, U2 apparently is
yeah,
playing.
The sphere is interesting because that's a non-gaming attraction, but it's highly significant. A lot of the recent additions to Vegas have been, not to diminish the importance of longer-term resort development, but a lot of the additions to Vegas have been in the form of non-gaming entertainment. So you've got the Sphere entertainment venue. Jody earlier mentioned the Formula One Grand Prix, which I'll mention again. But also you've got sports teams significantly. You have the Golden Knights playing at T-Mobile Center. You've got Allegiant Stadium hosting the Raiders. And of course, you have the A's moving to Vegas at a site that will be on a stadium abutting the current Tropicana. So not to diminish the importance of potential long-term resort developments, but these non-gaming developments related to entertainment, sports, conferences, those are all rather significant additions to draw tourism that don't necessarily add significant room capacity.
All right, great stuff as always. Brian Egger, Jody Laurie, they're your analyst at Bloomberg Intelligence, covering the gaming biz from the equity side and the credit side. It does not get any better than that. We got full equity and credit coverage of any industry you want to talk about, any company you want to talk about. That's Bloomberg Intelligence. Coming up, we're going to have more. Right now, let's go for our news in New York City. Michael Barr.
Paul, Matt, thank you very much. A Georgia judge has decided former President Trump and 16 of his co-defendants will stand trial separately from 2 others in the state 2020 election interference case. Attorneys Kenneth Chesbro and Sidney Powell will be going to trial October 23rd as previously scheduled. Meanwhile, Trump's former chief of staff, Mark Meadows, still trying to get his trial moved to federal court. The Biden administration is issuing a warning following this week's summit between Russian President Vladimir Putin and North Korean leader Kim Jong-un. Bloomberg's Nancy Lyons has details.
Both Putin and Kim deny U.S. speculation that their meeting was primarily to discuss an arms deal. The State Department's Matthew Miller says the U.S. is ready to slap on more sanctions if any such deal is drafted.
When you see what looks to be increased cooperation and probably military transfers, as we've said for some time, we have reason to believe they were going to discuss military transfers. That is quite troubling and would potentially be in violation of multiple UN Security Council resolutions.
Other State Department officials say Russia is scraping the bottom of the barrel looking for help in its failed assault on Ukraine. In Washington, Nancy Lyons, Bloomberg Radio.
A federal judge has blocked part of the controversial public health order in New Mexico. The governor, Michelle Lujan Grisham, had suspended the right to carry guns in public in the Albuquerque metro area for 30 days. Gun rights groups called the move unconstitutional. We, the Patriots USA, had taken legal action against Grisham and was represented in part by attorney Cameron Atkinson.
This was one of the most seminal moments in modern American legal jurisprudence.
Around 500 people die by gun violence each year in New Mexico, many of them children. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg. markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Traders digesting a batch of strong economic data here in the U.S. seems to indicate that we can enjoy a soft landing. Now, that's giving a lift to the major stock averages. Energy among the best performing industry groups in the S&P 500. This is oil hovers around $90 a barrel. That's West Texas, by the way. The United Auto Workers preparing to launch a simultaneous stand-up strike against all Detroit 3 automakers if agreements are not reached by late tonight. Patrick Anderson, founder of Anderson Economic Groups, warning that the union demands could actually lead to bankruptcies.
The request to go back to what's known as the jobs bank and a defined benefit pension plan are existential and bankruptcy risks for the automakers.
Right now, the S&P 500, 26 points higher. That's up 0.6%. 44.94 on the index. The Dow Jones Industrial Average up 222 points. That's up 0.6%. And the NASDAQ 100, 96 points higher, up 0.6%. Traders awaiting the market debut of chipmaker ARM, said to be the year's most hotly anticipated IPO. Right now, it's indicated to open at $58 a share. That would be close to 14% above the IPO price. Still waiting. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
Where do you see the indication on the Bloomberg? Because I'm looking at ARM indicated to open at $63. That headline was from 10:10, so a while back. Do you have a more?
I was sent the headline from my boss, and who's told me if I don't
Use
get
the
this
BQ
on,
function.
he will revoke my legs or something like that.
BQ function, the Bloomberg quote. And it's got an auction price down there of $56.75. That's how I kind of take an indication before they've even sized up the bid, the two sides. You'll see the two sides maybe as a bid ask a little bit later in that thing, but it's looking around 56, 57.
It's getting a little late in the day, isn't
11 o'clock is now it's starting to get a little embarrassing.
I'm telling you, these things happen later these days. You guys are from the old school.
I just see that's when I would go to my head trader, John O.D., and I'd say, O.D., what are we pricing? What do we open this thing at? He says, we're open at 56. I got a book. Boom, we hit the bid, and we go. Now, I don't know what's going on. Plus, you have to go like 27 different underwriters that probably kind of have to agree and everything, so who knows? But we'll stay on top of that. Let's talk retail, because you think about some of these retailers over the last several quarters, they've been talking about shrink. And shrink is a new term, but apparently people are stealing stuff like crazy in these stores, and it's a big, big issue for a lot of retailers. Jill Blanchard joins us. She's a president of Enterprise Client Solutions at Advantage Solutions. Jill, what is shrink, and how has that trend in shrink changed for the retailers?
Yes, hi, thanks for having me. So shrink is an all-encompassing term that really equates to the ability or the inability to sell a product that you already have. A good portion of that is due to theft. So typically speaking in retail, it's about 37%, and some of that is rising, some due to a rise in organized crime, and it has a significant impact for both manufacturers and retailers. And boy, they are looking at some interesting increased tactics to curb shrink.
All right, so it's funny. Well, not funny. It's kind of crazy here in Lexington Avenue, 59th Street. You go a couple blocks to the local drugstore, and you want to go in there and get a toothbrush. You can't because everything is
all
locked.
up.
Everything is locked, and you have to have. They've got people on every aisle that'll just unlock it.
No. I wish they had people on every aisle.
Oh, right, okay.
That's not the case. They have a couple of people who, when you ring a bell to try and get your toothbrush unlocked, will come over within 10 to 15 minutes and act as if you've ruined their day. So it's a real problem, I think, for the drugstores around here. But I wonder if it's just a cultural change, Jill, that, people just feel more comfortable stealing stuff now. That's a problem for retailers if that's the case, isn't it?
It is a problem, and it's really due to a couple things. One is the overall prosecution is of those types of thefts in certain rings are are down, coupled with the fact that it's easier to sell stolen product now as an unauthorized third-party seller online. Both of those are really contributing to this. And I got bad news for you. More product is going to be locked up or put behind the counter. And actually, the estimates are that there's a 1 minute wait. It does feel like 5 to 15 minutes, but there's an estimate that's 1. And it does have a lot of consumers just choosing not to buy it in store and buying it online or buying a different product.
Joe, what are these rings? What are they stealing? There can't be a lot of money in the toothbrush business.
It really varies. Some of the more prone categories to theft are things that are expensive and easy to steal. So think of like a higher end, smaller cosmetic product. Think of eye care products, sometimes fem care products. Electronics is in there. Batteries is a big category too. So things that are easy to resell, typically are smaller, easy to steal, let's say, and have a high ring. One of the things that retailers look at are putting these, I'm sure you see these shelf racks that make it hard to get a product out.
Yep.
What they're trying to do is really kind of deter that sweeping, the ability to sweep and get 10 bottles of something at one time.
Baby formula is one thing that I know in Europe was a real problem. And those are societies where people don't just steal stuff all the time. Baby formula and diapers, which then is kind of a sad comment, because if you can't afford to get that, that's a problem
bigger
from
problem.
the get-go.
Hey, Joe, what are the retailers? What can they do here? I mean, other than lock everything up, are we seeing any creative kind of responses here? Whether it's technology or anything like that.
We are seeing some. So we recently asked retailers this question in the Advantage Outlook survey that we do with manufacturers and retailers every quarter, where we hear about their challenges, their opportunities, and their strategies. And so retailers' top strategies are, first of all, to increase video surveillance. So that's the top strategy. And they'll vary by category. They will put more products behind the counter. They'll lock more up. They'll do those shelf racks that make it hard to sweep. In certain extreme cases, they'll stop carrying products. It's going to be more beneficial to them in some stores for some products to stop carrying them. There is a new technology that's being tested now where the product is locked and the user can use their phone to scan a QR code to unlock that case. Now, it gives the consumer independence, but it also takes time.
Yep.
And you're like on the record.
Yeah.
For looking for that product.
For everything.
That's a good point. Now, aside from the theft, and maybe that's an unfortunate part of the retail landscape now, there are a lot of other problems facing retailers. You got households that are running out of excess savings if they're not already out. Student loan payments are about to restart, right? And we're seeing a lot more purchases on plastic. Delinquency rates for those credit cards are rising. Delinquency rates for auto loans are rising. We're looking at oil prices and prices at the pump that are up.
Debbie Downer.
I mean, is a recession in the cards?
I'd say right now it's a dichotomy of factors. So on one hand, we see things like retailers doubling down on private label to really meet that cost-conscious and price-sensitive consumer where they need to be met. So they are creating more private label. They're really watching those price points. Then on the other end, so I won't be a Debbie Downer here, is as consumers look to curb spending, the first place that they curb it is the more expensive outside the home. So they don't buy the new car or go on the vacation, but they're looking for that self-indulgence. So they'll treat oneself at home, both with self-care products as well as food products. And so we see manufacturers really doubling down on premium priced, higher end innovation to cater to that, that in and at home and indulgence. So it really is a dichotomy right now.
Joe, thank you so much for joining us. Really appreciate it. Joe Blanchard, president of Enterprise Client Solutions. The firm is Advantage Solutions, talking about shrink and people just stealing stuff. It just seems odd, but you hear all the retailers talking more and more about it as a big financial hit. They call it out in their financial results, as incremental cost.
Part of it may be just they know that they can use this as an excuse.
Maybe, yep.
And so they're putting it in their releases. But I think another part of it is just a big societal shift.
Yeah. I mean, again, try buying a toothbrush here in New York City. You got to have a, I don't know why it's so difficult, but anyway, they're trying to take care of business, I guess. S&P 500 up 0.7%. This is Bloomberg Markets. Good morning. Let's get some company news right now with Elisa Mateo.
Thanks, Paul. Shares of ARM will begin trading on the Nasdaq today. The chip designer owned by SoftBank sold just over 95 million American depository shares at $51 each. That's the top end of the range. Now, Bloomberg reports its IPO is expected to open higher at $57 a share in New York. Bloomberg's Swetha Gopinath says it's a turning point.
The IPO market has been pretty depressed for the last 18, 20 months. So this is the big deal that we've been watching out for. And if it trades well today, it could really open the floodgates in a way we could see a number of other tech listings follow through. So it's a key moment for the global equity capital market.
Now, sources tell Bloomberg ARM's offering was oversubscribed more than 10 times. Stay tuned here to Bloomberg for the latest on when it begins to trade. And it didn't take long for lawyers to act on the Food and Drug Administration's announcement about certain decongestant. Bloomberg's Gina Cervetti explains.
Procter & Gamble and a Johnson & Johnson unit are facing a proposed class action lawsuit over decongestant products containing phenylephrine. The federal suit filed in Florida follows an FDA advisory panel saying the ingredient is not effective.
Now, shares of Procter & Gamble, we'll check in with that right now, up about 0.9%. Johnson & Johnson shares up about 0.3%. And Elon Musk's X Corporation will try to settle claims filed by thousands of former Twitter employees. Bloomberg News has seen a memo from a lawyer for one of the workers saying attorneys have finally succeeded in getting Twitter to the table. The workers say they were cheated out of severance pay when they were fired after Musk took over the company. No comment from X Corp. Those are the company stories we're following this hour. We'll have more in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. S&P 500 up about 0.7%. Same for NASDAQ, same for the Dow. A solid day here. We got the NASDAQ 100. Actually, the Russell 2000 up 1.2%, so the small cappers outperforming today. That's good to see. WTI crude oil up 1.6%, just under $90 per barrel. Continues to move higher, so we'll keep an eye on that commodity. With our news in New York City, here's Michael Barr.
Paul, Matt, thank you, gentlemen. 16 days before the U.S. runs out of money, a frustrated House Speaker, Kevin McCarthy, expressing anger with the status of government funding and the appropriations process after a closed-door GOP conference meeting.
I showed frustration in here because I am frustrated with the committee. I'm frustrated with some people in the conference. We had the DOD appropriation bill yesterday. I couldn't put it on the floor. I don't have one complaint by any member of what's wrong with this bill.
McCarthy told Republicans he isn't afraid of a motion to vacate, saying, move the insert word that will get us fined by the FCC motion. He is suggesting the best route is to pass a short-term resolution to keep the government running. A Georgia judge has ruled that former President Donald Trump and 16 others will be tried separately from 2 defendants who are set to go to trial next month in the case accusing them all of participating in an illegal scheme to overturn the results of the 2020 election. Lawyer Sidney Powell and Kenneth Chesbrough had filed demands for a speedy trial, and Fulton County Superior Court Judge Scott McAfee set their trial to begin October 23rd. From Bermuda to Bar Harbor, anyone near the Atlantic is in storm prep mode as Hurricane Lee, a Category 2 storm, is being created by huge waves and dangerous rip currents. In Bermuda, about 290 miles southwest, is the center of Lee, moving north toward Nova Scotia, New Brunswick, and Maine. A $16 million upgrade to a seawall in Marshfield, Massachusetts, may be put to the test this weekend. Marshfield Administrator Michael Maresco.
The waves can be very, very dangerous. Science, technology, and engineering, people that are a lot smarter than me, tell me that those walls are built to withstand a substantial amount of pounding.
The Ultimate Water Beads Activity Kit and similar items under different labels made by the same company are now subject to a voluntary recall by the Consumer Product Safety Commission. The beads expand when put into water, posing a potential hazard to any child that might swallow one. The kits have been sold at Target and are made by Buffalo Games and Puzzles. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Matt.
All right, Michael Barr, thank you so much. We appreciate that. You know, I did just kind of Google map what is it, Marshview, Massachusetts or something?
Marshview.
Yeah, boy, it is right on the coast, sticking out in the ocean. You could see how that would be a piece of land that would just get hammered on a nor'easter.
Who gets there and says, I'm going to build my house here?
A lot of people, I guess. But boy, you're right. I mean, it's right there. I mean, and just the bans alone is going to cause major problems.
Yeah, that's good. It's tough. Hopefully those folks will be okay. Michael Barr, thank you so much. All right, file this under the I didn't know you could do this kind of thing. Players of Dartmouth College men's basketball team have petitioned to unionize. That's according to the docket of the National Labor Relations Board. If successful, the move could be the first Division I in college athletics to unionize. What's up with that? I mean, football players at Northwestern previously sought to unionize in 2014, a move that ultimately was dismissed by the National Labor Relations Board due to the then status of athletes not being classified as university employees.
I mean, so now they're classified as employees? They get paid to play basketball?
Well, you can get paid through the name, image, and likeness.
Right, but that's the different. That's different than getting paid. Do you get like an hourly? Do you get a bonus for a dunk? Like,
I don't know.
Is that possible? You can't pay the men's basketball team, right? Then you have to pay like the women's underwater basket weaving
I don't know how this is going to play out. That's why this kind of jumped out at me. But the good folks up at Dartmouth, they're going to try this thing. Maybe get paid for playing hoops. Who knew you could do that? We'll have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up, we're going to check in with Mari Shore. She's senior equity analyst with Columbia Threadneedle. We're going to break down some of those retail sales numbers that we got today. They look pretty solid to me. On the VC outlook, Robbie Peters, co-founder of Semper Virens Venture Capital, discusses his firm and the outlook for the VC space. And then Roberta Goss, senior managing director and head of the bank loan and CLO platform at Pretium, will join us to talk about lending and the outlook for financing in the U.S. Right now, we're going to kick things off with Mr. Charlie Pellet.
Thank you very much, Paul. Lots of moving parts in today's trading. We're keeping an eye out for ARM Holdings. It is indicated to open higher at $57 a share when it makes its New York trading debut. We will get those numbers to you as they become available. Green on the screen, lots of it. Best level of the day. Right to the numbers here with the S&P up 32, a gain of 0.7%. Dow Industrials up 267, now up 0.8%. NASDAQ, the composite index, up 110, up by about 0.8%. And NASDAQ 100 index higher now by 0.8%. The Russell 2000 as well, outperforming, up by 1.2%. 10-year at 4.27%. We have got the 2-year, 4.98%. Spot gold at $19.09 the ounce, up $1.19 now, higher by just about 0.1%. And West Texas Intermediate crude with a 90 handle, 90.03 on WTI, up 1.7%. Brent, 93.51. Brent, the global benchmark, up now by just about 1.8%. Retail sales and producer prices both rose in August by more than forecast, driven by higher fuel costs that risk tempering household spending and keeping inflation elevated. Now, what about the outlook for the fourth quarter? Michael Darda is chief economist at Roth MKM.
As we get into Q4, I think we're looking at some weakness. Excess household savings literally are gone this month, the month of September. So we're going to be looking at a situation where consumers are going to have a much stronger incentive to bring spending in line with income. And income growth is slower than spending growth by almost 200 basis points.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Lazard's Peter Orszag is setting fresh targets for the 175-year-old investment bank, including doubling revenue by the end of the decade. After the bell today, we'll be hearing from Adobe. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, good stuff there. We appreciate it as always. They haven't opened ARM yet. Now it's getting embarrassing for the underwriters. Let's be clear.
I don't think so. I think the expectations are no longer to open, an hour after the bell. I feel like these things open later and later. Started way back with Facebook, and that they were embarrassed then.
Yeah, that was bad.
But now, I think they're comfortable doing it around noon, 1 o'clock.
Okay, all right. I'm looking at the my Bloomberg quote, 56.25 is what's up on the auction price. So we'll see how that. And again, the IPO price is $51. So let's look at these markets. We got green on the screen here, as Charlie was just reporting. So we want to get some color. Alex Semenova joins us. She covers all the equities for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Alex, what are you looking at?
Yeah, Paul, Matt, everyone is on the edge of their seat right now waiting for ARM Holdings shares to become available for trading. First, we were thinking 10:20 a.m., then 11. Now it's past noon. Everyone's still kind of waiting for that first trade. It's indicated to open at about $56 per share in this much anticipated debut. That's above the $51 per share priced by ARM. It already sold 95.5 million in depository shares. Investors in the IPO included some of ARM's biggest customers. It set aside more than $700 million of its stock for Intel, Apple, NVIDIA. Samsung, but of course, SoftBank still controls 90% of ARM shares. And this IPO is the world's biggest this year, surpassing the $4.4 billion listing by Johnson & Johnson's consumer health spinoff Kenvue. It could also be a catalyst for IPOs from dozens of startups that have kind of been on the sidelines in what's been the deepest and longest drought since 2009. Some others on deck include Instacart, Birkenstock, as everyone kind of waits for the IPO market to reawaken.
It had been indicated to open at $63.
Yeah.
Back at 10.20.
So they're backing down a little bit.
And then it was indicated to open at 58, and then 57, and now 56. So I guess, sometimes as they take longer, remember with Facebook, it took them until the afternoon, and that was a real problem for the opening price.
Yep.
And, but if only I had backed up the truck at that point.
Yes, exactly. So the question, and I don't know because I don't have the prospectus in front of me, who the stabilizing agent is. Who's the underwriter that's in charge for literally physically opening the trading of the stock and will handle most of the orders on the first day, which is a good place to be because you make a lot of money doing that. And that's the kind of thing. All right, what else are you looking at, Alex? It's not just IPOs. There's other stuff going on?
Yeah, apparently. Another stock that I'm watching today is Delta. Shares are down today about 8% the last time I last glanced. That's after the company reduced its expectations for third quarter profit, citing higher fuel prices and larger than expected maintenance costs. Adjusted profit will be $185 to $205 a share. That's compared to an earlier outlook for as much as $250 a share.
These are big misses that we've seen from these airline companies.
It is, but the reason that this share move isn't lower is because there was some sort of expectation of this among investors. First, the company did reaffirm its guidance for a full year profit of $6 to $7 per share, but also other carriers have been cutting profit margin guidance on a 34% increase in jet fuel costs this quarter. Yesterday, we had American Airlines do that, along with some discount carriers, warning that their quarterly results would come in below initial expectations. So investors kind of saw this coming with Delta. There was a bit of a relief rally at the open, and now that share move is lower, but not as bad as you would think.
All right, so airlines getting hit again today, and it's I don't think a huge surprise with the rise in crude, and I imagine jet fuel is following along. Almost all of the oil, gasoline, and fuel products are up today. In terms of other movers, HP, Hewlett-Packard, is down today. What's going on there?
Yeah, that stock is down more than 2%, extending losses for a third day. That's after Warren Buffett's Berkshire Hathaway disclosed that it sold $158.5 million worth of shares of the PC maker. Bloomberg intelligence analysts say that this reinforces rising concerns about the printer maker's ability to stabilize and grow free cash flow. There have also been concerns, of course, about its printing business. It's a tough time. No one is really using printers anymore, I guess, outside the office.
Except for Carol Masser. Carol Masser is still...
That's true. She prints reams of paper.
Yes, and David Weston as well. They are still paper-intensive hosts.
But there are very few. I have been here for 23 years, so I remember when all of our scripts were printed. I remember when all of our notes were printed. And now it just seems like... a waste.
Yeah, a waste.
I gotta say I'm a little bit of a hypocrite because I actually have some of my notes printed too.
But you're logged into the terminal. Why do you need to print your notes?
I don't know. There's something about just physically holding a piece of paper.
All right, we'll get Count Masser in here and just grill her about her.
We'd need to find her first. Her desk is just covered with books and papers.
Yes. Well, she's out, I don't know, sailing the seven seas somewhere. I don't know where she is.
True.
Yeah, so we'll track her down. All right, Alex, thanks so much for joining us. Alex Semenova, Bloomberg, covering the equity markets for us. Again, a nice move in the S&P 500, up 0.7%. We had some retail sales come out this morning, and I thought they were pretty darn good. You look at retail sales, better than expected, a little bit weaker than last month, but still pretty solid. I don't know. It seems pretty good to me.
You use the ECAN function?
No, it's just using ECO.
ECAN Go.
Okay.
It's a new function on the Bloomberg terminal.
Yes, you're pitching this.
It's the World Economic Analyzer. I absolutely love it.
Okay, so I'm looking at the retail sales. Okay.
Yeah, you can. The drop-down menu, you can look at CPI. You can look at PCE. You can look at retail sales. I think we have it.
Hey, we have ARM opening. Opening at 55. Well, we're trading at $55.75 today. Right now, it priced at 51. So a nice little lift off of there. So we got that open, rough around 12:09 p.m. Wall Street time. So we'll keep an eye on that. ARM holding up about $4.90 from the IPO print of 51. Let's check in with Mari Shore. She's a senior equity analyst at Columbia Threadneedle. Mari, I know you spent a lot of time looking at the retail space. What did you make of the retail sales numbers today?
Yeah, thanks for having me. I think that the July retail sales print does support still a mixed read on the consumer. So as you just noted, 9 of the 10 categories we track did decelerate versus last month. And this really supports the view that the July trend, which benefited from weather and lapping peak gas and food inflation, was probably not the right trend to build from. And when I really dig into the numbers, there's really 4 themes that we discussed last month, which still hold true. So we continue to see the consumer spending more on needs versus wants, with strength in categories like auto parts and grocery and health and wellness. We also see continued strength in e-commerce relative to stores. The other thing I would note is bottoming in some of the big ticket categories like consumer electronics, which have been weak for years now coming out of the pandemic, and still pretty tepid results in more discretionary categories like apparel, with market share shifts being the key driver of company performance.
So overall, the retail sales without cars, overall it was up 0.6%. If you take out cars month over month, also 0.6%. If you take out cars and gas, up only 0.2%. Yeah. So I guess gas makes up a lot of this, and these figures aren't adjusted for inflation, right?
Well, these are nominal figures, so these do include some measure of inflation. But as we saw in the CPI print yesterday, we are seeing moderating inflation in most categories except for gas right now. And so as we've talked about, pricing had been a really key driver of sales for many companies during the pandemic. And that is no longer a lever that the companies can pull, given the weaker macro backdrop and the fact that inflation is moderating. So now you really need stronger unit demand to drive sales from here. And I think in many cases, it is hard to identify a catalyst for stronger unit demand, given the weakening consumer backdrop.
Mari, how is back to school shopping, and how does that set us up for the holiday shopping season?
Yeah, so I just spent the past couple of days at the Goldman Sachs Retail Conference. And again, I think the commentary is very mixed by company and by category. I think the business did improve throughout the second quarter. So they ended on a high note. And it sounds like quarter to date, through the start of back to school, the companies are running in line with their plan. But I would note that for some companies, that assumes still negative sales growth in the third quarter. So it's not like all of a sudden the consumer is coming out in a big way. And again, the companies that do sound the best are companies like Lululemon and Walmart that are gaining share. As we look forward into holiday, I think it's going to be more of the same. I think we all know that inventory is better positioned than last year, so the companies will see a nice benefit on gross margin rate. But when we think about drivers for sales as we move through back to school and holiday, as I said, it is difficult to identify a real catalyst there.
Mari, I looked through all of the different categories. On the ECAN function, ECAN.
Pitching this thing.
Go.
Nice.
Well, I love it because I can see month over month that gasoline was a huge, gas stations were a huge driver for this gain. But I looked through the last few months, July, June, May, April, the big contributors were non-store retailers. So everything else I look at, food services and drinking places, I get what that is. General merchandise stores, I get that. Sporting goods, motor vehicle, clothing, I get all that. What is a non-store retailer?
So that is really the best measure of e-commerce that we have, and that would also include companies like Walmart that have a big e-commerce business. That e-commerce business would be included in there, and Amazon really makes up the majority of that category at about 40% of the category. And so for some time now, as you mentioned, we have seen e-commerce regaining momentum from stores back to very similar trends as to what we were seeing before the pandemic. And I would note Amazon and Walmart as really doing the best job in this category and taking share, with both posting double-digit growth.
Mari, we earlier in the show today, we had a guest on. We were just talking about shrink, because it seems like so many more retailers are talking about theft and all that kind of stuff. And Matt and I were wondering, is that a real thing? Is it really changed in terms of their losses, or is it just kind of a convenient way to, maybe hide some expenses?
Yeah, that's been a great question that a lot of people are asking. And I think the short answer is yes, it is a real thing. And the companies seem to be largely attributing the rise in shrink to the weaker macro backdrop, excess inventory from last year, which I think just makes it kind of easier to kind of skim things off the top. But then finally, some changes in the regulatory environment and how punishments are given for crimes like this. And so all the retailers are saying it is a real issue. The increase in shrink we have seen has been very broad-based in terms of category, retailer, geography, and all the companies are saying they really need more support from local government agencies and local police to really try to attack this problem in a bigger way.
All right. Hey, Mari, thanks so much for joining us yet again. Mari Shore, Senior Equity Analyst at Columbia Threadneedle Investments. As we mentioned, ARM opened up just a few minutes ago. The IPO priced at $51 a share. Stock is trading right around $58 here, so a nice 14% pop here in the stock. Let's break it down with somebody who follows the IPO market for us. We do that with Bailey Lipschultz for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Bailey, it looks like a nice open so far.
Yeah, good, strong open. Opened up at the initial first trade 10% higher. We had been expecting this to be a closely watched deal, and that seems to be the case. I was talking to a couple sources this morning really about the excitement around it. They had about 100 people down at NASDAQ from ARM talking up excitement about it. Again, this is the biggest deal in terms of IPO money being raised since Rivian in late 2021. So the first potential sign that maybe the IPO window is starting to creak open, but it is a formerly public company. It's a profitable company, so not quite your typical VC-backed tech company like we would have seen back in 2020 or 21.
I want to bring in Kunjan Sobhani. He covers the hardware space for Bloomberg Intelligence. Kunjan, when you talk to institutional investors, how do they feel about this company, ARM, and the proposal or its intention, its strategy to really focus on the AI space?
I would call it being cautiously optimistic. I mean, there's not a lot of names you can, if you miss the NVIDIA boat, there's not a lot of names now you can get on to get the exposure to that semi-AI sort of market. So this is definitely one of them that's available to them. It is definitely a future story, not a current story. So that's where the cautiousness comes.
Bailey, in terms of we've been talking about when this IPO was going to actually start trading, and Paul and all the other old people thought, 9:30 or 10:30, maybe 11 at the latest. And I was like, no, guys, that's not how it works anymore. These things come later, like afternoon. Why is that?
Well, you look at the process. So they started opening this for quotation just after 10 o'clock. So 10:10, you start taking quotations. Then you start to build the book. So you're building in bids and getting a kind of sense of where this could open, where there's actually demand. Because obviously, as Paul knows better than anyone, when you're selling a public company, you want those institutions to buy up, but you do need hedge funds and people to flip this stock. So you're getting kind of a barometer and testing the waters of where it could open. We saw the initial indication actually was $63 before getting lowered. Yep. So trying to maybe talk up potential IPO pop, but you really just want to kind of get a less choppy open with some buyers and sellers meeting at a bid point.
So Kunjan, just how have the chip stocks been trading recently? Is it a haves and have-nots? If you have exposure to AI, okay. If not, then maybe you got some trouble?
Yeah, it's been very sector specific. I mean, the AI darlings have been just climbing up, but we see the flip side to the smartphone, which is going through a slump. And ironically, ARM today is heavily, the revenue is heavily based on smartphones, but the future are going to be AI. So it was able to get investors to underwrite it for the entire AI promise.
I mean, all chip makers are going to be AI chip makers in the future,
well,
right?
I don't know. I mean, ask Kunjan. I don't know.
I mean, all chip makers would want to be, not that they will be, but they would hope for.
Yeah, I just feel like AI is going to be like the internet. So, I mean, in a sense...
You better be there, I guess, is the call. If I'm the board, I'm saying to my CEO, what's your strategy to get us AI?
Yeah, right? You have to have one. Even if you're not, like Apple doesn't say anything about it, but surely they are thinking and talking about it all the time.
Hey, yeah. Bailey, finally for you, what else have we got in the IPO pipeline here? Because if I'm a banker, I'm saying, all right, let's go, let's go, let's go.
The tide could be turning. So we have 2 biotech IPOs set to price tomorrow and debut, or set to price today, debut tomorrow. Big focus, though, will be Instacart pricing on Monday evening, trading on Tuesday. Klaviyo following with the Tuesday pricing and Wednesday debut on the current calendar.
All right, folks, thanks so much for joining us. We had Kunjan Sobhani. He covers the tech for Bloomberg Intelligence based out in San Francisco. Busy day for him as he covers the semiconductors. And Bailey Lipschultz, he covers all the markets, including the IPO market for Bloomberg News. Right now, let's go to Charlie Pell and get a Bloomberg Business Flash.
We've got ARM Holdings right now up by 17.6%, 59.98 right now. Last quote on ARM Holdings. We will keep you updated on ARM throughout the trading day right here on Bloomberg. Also coming up on Bloomberg Radio and Television, we will be taking you to the floor of the New York Stock Exchange for an interview with ARM CEO Rene Haas. Again, the Dow, the S&P, NASDAQ, they're all moving higher. Stocks are advancing after strong economic reports revive speculation that the Fed will be able to engineer a soft landing, even if it keeps interest rates higher for longer. So here's where we stand. We've got the S&P up 34 right now, up 0.8%. The Dow up 304, up 0.9%. NASDAQ up 107, up 0.8%. 10-year yield 4.27%, with a 2-year that's yielding 4.99%. Spot gold up 0.2%, up $3 now to $19.11 the ounce. And West Texas Intermediate crude up 1.8%, $90.11 for WTI. Retail sales rose in August. Higher gasoline prices led the increase, limiting spending on other products. Marie Shore is senior equity analyst at Columbia Management, and she was a guest right here on Bloomberg Markets.
So we continue to see the consumer spending more on needs versus wants, with strength in categories like auto parts and grocery and health and wellness. We also see continued strength in e-commerce relative to stores.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. Delta Airlines is reducing its expectations for third quarter profit on higher fuel prices and larger than expected maintenance costs. Again, recapping, we do have the Dow, the S&P, NASDAQ very much in the green. First day out for ARM Holdings, up now by $9.80 to $60.71. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pella, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're doing a streaming thing as well on YouTube, so head over there and search Bloomberg Radio. Let's talk venture capital. Who doesn't like to talk venture capital? VCs.
Well, I think this is particularly cool because it's not your father's venture capital.
No?
No. Robbie Peters joins us right now in the studio. He's the co-founder of Sempervirens. Am I saying that right?
Sempervirens.
Sempervirens. Yep. Okay, what is that? Some kind of Latin thing?
Yeah, it gets back to our ecosystem. It's the Latin root word for sequoia tree, and sequoia trees are the highest growing trees, but they're actually the lowest roots, and they all come together as an ecosystem. So there was some craftiness behind that.
Yeah,
so we're learning Latin today for sure.
I like it. So let's talk about the kind of VC that you're running there. It's not you just find a company you like, invest money in, and let it go. Yeah. And it's not even, just mentoring. You're offering services and then going a step beyond and kind of bringing these companies that you're fostering customers as well. Explain VC 3.0.
Yeah. Well, the way I see it, VC 1.0 is a lot around, everyone knows about Sand Hill Road, getting money from, large venture capitalists. Still very important. There was an evolution probably about 8 to 10 years ago where a lot of them brought teams in to support from a talent perspective. How do I hire talent? How do I help you get the executives you want around the table? All super important, big parts of venture capital. Our role is actually, we have a team of 10. We've all been operators in the markets of the spaces that we're actually investing in. And our goal is, let's actually bring the innovators together with the end users, the buyers of the products that we're actually assessing, to have them actually co-build and kind of curate those together, so we know that they're actually something that they would want out there in the world. And we think if we're able to do that properly, we can do some cool stuff.
How cool is that?
Yeah.
So what kind of companies do you work with? What are some of the I guess the things you do for these companies? What do they need most?
So again, we were very specialized in what we do, and everything we do focuses on the employer-employee relationship, right? And so obviously we're in an interesting moment in time where we're, not our words, but in this fourth industrial revolution, right? Where how you live and how you work is changing every day. And like where you're sitting, or you're global, how you're doing these things, the type of work. And so we're basically supporting companies and how they support their employers, not only in kind of, the things they do around performance learning and development, but also how they pay for their health care, how they pay them. All these things run through the employer, and so we have a specialized focus.
Well, how about the easy one? Are they coming? Do they have an office?
Yeah.
I mean, do they have an office, or is everything virtual, or what's your view?
Well, I'll give you an interesting view, because I do spend in a lot of time working with high growth tech companies, not only ones we invest in, but ones that support these companies. Back in 2018, 2019, a typical 1,000-person technology company was probably 75 to 80% in San Francisco and New York, and then had maybe some small satellite offices, and they had one country they were in. Today, no joke, that same company is in 26 different states. They're in 15 different countries. They still maybe have a couple areas of critical mass, but it's changing drastically.
Wow. I got to say, some of the software that we use, and I won't call out the names of the individual companies, but for example, to navigate our 401k plans or to navigate our health insurance coverage, it's just not great in terms of the user experience. And if it were a website where I was trying to buy something, like to build a car, or where I was I needed to subscribe to an app for, physical fitness, right? It would be a much better UX. Okay. And is that because when I actually have to go out and pay for something, when they need to win me as a client, then they make it a great user experience. But when they know all we need to do is sell this to Bloomberg HR, and then everybody's going to have to use it, then they don't care.
Well, I think what you're bringing up is a great point, and we, believe that wholeheartedly. Like, what we all have in our pockets right now is the way we should be able to interact with our employees. And they do care, because a company, if you think about looking at what they spend, about 70 to 75% of the money they actually spend is on their employees. It's how they interact with them. It's how they recruit those employees. It's the healthcare they provide for them. It is that 401k. That's 75% of the company's actual spend, and they're delivering it to you in a non-consumer way. Now, we've seen that changing pretty drastically in all those spaces to build it into a much more consumer-friendly way that you can also get a lot of data from as your company.
All right, so what I want to know is that representative 1,000-person tech company that you talked about, is that representative of where most of your companies, or where new companies are going in general? Yeah. So am I looking at you in 5 to 10 years down the road, and that's how it is?
Well, I think so. I think look, I think in person is going to matter a lot. And actually, we've seen a lot of companies we support actually looking at ways to bring companies together for that in-person component. So it's going to be extremely important. I'm not a remote is everything, but I think you can be very structured on how you bring your time together and then you do it remote. And to give you an example, we work with a lot of early stage companies, but we also work with CHROs of, probably 15 of the Fortune 100.
What's a CHRO?
Chief Human Resources Officer. So the person that actually sits across and delivers that employee-employer experience, that person is getting much more of a seat at the executive table because they're realizing the spend they have on people. But also, it matters. Where are people sitting? How are we contracting with these people? Can we deliver that data back? All these things are going to happen. They're going to happen quickly, and they're expected from employees as well.
So let's step back. How is the VC community these days? If I go to Sand Hill Road, I've got a cool idea, I've got a business plan. Can I get some money?
I would not say it's the easiest time to be raising venture capital money right now. I think there's a lot of innovation happening. There's a lot of money that's out there, but I think if you look back at it over the last the last 18 months it has been really rough to raise money. I would say if you look back 18 months before it kind of hit a peak, followed a lot of the markets obviously. What was happening was you'd have 25 companies going after a certain category that could only support 2 or 3 winners, and there was a lot of money going into those companies. Everyone's taken a hold back and said, let's see this play out a little bit. Let's find those 2 to 3 winners. Some of those are starting to emerge. I think you're going to see some really interesting acquisitions and things that will be happening, and then that's going to be kind of clearing the deck, and it's a lot harder to be a founder now. So again, not to go too long on it, but our model on this is how do we really understand that end customer that can actually sell, even in a time right now where it's tough to be selling.
What if I flip that on its head, though, Robbie? I mean, let's say Paul has a killer idea. He's innovating like hell, and he's got all the copyrights he needs or whatever.
Sure.
Aren't there like 100 VCs that are dying to get in and give him cash?
Absolutely. High quality companies, if it's the right people with the right technology, there is definitely a market. There's deals getting done. That is then when there's a lot of money that's trying to go after that deal. So you want to figure out a way to differentiate yourself. We look at it from an investment firm is, hey, let us not only give you the money, give you some advice, but also introduce you to all the people that are going to help you grow from there.
All right, right now, speaking of innovation, we have the CEO of ARM on Bloomberg Television. Let's listen to that now.
From high school friends I have not talked to in a long time who are saying, you never told me. I think as they're watching this on TV. But most of all, I'm so thrilled for the employees of ARM. 33-year-old company, great heritage. But watching all the employees in Cambridge celebrate simultaneously, that was magical.
And they might continue to celebrate as we see, 17-18% increase. How has that journey of going out to investors, the roadshow, the story that you've been able seemingly to successfully sell, the fact that you're trading well on this day, what was the vision they wanted to hear? Revenue growth, I hear of 11%, up to 25% in the next couple of years. What drives you?
I think it was a great process. Investors really wanted to understand the opportunity we had in front of us. And of course, AI, which you can't really talk about our industry without talking about AI. And I think helping them understand that you can't really run AI without ARM, without a CPU. And just pointing out to them that it's everywhere in every device that people touch was a big part of the process for us.
Because everyone has made the equivalent of your smartphones, completely absorbed more than 90% of phones is where your CPUs are. But the design, the fact that you now want to be integral to data centers and the like, how certain are you on the revenue vision, on the profitability vision, even though we see concerns about macro environment still and whether or not we're in an AI hype cycle?
Yeah, so AI is everywhere. And if it's your edge device like the Assistant or the Alexa or your autonomous vehicle, that's all AI. And now we're seeing it in the cloud and the data center with all the growth of NVIDIA. NVIDIA announcing one of their newest products, Grace Hopper, that is based on ARM. So ARM is everywhere relative to AI. We also have a very unique business model that gives us the ability to have a very, very good vision in the future in terms of when people use our products. So relative to our confidence in the outlook, we have a very, very high confidence that the growth rate that we have talked about will be sustained.
How worried were investors about China and your exposure?
I think there were a lot of questions, as you can imagine, about China in general, given all the geopolitics. Our business there looks a lot like the rest of the world. We have great growth in the data center. We have great growth in automotive. China's huge on electric vehicles, so it's been terrific there for us. I have the same kind of headaches that every other tech CEO has regarding how to navigate through this, but no different.
Do you think there will be more pressure now that you're public again? Ultimately, I mean, you came to ARM in 2013. You were listed at that point, but it's not been since 2016 that you have been. How does the game change as a leader of that business now?
I think there's some things that we were able to do as a private company that will just be different, right? Yeah. Quarterly earnings, making sure that we hit all our commitments. But ARM is not a business you measure from quarter to quarter. Mm-hmm. You measure us over years and decades. And the long-term vision is something that I am very, very passionate about and will continue to drive the company the same way, private or public.
You have a lot of key vested interests, whether they be your clients, Apple, TSMC, Intel taking big stakes in the company today. How important are those voices vis-a-vis Massas, the head of SoftBank, who I'm sure you're on the phone to daily?
Yeah, so one of the challenges of our industry, in particular with ARM, is that the fact that we're everywhere, none of this works unless we play nice with others. So we have to have a lot of engagement with strategic partners and making sure that we're managing that balance, including Masa, our chief shareholder.
Do you think he lets more of ARM become public? Is that something you'd like to see?
Masa and I talk quite frequently, but it's really not about the day-to-day. It's about the long-term vision, the passion that he and I have about the future, and really about what this company can be long-term. So I don't expect that to change, being a public company.
Do you think you'd go public in the UK? I'm sure it's been bittersweet for the London Stock Exchange today.
Yeah, so today, obviously, we're in New York, but we're incredibly proud of our UK heritage, and we are open to considering that down the road.
Okay. Any sort of time frame for that?
None that we can talk about today. I'm trying to get through today a little bit.
Well, before you get through today in that respect, investors do love all things regarding artificial intelligence, but how have you managed to land that your story is different? People have been so exuberant about NVIDIA, where you used to work, but they're really exuberant about GPUs. How have you said that you are able to claim a larger royalty share of how AI continues to be served?
Yeah, so one of the benefits of the roadshow was spending a lot of time with investors talking about AI and where we fit. And I think one of the misconceptions is that a GPU can run without a CPU, which is just not the case. The CPU is central to every electronics device, and there are devices that ship with a CPU and a GPU. So once investors kind of got that, then explaining where the puck was going relative to, gosh, NVIDIA's next generation most advanced product, Grace Hopper, is using ARM CPUs instead of the competition, the light bulb went on. That, oh my gosh, you need the CPU, and at the same time, NVIDIA has made a big bet on ARM in their most sophisticated product. And once that message kind of sunk through, people, the light bulb went on as, oh my gosh, I get it.
There has been this moment, though, at which we're trying to understand how the landscape works with global demand and that translating into revenue. When you think of Oracle's numbers that came in, and look, they delivered 30% increase when it comes to their cloud provision and their AI bet, but it doesn't always immediately turn into revenue in the here and the now. How convinced are you that it is going to be in the bottom line evident in the next coming quarters?
As far as AI? Oh, I think it's unquestionable that AI, which has already been here, right, for a number of years, the ChatGPT moment taught us that, oh my gosh, the capability of what this can do going forward has gone up a level. And I think we've seen that over and over in our industry. There tends to be lightning bolt moments that greatly accelerate the adoption of technology. And I think with AI, as you move towards AGI, computers that can think, I think we now have seen an accelerant for that. Ultimately, down the road, how people make money off that, it'll get figured out. But AI is here to stay. That's unquestionable.
And it seems as though you're integral to SoftBank's vision of AI and Masa's vision of AI. How can you enunciate a little bit? You say you're talking to him daily. What his vision of ARM within the ecosystem going forward really is?
He and I share a very same view that ARM is one of the most important technology companies in our industry, foundational, if you will. And I would like to see us over the next 5 to 10 years really be recognized that way. And he and I are very aligned on that. As you can imagine, when you think about 5 to 10 years out, there's a lot of things to talk about in terms of the art of the possible, but that's really where he's focused on when his conversations with me.
Long-term thinking, but then near-term action. We understand he was pretty integral to calling the shots on price points for today's listing. How was that as just an IPO experience? Did he end up being like, no, we need to leave a little bit of money on the table, this needs to be a successful trade?
About all I can say is, this is my first roadshow, so everything was a learning experience. We wanted to be at the high end of the range that we set, 47 to 51, and that's where it ended up. So we're happy. We're very thrilled with today.
You said that school friends are getting in touch. Why have you been hiding this from them? How do you feel differently now as a CEO of a publicly traded company? Do you feel differently today?
I feel a little bit differently in looking ahead at this number than what the share price is. That wasn't something we looked at before. But, again, I told this to employees, while the IPO is amazing, and I could not be more proud of it, I'm far more excited about the next 5 to 10 years. And that's where my head is focused. Obviously, we need to do things as a public company CEO, but I don't feel too much different.
And sometimes these are marketing exercises. ARM is B2B. But do you think you've become more relevant B2C now? You're saying how people had no idea. Well, that's because largely people don't realize that every day they're interacting with your designs, with your blueprints.
The people who need to know what we do know, obviously, just given the fact that all the global partners that we work with. Going forward, how to market ourselves as a public company, that's one of the things as a public company CEO I'll spend some time thinking about. But right now, we're just kind of focused on today and what that means.
And meanwhile, within this exuberance of today, yesterday we saw basically every key chief executive of an AI company, AI-related company, indoors in a closed hearing with Senate Majority Leader Chuck Schumer. Can you tell us about regulation? How do you see the landscape evolving to ensure that you can harness that AI moment?
I think it is one of those areas that is an unknown moment. And I remember talking to an executive about the analogy or metaphor we used was when cars were invented. You didn't have driver's licenses. You didn't have lanes. You didn't have rules of the road. There was a lot of things that people had to figure out in terms of taking a device that was going to be very, very productive, but could be very dangerous in terms of automobile accidents. AI is a little bit of the same in the sense that we're now in a new paradigm where some rules and regulations need to be figured out. And that's why I think you're seeing all this activity around that area.
Is the US leading the charge on regulation? Is Europe? Is the UK? Where's getting it right from your perspective?
I think all the governments are trying to figure it out. I know the EU has spent a lot of energy on this, as had the UK. So in terms of who's getting it right, I think it's still early days, and everyone's really just trying to learn how technology and this new powerful algorithm will work together.
Keep teaching us. Great to have some time with you.
Thank you so much.
Of course, the CEO of ARM, the day of their listing. I'm looking at the price point up 17%. So a heady pop for the day's trading, Shonali.
Absolutely. All right, that was Caroline Hyde, Bloomberg Television's own, speaking with Renee Haas, the CEO of ARM Holdings. ARM went public today at $51 a share, the high end of the range. Now trading up nicely, up 17% to just about $59.60. So a heck of a good day. I think everybody's happy here. Investors are happy. They're getting their pop. The company's happy. They got the high end of the range, and the bankers are happy because everybody else is happy, and that's kind of how it works. Let's check in with Kujan Sobhani. He is our tech analyst for Bloomberg Intelligence. He's based out in San Francisco. Kujan, a nice open here for ARM Holdings. Everybody's happy, it seems like. As you sit back and look at your chip coverage, where does ARM kind of fit from your perspective?
I mean, I think when you got to break it down by end market. So they have the entire smartphone end market. There's purely no competition. They have like 99% share. And the key end market that we're looking at, what's driving the valuation, is the data center and automotive. Within data center, it's been typically dominated by Intel and AMD with the x86 architecture. ARM is kind of the new kid on the block over there. They've had some major wins recently, but their market share is still mid-single digits. So there's a lot of room to grow there. And when we again look at the automotive, what's happening in the automotive is these new sort of SoC chip makers are coming in as we go to more electric vehicles and autonomous vehicles. And ARM is designed into most of these customers.
And so from your perspective, is this something based on your knowledge of the company that they will be able to make this pivot into AI?
I think the pivot has already started, and there seems to be a good sort of cautiously optimistic view that they will be able to successfully execute on it, and they are well positioned on it. Look, it's not a new company. They've been in business for many years. They're already profitable. I think if they keep executing without any big road bumps, they will get there.
All of the hardware, the chips, all that kind of good stuff for Bloomberg Intelligence.
Thank you.
And he is located right out there in San Francisco, Silicon Valley, so he is right on top of it. ARM, again, successful IPO. Stock is trading up just close to $60 a share after a $51 IPO price. Looking at these markets, good day in the market. It's a good day to come public. S&P 500 up 0.8%. NASDAQ up just about the same here. So a good day in the equity markets. In the yield space, yield's a little bit higher here. We got the 10-year Treasury up about 3 or 4 basis points. 4.28% on your 10-year, 2-year right at 5%. How about that? I can get 5% for 2-year paper. Not too bad. Speaking of the credit markets, let's check in with our next guest. Roberta Goss joins us. She's a senior managing director at Pretium Partners. She joins us on our Bloomberg Interactive Broker studio. We appreciate that. Roberta, talk to us about Pretium Partners. Where in the space do you guys play, and what do you focus on?
Good morning. So Pretium is a $52 billion alternative asset management firm. We're really focused in 3 areas. The first is single-family rental. We are the largest homeowner in the country.
What? Really?
Yes. We own over 100,000
We're going to get to
homes.
that.
Okay. The second business we're in is residential mortgages, also another dislocated, attractive market for us right now. And then the third that I run is corporate credit, CLOs, and structured credit.
All right, so corporate credit, structured credit, that's a big business.
Yes.
Give us a typical transaction for you guys. How do you participate?
So I find it really interesting this morning because on the back of your recent guest, this year, today, we're pricing the largest IPO of the year. Next year, or next week, we're going to price the largest LBO of the year, WorldPay. This is a spin out from Fidelity Information Services. It is going to be $9 billion in total debt, and half of that is going to come to the leveraged loan market, known as broadly syndicated. So we'll be participating in, or deciding if we're going to participate in this loan next week.
How is that, Mark? How is the leveraged loan market in general? We've got interest rates. The Fed's been raising rates like crazy. How's that impact your market?
So off of a very volatile credit market last year.
Bad credit market.
Bad credit market last year.
The worst.
We've had not quite as strong as the S&P, which is up 17, 18%, but the leveraged loan market now is almost up 10%.
Okay.
Part of that is price appreciation, but the bulk of that is yield. So the 3-month, so the rise in rates we've seen over the last year, you're starting with a 3-month LIBOR at 5.4%, and then total yields right now close to 10 still.
Okay. So for every leveraged loan person we have in here, I bet you we have 2 or 3 private credit people in here. Talk about a growth business. Boy, if I was starting on the street again, I would consider that business. How does that business compete with kind of the leveraged loan business coming off of Wall Street?
So in the last several years, there's been an explosion in private credit. And it really started as a middle market business. So bilateral transactions with companies sub 100 million in EBITDA. The broadly syndicated and the private credit markets have definitely converged.
But you would consider yourself what?
Broadly syndicated.
Broadly syndicated.
Yeah. So, our typical loan size would be at least $1 billion in size. But we're starting to see private credit really creep into the larger arena. I think we've seen $5 billion transactions clubbed up. But the two markets are still very distinct, but creeping into
But
each
as an
other.
issuer, I like the fact there's a private credit business out there because then I can compete against the syndicated loan business. Is my cost of borrowing, do you think, for the issuers generally coming down because of this competition?
Well, I think it definitely had been lower. I think it's starting to creep up.
Okay.
I think the real question is, are you getting as diversified portfolio of credits in your private credit portfolios as you would in a broadly syndicated?
All right, so this deal next week, what is it again, the issuer?
WorldPay.
How big will this deal be, do you expect?
The total debt outstanding that they're coming to market with will be $9 billion. Half of that will be in the broadly syndicated market.
Okay.
And then half in the high-yield bond market.
Okay, so for your syndicated market, how is that market? How deep is that? How do you think this thing's going to price?
So we've already heard indications that it's well oversubscribed.
Okay.
This is a double B issuer. The initial talk was SOFR plus 350 to 375.
I'm a LIBOR guy.
I know.
Is everybody having a hard time making that transition?
I think we've made the transition.
Okay.
We're, still a few slips, but I'm transformed to SOFR. So SOFR right now, three month, as I said, 540 with a, let's say, 350 coupon on top of that. You're in the high single digits.
Okay.
For a double B.
Okay. So do you think there's going to be more issuance coming in that market?
Yes. So capital markets have definitively reopened since the crisis of March with the banks. We've seen, I think there are 20 deals in the market right now. This is going to be a test of new money and a new credit coming to market. So everything we've seen over the last, really the predominance of issuance for the last several months has been existing transactions extending maturities.
All right, so we'll watch this one. We'll check in with you next week and see how that deal goes, because the leveraged lending market is one of my faves. I was credit trained at Chase Manhattan Bank, so I can run spreadsheets with anybody on the credit side. Roberta Goss, thank you so much for joining us. Roberta Goss is the Senior Managing Director at Pretium Partners, joining us live here in our Bloomberg Interactive Broker Studio. ARM Holdings holding the gains here. Again, priced at $51 per share, and it's now trading at $59.80. So a nice move to the upside. So a good trade there. We had pretty much every investment bank on Wall Street underwriting this thing, so it should do well. So we'll keep an eye on that through the rest of the day. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Apple recently introduced it, and now wireless carriers are ready to offer up deals on the new iPhone. More from Bloomberg's Gina Cervetti.
The biggest phone debut of the year comes with the smallest price tag as the cell phone carriers unleash major deals tied to Apple's new iPhone 15s. AT&T, T-Mobile, and Verizon are offering the models with $1,000 discounts or at no cost. The promotions will likely test just how much cost the companies are willing to shoulder as they hunt for subscriber growth, which has slowed.
All right, shares of AT&T right now up about 2.5%. T-Mobile shares up about 1.5%. Another airline is trimming its outlook due to higher fuel costs. Delta Airlines says it also reduced its expectations for third quarter profit because of larger than expected maintenance costs. The carrier did reaffirm its full-year guidance on earnings. And Delta's also changing up its Sky Miles loyalty program. Bloomberg's Steve Potisk has that story.
Starting January 1st, it will use only cash spent, not miles flown, in calculating member rewards. The change follows similar moves made by other carriers designed to benefit the increasing number of people using co-branded credit cards for everything from flying to buying groceries.
And Delta shares right now down about 0.5%. And JetBlue says delays in aircraft deliveries and planes waiting for engines or repairs are hurting its growth. The airline tells Bloomberg it will get just 19 new Airbus aircraft this year instead of the 30 that it originally expected. And problems with Pratt & Whitney parts will take some planes out of commission by the middle of this month. Shares of JetBlue right now up about 2%. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're doing the YouTube thing, streaming live on YouTube. So you can go over to youtube.com and search Bloomberg Radio, Bloomberg Global News, whatever you need to do. That'll get you there. Welcome, our good friend Bailey Lipschultz. He's been busy today because he covers the equity markets, Bailey Lipschultz does. And that includes the IPO market, the SPAC market, anything that touches the equity markets, we go to Bailey Lipschultz. And Bailey, I'm telling you, I'm looking at this ARM thing here. Price at $51 a share. Stock's trading at $60. It's up 18%. That's pretty darn good.
Yeah, really strong debut. And what we reported was a roughly 12 times oversubscribed offering. When you're looking at the valuation, Paul, we talked about this in the weeks leading up to this. There were a lot of people questioning SoftBank's deal to buy back a quarter of the company from itself at a $64 billion valuation. Right now it's at $61.5 billion. So looking at that pipe, not really maybe that bad of a deal, but it does seem like a lot of excitement, and we do have this coming ahead of a pair of pretty closely watched and highly anticipated deals next week.
Yeah, that's kind of where I wanted to go here. I mean, this really sets the tone. If I'm the underwriters for some of those other deals, Instacart and the other ones that you've been talking about, I got to feel pretty good. They came to market with a good tape today. The S&P's up 0.9%, but this thing's trading really well. It's got to set the tone for the market, I would think.
Yeah, and I was talking to someone on the deal earlier, and he was basically saying there was a little bit of concern yesterday in the ARM boardroom about the inflation data. And when they saw that come out, they kind of breathed a sigh of relief and kind of put the pedal to the metal. And that's why you're seeing a really strong reception from investors and going ahead, as you mentioned, into Instacart next week. Klaviyo, 2 VC-backed companies shifting towards profitability. So that will really give us a sense of where the IPO market could be going later this year and into next year. And obviously that also does potentially set the stage likely for either later this month, early next month for Birkenstock to go public. So
that's right.
Seeing a bit of deals volume pick up finally.
Yeah, so we were talking to Bloomberg Intelligence analyst Kunjan Sobhani out in San Francisco, and he covers the semiconductor chip makers, and he kind of points out that they've got some work to do here at ARM because they're really successful in providing chip designs for the phone business, the auto business, all good businesses, but they're not AI growth stories, and they've begun to pivot to AI in terms of offering their chips design, but they've got a long way to go against some of the bigger competitors, but the market today is saying, all right, we kind of have confidence in this strategy.
Yeah, and when you look at the strategic investors they brought on, the fact that NVIDIA, granted, NVIDIA was going to buy them a few years ago, NVIDIA being one of those investors, really did seem to be kind of a stamp of approval that this is where we could be going, because you're looking at a company like NVIDIA, when you essentially have more than tripled this year and added hundreds of billions of dollars in market value, riding that wave of AI enthusiasm is good now, but as you mentioned, the question will be, where is this company at 3 months from now, 6 months from now, a year from now on delivering on those promises to go into AI and data centers?
Yeah, as you mentioned earlier, SoftBank retains 90% of ARM after the IPO. So it would be interesting to see kind of how they think about unwinding that position or over what time period.
Well, that's actually the thing is they're planning, really, the messaging has been to keep that and use it to lever up, to take out some loans, to maybe make some other investments. And that, I think, was one of the things when you're talking to the bankers and investors on this deal, that scarcity value could be driving the investments. Because if you didn't get in on this IPO and you didn't get your allocation and they're not selling, you have to buy it in the aftermarket.
Okay, that'll be interesting to see because that'll be out there. And that, that's called an overhang, quite frankly, if there's that much stock out there, which you don't like to see. So the way you counter that is, I guess, by that rhetoric saying, we're holders here.
Yeah, and you're holding in that, at least in this tape right now, with 70 million shares trading, is drawing in quite a bit of excitement. So,
all right, other news, big news for Tom Keene, certainly. Boston Red Sox fired Chief Baseball Officer Chaim Bloom after almost 4 seasons. I mean, if you don't win in Boston, like New York, you're out, I guess.
Yeah, well, that's the thing. I mean, both the Yankees and Red Sox who play today,
doubleheader,
tied in last in the AL East at 70 at a game over 500. I think the main takeaway will be with Chaim is he's forever going to be remembered as the guy who traded away Mookie Betts.
Yep, absolutely. That's a good point. So lots going on in the markets and in Major League Baseball. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now,
from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The countdown clocks are ticking to a possible auto strike and government shutdown. Welcome to the fastest show in politics as the Biden administration braces for turbulence from Washington and Detroit. And we'll have the latest on both from Bloomberg White House reporter Jordan Fabian, who's with us in studio today, just as the president calls out Republicans for what he's calling MAGA-nomics. Insights today from Congresswoman Chrissy Houlihan, Democrat from Pennsylvania, on the political clouds hanging over the Capitol. Governor Ron DeSantis later is wading into the shutdown fight, and Vivek Ramaswamy calls for firing 75% of the federal workforce. Analysis on all these stories coming up from our signature panel. Rick Davis and Jeannie Shanzano are both with us, Bloomberg Politics contributors. So let's get to it with a look at Wall Street midday trading now from Charlie Pellet. Hey, Charlie.
Matthew, we are higher across the board. Lots going on Wall Street. Lots of moving parts. And yes, we've got you covered. S&P back above 4,500. Stocks are rallying. ARM is surging. ARM Holdings higher now in its trading debut. We've got ARM stock up by 17.4% after raising $4.87 billion in the year's biggest initial public offering. And Bloomberg Radio caught up moments ago with ARM CEO Rene Haas on the floor of the New York Stock Exchange.
AI is everywhere, and if it's your edge device like the Assistant or the Alexa or your autonomous vehicle, that's all AI. And now we're seeing it in the cloud and the data center with all the growth of NVIDIA. NVIDIA announcing one of their newest products, Grace Hopper, that is based on ARM. So ARM is everywhere relative to AI.
And you can hear more of the conversation on the Bloomberg Technology Podcast. You can download it wherever you get your podcast. Stocks higher across the board. S&P right now up 39, up by 0.9%. We have got the Dow up 342, up by 1%. ARM certainly helping tech sentiment today. NASDAQ up by 0.9% of 123 points. And the NASDAQ 100 index up now by 1%. 10-year yield 4.28% with a 2-year now yielding 4.99%. Spot gold up $2.50 the ounce to $19.10, up 0.1%. And West Texas Intermediate crude up 2% right now, 90.28. That's key. We do have West Texas Intermediate back above $90 a barrel. After the close of trading today, Adobe Systems reports Adobe now down by just about 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you, and welcome to the Thursday edition of Bloomberg Sound On. Little Friday with a lot in the news, and it's going to sound familiar to what we talked about yesterday, but we're getting ever closer here. So we'll pick our crises chronologically as we spend some time in a moment with Jordan Fabian. Thanks for joining us on the radio, on the satellite, on the podcast, of course, if you're downloading this, and now on YouTube, where we always invite you to join us here with the cameras in the studio. It's actually, we're back in the old radio studio with the cameras today. It's kind of cool. Come on in. Go to YouTube, search Bloomberg Global News, and we'll meet you there. The headline on the terminal, Biden has few options to avert strike against big three car makers. That's the writing of Jordan Fabian, as we just heard from Sean Fain, the head of the UAW. It's not sounding good.
All three companies continue to reject all of our proposals for retirement security. For the first time in our history, we may strike all three of the big three at once.
All three of the big three at once. And the deadline is coming up at 11:59 p.m. here. We're just hours away at this point. That's why we wanted to spend some time with Jordan. You're writing, great to see you, by the way, about the options this president may have, and it appears there aren't many. Is there any 11th hour move he can make?
You know, Joe, this isn't like the rail strike from last year where the president had a legal option to intervene and keep the workers at work and impose a contract to make sure that it happens. The president doesn't have that option here. So all he can do is really beg the sides to stay at the table and reach an agreement. And so we've heard that he's been in touch with Sean Fain. He's been in touch with auto executives over the past few weeks. He's deputized Gene Sperling, who's one of his chief advisors, to stay on top of the situation. But all he can do is hope. He doesn't have some kind of magic wand he can wave and prevent a strike from happening.
So what role is Gene Sperling actually playing? Is he standing by if needed? Is he engaging or acting as kind of an informal mediator? Because they've not asked for anyone to step in here, right?
They haven't asked for anyone, and my understanding is that Gene Sperling has not stepped in to play that mediator role. What he has been doing is liaising with all the sides. This is a very complicated negotiation that involves a lot of facets, a lot of cabinet departments, communicating internally, and just encouraging the sides to stay at the table, trying to iron out miscommunications. And also when there are questions that come up, for example, about President Biden's push for clean energy, which is at the center of this labor dispute, he can provide some information to the sides to say, hey, this is actually what the case is, not that.
But they're basically spectators.
They're basically spectators. They are not at the negotiating table. They are not sort of involved in negotiating what the terms of this contract will be.
The White House get a heads up if they're going to pull the trigger. I guess Sean Fain's going to speak at 10 o'clock this evening. They'll find out with the rest of us, or are they at least going to get an advance warning?
Hard to say. There's been, as I reported, some tension between UAW and the White House, and the communication hasn't always been great, but you can bet that the White House is trying to stay on top of it as much as they can, both through Gene and through the acting Labor Secretary.
They're reporting, they're working their sources like you are to find out what the heck is going on. If that would, look, if we do see something on that scale, all three of the big three, that's got to trigger a presidential address, right?
Yeah, you would think so. And I want to be clear that what we're expecting, if they do strike, is targeted strikes at first. So certain plants being struck, not whole companies all at once. So it seems like they're trying to spread the pain and possibly target plants that are producing vehicles that are the profit centers for these companies. So, for example, like Ford, they might strike at a plant that makes their trucks and large SUVs because that makes the most money, and that would inflict the most pain on Ford, and therefore the union would hope to gain more leverage over Ford. But look, if it goes on, more and more factories might shut down, and I think regardless, the president's going to have to say something if there's a work stoppage.
Man. This puts him in a tough spot. We want to be the most labor-friendly president in history, as he says. But you've got to talk to the American people now about potentially the economic impact that this could have, and it could coincide with a government shutdown. We talked to Anna Wong yesterday. It says these two coincide, and it's the difference between a recession and not a recession. This is like nightmare time, potentially, for this White House.
That's right. And look, this is... There's two big problems here for Joe Biden. He's open to attack because the clean energy push is a part. I don't want to say it's the part, but a part of this negotiation. So you've heard President Trump, the Republican frontrunner, say, "Look, this is blame Joe Biden because they're arguing because of the push to electric vehicles." It's not that simple, and there's still a lot of resentment against Trump too in that union. So, but it's still a political problem for Joe Biden, and it's happening in a state like Michigan, which is a key state that Joe Biden needs to win if he hopes to secure a second term.
Oh, man, not to mention, you think just of union-friendly states like Pennsylvania. We're going to talk to Chrissy Houlihan in a moment. This could have ripple effects even beyond the auto sector when it comes to perceptions of this president.
Absolutely. There's been, some people have called it the summer of strikes. There's been a lot of union action. I've heard from sources that say they saw how hard the UAW saw how hard of a bargain the Teamsters drove with UPS, and that kind of emboldened them to take more action. So, of course, this could be a solidarity moment for the union movement. And not to mention, there's practical effects, too. I mean, a strike would not only impact the auto workers themselves, but suppliers, restaurants and bars that might be serving auto workers that won't see the foot traffic. Right. So we're talking about widespread effects.
Incredible stuff here. These are wild times that we're living in. Jordan, thank you for helping us make sense of it and find Jordan's story on the terminal. If you want to prepare yourself for what may be about to happen here, the story is right there about Biden's few options to avert a strike against the big three. Great to see you, Jordan. Don't be a stranger.
Thanks, Joe.
Always. Bloomberg White House reporter Jordan Fabian. I'm Joe Matthew in Washington. As we add the voice now of Congresswoman Chrissy Houlihan. We've been looking forward to the conversation. It's been a couple of weeks now that everybody's back in town. It's really interesting to gauge sentiment on a lot of these issues. And of course, nothing is bigger than this potential shutdown at the moment. The news has not been getting easier. From Pennsylvania's 6th District, it's wonderful to have you back, Congresswoman. Thank you for the time. I don't know what's going on in the House of Representatives, and maybe you don't either. There's talk about a motion to vacate, a government shutdown. Apparently, the military funding bill has bumped into a wall because of objections from some hardline Republicans, in this case, Eyes on the Freedom Caucus. Are you bracing for a shutdown, or is this what it feels like, last-minute negotiations, if we can call it that?
I'm not certain what the future holds either. I will say that I was sworn in about 5 years ago now into the longest shutdown, as you might recall, in 2019, I think it was. So I've seen this before, and it's not pretty, and it's very, very harmful to people when it happens. So, of course, the vast majority of us would like to make sure that we avert that and, frankly, avert a continuing resolution, which is basically kicking the can down the road as well. But if I had to guess, we will end up with a continuing resolution, and of some length of time. I've heard anywhere from 1 week to several months, and that is preferred over a shutdown, but certainly not an optimal choice. I very much hope that we can, calmer heads will prevail, and I hope that we can find our way to keeping the government open and funded.
Yeah, you know, the Speaker talked about his frustration with a few members earlier today. Do the Matt Gaetzes of the House take up too much oxygen to really understand what the Republican conference, or your conference for that matter, believes here? Are we listening to the right people, or is it just the fringe voices that are getting through?
You know, with all respect to the Speaker, I would push back and say there are 435 of us here. And as I mentioned, the majority of us would like very much to properly fund the government. And I think he needs to kind of look beyond his own party and beyond those people on the far, far right, and understand that we're all here to serve our people and our community. And so I hope that he's thinking hard about the next steps. And I know it's at his peril, at his political peril, but there's just too many lives that are at stake in terms of making sure people are able to go home with paychecks for us to continue to screw around with our parties. We really need to find each other in the middle.
Is this talk of a motion to vacate real? Do you think you could be a House without a Speaker in a couple of weeks?
I'm confident the talk of motion to vacate is real, and that's the position that the Speaker put himself into when he was voted in. It only takes one, frankly, and not a whole lot of votes to actually vacate the chair. And I don't know, we would certainly be, as if we're not already in unprecedented territory and unprecedented times, we would be in really unprecedented times at that point in time. So I believe the Matt Gaetzes of the world when they speak.
I guess you believe the Tommy Tubervilles of the world as well. We talked to you about this on Bloomberg TV, and I know it was something you were very passionate about as someone who's served your country. He has not, although I know that he's told us repeatedly he was a military brat growing up. But he's not pulling back on this blockade of military promotions, flag officers, general officers, in objection to the Pentagon's abortion travel policy here. We actually spoke with him, Congresswoman, 2 days ago, and he pushed back on the idea that this was impacting military readiness. A brief remark from him here, and we'll have you reply. Here's what he said.
They have no clue of what this policy is. They just wanted to change it to let the American people know, hey, we can do what we want to, and I'm not going to allow them to do it. Now, if they continue to do it, we're going to have the same people in place as admirals and generals. Again, there's no readiness problem. We got people in place that are doing their jobs.
I know that you're concerned about a recruitment deterrent, about military families in temporary housing because of this. But speak to that issue of readiness. Is he right? You keep the same people. They're doing great now. You keep them there. It's not going to be an interruption in the chain of command. What do you think?
That's positively asinine. I was in Hawaii and Indo-PACOM recently over the August work period, and there are 4-star generals and admirals who are retiring with no one named as their successor. Nobody approved as their successor. This is an absolute readiness issue, and of course, it's a deterrent for people who want to, work in a functioning organization, and they're not necessarily seeing the military as functioning. And it's also a deterrent when you're basically going against the majority of the will of the people. Most people support women's right to be in charge of their own body. Most people believe in reproductive freedom. And so when you're looking at an all-volunteer military, it can't help but affect recruiting and readiness. But it's insane for him to say that several hundred positions that now remain unconfirmed are not affecting our readiness right now.
So what's the off-ramp here? He's showing no signs of backing down. We talked to Congressman Michael McCall, the chair of the House Foreign Affairs Committee last evening. He's one of the few higher-ranking Republicans who've called him out. He said this is paralyzing our military. Is that what it's going to take, more Republicans to pressure him to stand down?
Yeah, I'm under no illusions that what I'm saying about Senator Tuberville matters at one whit to him. What it will take is certainly more Republicans in elected office, and frankly more constituents of his, as well as people around the country, to really lay to bear what's happening here. Perhaps more pressure from the military itself if there hasn't already been enough. So it is kind of worrisome that this one person can hold several hundred nominations at bay right now, and that's something that is really concerning for many of us, I think.
What does it mean to have a military without a chairman of the Joint Chiefs? Because it looks like that's about to happen.
You have to be just a person who's watched a movie, to know that you can't have a military without its brass, or somebody who just has worked at a company to know that if you're rudderless without leadership, it's going to matter. We just talked about vacating the chair in the House of Representatives. That will impact the ability of us to get our jobs done, regardless of what side of the aisle you are on. It's common sense that we can't hold this up like this.
We're spending some time with Congresswoman Chrissy Houlihan, a Democrat from Pennsylvania, and you might not realize this, but you've actually had your eyes on her district for some time here in the story involving this escaped fugitive, who, of course, generated headlines around the country, captured at least in the Congresswoman's district. And it brings us, Congresswoman, to your Invest to Protect Act, and I'd like to ask you about that. As we remember a couple of years ago, the theme of defunding the police, you're a Democrat who wants to fund the police. Where would the money go?
Sure, and importantly, this is not my Invest to Protect Act, but it is supported by dozens and dozens of Republicans and Democrats alike, and I am one of them. And the Invest to Protect Act basically invests in places that we have traditionally not been as able or interested in investing in police forces. The vast majority of us, myself included, come from districts where most of our police forces are very, very small, sometimes fewer than a dozen people. And the Invest to Protect Act allows more competitive bidding processes and funding for people in those smaller communities and those smaller police forces to be able to afford things that they don't normally compete for, and be able to recruit in a different way as well, so that they can compete with the Philadelphias. My community is very rural in some areas and very small police forces. And, if you've been watching the news, you've been watching my community. And so this Invest to Protect Act would do exactly what it's talking about, which is help our policemen protect us and be able to be as responsive as possible in situations such as we've just been watching.
Do you worry about this leading to over-policing or military hardware getting into police departments? Sometimes these get to be very gray lines.
No, I understand the argument, and this bill is supported bipartisanly by a lot of people who want to invest, of course, in our police force, but also want to protect our citizenry. And I think this particular piece of legislation does a really good job of making sure that we're educating police, creating databases for police, making sure that we have a good relationship from citizen to police. And I think that there can be both. You can have a protected citizenry and also a strengthened police force as well.
Can I just ask before I let you go, Congresswoman, are you glad to be back in Washington? Have you been dreading it all August?
I feel as though that this is a really important time to be here in Washington or in my community. I'm fortunate that my community is just up the road a few hours, so I can kind of get back and forth pretty easily. I'm not going to lie, I wish Congress in Washington were much more highly functional or functional at all in some cases. But I do think it's really important that I represent our community and that I'm physically here to do that.
Well, I appreciate that, and I hope you'll stay in touch with us. The Congresswoman from Pennsylvania, Chrissy Houlihan, we thank you, as always, for talking with us today on Bloomberg. Joining us from Capitol Hill, if you were with us on the YouTube feed, you would have seen that. We invite you, search Bloomberg Global News on YouTube and join the party here. Of course, we always welcome you on the radio, on the satellite, and on the podcast as well, here on Sound On Nation. I'm Joe Matthew in Washington. We assemble our panel. Jeannie Shanzano and Rick Davis are with us, Bloomberg Politics contributors. As we count down to a couple of potentially ugly headlines, Jeannie, where's your head right now? Where's Joe Biden's head? Sitting in the West Wing, watching the potential strike of a lifetime here in Detroit, apparently. All three of the big three is the last thing that Sean Fain said, and the government shutdown could soon follow. How does he message around this?
It is difficult to be president, following on your question to the representative about is she happy or a little bit sad to be back in Washington?
Yeah.
He's got a lot on his plate. And, I think we've seen, and Jordan mentioned that the president has already been engaging with the automaker leaders, with Sean Fain, with the union. I think we've seen in the past when this has come up with the railway strike and MLB and others that he engages sort of at the last minute. So I think we may hear about more of that today as we come up to this deadline. But at this point, it looks like he is going to be facing this strike. And for those reasons that Jordan went through, both the EV push and then also, of course, because Joe Biden really does need Michigan, and this can really ground those local economies in the Midwest to a halt. This could be potentially very, very difficult for him to handle. So I do think we're going to hear more about him working the phone, trying to get this together. But it looks like we are going to see a targeted strike by midnight tonight. And I have to say, Sean Fain is one of the most interesting union leaders we have seen in years, mainly, because he is one of the first democratically elected union leaders to the UAW. And boy, to watch him speak and his activism out there, it is truly, he is a force of nature. So Biden has a lot on his plate trying to get these two to find some common ground.
I didn't have to bleep him today, Rick. What does Joe Biden think of Sean Fain? What do you think?
Look, I think it's probably a nightmare every night for the last week since he got back from Asia, thinking about him. I mean, as Jeannie says, he's untethered. He's a democratically elected union boss. Not even sure you can call him a union boss. And he is one of the very few big union heads who hadn't endorsed Joe Biden right now. So this union is up for grabs. I mean, Republicans are sitting around, with their hands rubbing together going, come on, strike. Let's show those nasty corporations, how to deal with you. I mean, look at what Donald Trump is doing. He's trying to cultivate the union head. Yeah. I mean, since when has a Republican done that? Not since the 1970s with Richard Nixon. So, it's really quite phenomenal. And it makes me worry that there is going to be a strike. And if it starts out targeted, it doesn't mean it ends that way. And so we'll see tonight. But I suspect we'll be talking about this all next week and what impact it'll have on some very key targeted states.
Well, let's pull on that thread a little bit here. Jeannie, it's pretty interesting. We talked to Kevin Walling last evening on Balance of Power, and he's spent time doing some polling for union labor here in Washington, D.C., and it's pretty clear that the rank and file are leaning Republican, while the union leadership is very much Democratic. Is Rick forecasting a very important, potentially tectonic shift here in which union labor sides with Republicans? Donald Trump's asking for the UAW's endorsement in this race.
Yeah, I mean, he has been working hard for that, and rightly so. I mean, that is what our politicians should be doing. And if it happens, it would be an enormous shift. But let's not forget, and I think this is critical, if the union is successful here, if they get even a part of what they're asking for, I mean, let's remember on pay alone, they're asking for a 40% increase to match what the CEOs have made
as they in 2015 and 2016 got this huge boon in terms of these auto worker CEOs. He's asking that the workers get matched and a whole bunch of other things. If he gets even a portion of that, that may be seen as a big success. And you may see people who have looked at unions, and particularly as we see openings of plants and others in the South, and have not been particularly friendly to unions, they may say, hey, you know what? I want some of that. So if Bain is successful, if the union is successful, I don't know if we're going to see that shift, but it is possible. We really don't know. We are in uncharted territory here. And I think one of the brilliant things Bain has done, and I think Biden has to have some grudging respect for him, is he is holding his fire in terms of who he's going to support. And he is making the case, look, you need to win us over, and we want what we want, and we're going to push for it. And if he goes out there and other people in manufacturing sectors follow and workers follow, that could be a huge boon for the union. So I think this is all waiting to be decided, but he has become quickly a powerful figure in the labor movement and in manufacturing across the country, if not the world.
Yeah. Rick, should every Republican candidate here for Congress, for president, be asking for union labor's endorsement?
Well, look, there's certainly a strain of the party who's much more populist than the past and appeal to these rank and file quasi-Democrats, quasi-Republicans in rural districts. Sure. I mean, that's what Donald Trump has brought into the Republican Party. That's how he's won election in 2016. And that's how people like Glenn Youngkin won the governorship of Virginia, by appealing to what was historically rank and file Democratic voters in the rural areas, and said, "Hey, what have they done for you lately?" And we are going to go out there and work hard for you. And so, that's happening right now. It's not the whole party, but it's a big strain of it. And it also shows a decline in the support for the Republican Party for corporate America. Corporate America has been thrown under the bus by both parties now, and so it'll be interesting to see where they turn.
Boy. All right, so let's go from one countdown clock to another. We'll find out about the strike before midnight tonight, although Fain again is talking at 10 p.m., and it might be a couple of hours before that. On the other side, we have a countdown to a potential government shutdown, and at the end of this month is the end of the fiscal year. We told you yesterday, Republicans in the House blocked, a couple of them at least, blocked debate from even beginning on the military funding bill. And there are concerns that we might be a lot closer to a shutdown now than we were even 24 hours ago. The speaker is not happy.
I showed frustration in here because I am frustrated with the committee. I'm frustrated with some people in the conference. We had the DOD appropriation bill yesterday. I couldn't put it on the floor. I don't have one complaint by any member of what's wrong with this bill.
Can't imagine who he's referring to. Matt Gaetz on MSNBC last evening asked if he was looking for special treatment around his ethics issue in his leveraging of whatever social power he has here against the speaker. Of course, he keeps calling for the motion to vacate. He wants Kevin McCarthy fired.
That is an abject lie from a sad and pathetic man who lies to hold on to power.
Okay.
He lied to get power in January when he made this agreement, and he's lying now about the basis for breach. And you know what? Eventually, the lying has to come to an end, and the votes are going to start on a motion to vacate. I certainly hope that instead of that path, the speaker comes into compliance on term limits, balanced budgets, and single subject spending bills. And guess what? If that happens, there will be no motion to vacate.
That's all you've got to do, Mr. Speaker. Are the walls closing in, Jeannie?
Total compliance is what Matt Gaetz wants. And, can you just imagine Nancy Pelosi or any of our strong speakers in the past putting up with this kind of nonsense, really, from Matt Gaetz? Matt Gaetz has made himself sort of the head of the Republican Party in the House, and he is going to tell the speaker exactly what he has to do. At some point, we are going to have to see Kevin McCarthy stand up to Matt Gaetz and shut this down. And of course, Matt Gaetz has a point. He made this deal. We don't know what's in the deal, quite frankly, because it was never released. But there was some deal made so he can become speaker. And now he is at the whim of Matt Gaetz going around telling him total compliance or you're out. It is a disaster for Kevin McCarthy. It's a disaster for the Republican Party. We are facing an imminent shutdown. If they're going to do that on military appropriations, how are they going to get through the rest of the spending in a measly 14 days? It's unthinkable, really.
You imagine, Rick, a member calling the speaker a sad, pathetic man on national television? They're in the same party.
Yeah, what do you need a Democrat for in the House? You've got Republicans attacking each other. I mean, honestly, it's like just a great day for the Democratic leadership in the House. All their job is being done for them. And it is a incredible failure of the Speaker's leadership not to be able to get a vote on the NDAA. I mean, this is a bill that is a must-pass. They are far behind the Senate on it. It needs to happen. And the Speaker let a number of these guys in the Freedom Caucus loaded up with all these, anti-woke amendments, and now nobody will vote for it. Republicans won't vote for it. Democrats won't vote for it. I mean, it's dead on arrival. And yet they've got to pass one in order to get into a conference with the Senate to get a bill out. I mean, it's the most messed up. I mean, and that we're not even talking about the government shutdown or the Ukraine spending bill or the other supplemental the administration asked for or any of the appropriations bills that they're waiting to pass. I mean, it is a disaster inside the Republican leadership.
Wow. That's coming from Rick Davis. We've got breaking news, and sometimes the breaker is just not a surprise. But the headline just crossed the terminal. Hunter Biden indicted on federal firearms charges in Delaware. I didn't think we were going to talk about this today, guys, but we did see it coming. Special counsel David Weiss told us, by the way, about a week ago that by the end of the month he was going to do this. So this could be a bit of a tree falling in the woods. I don't know if this is a huge deal for the White House, Jeannie, since it was already out there. But does this make the case for the impeachment inquiry a bit stronger?
No, it doesn't. No, it doesn't. I mean, Hunter Biden lied on the form. He published a book saying he was doing drugs, and he lied on the form saying he wasn't. Any of us who did that would be held responsible. That has nothing to do with his father, beyond the fact he must feel horrible as a parent. And so Hunter Biden is going to have to, if the deal is not on the table, as it no longer is, he's going to have to face the law on that. But it has nothing to do with Joe Biden. If they are able to show a quid pro quo when Joe Biden was vice president, that would be a different story. But the fact that an adult signed a gun form saying he wasn't doing drugs and he was, that is up to him, and he's going to have to pay the price.
What do you think of this, Rick? Is it the type of headline that lands with a thud here? I expect it's all we're going to hear about for the rest of the day on Newsmax and the rest of the conservative networks.
Yeah, every day that Hunter Biden is in the news is a bad day for the President Biden re-election campaign. I mean, regardless of what else is happening around the world, there's no upside. There's no positive associated with a Hunter Biden story. And in this case, as Jeannie said, has nothing to do with the president, but it just reminds us of the trials and tribulations of Hunter Biden and the potential indictment that looms in front of the president in the House.
Does the White House say nothing on this, Jeannie? It's all they'll be asked about in the briefing or on Air Force One now.
Yeah, they're going to be pressured to respond. And I think they say the same thing they have. The president feels horrible. His adult son has battled with a drug addiction, and he is going to stand up and he is going to have to pay for what he did. And that, both Joe Biden and the First Lady feel horrible, and they are feeling like he is getting better and that he is going to take this responsibility. But there's not much else to say beyond that. They have to do what Joe Biden said yesterday in Virginia, which is to say we're working for the American people and we love our son.
There you have it from Jeannie Shanzano and Rick Davis on a breaking story. We've just learned that Hunter Biden indicted on federal firearms charges in Delaware. The headline crossed the terminal just a couple of moments ago. Interesting talk from Ron DeSantis, by the way. Remember he said he was going to do more interviews? He's doing them. Now telling CBS News he's prepared to send missiles into Mexico. We'll hit that next as Vivek Ramaswamy, meantime, prepares to lay off 3/4 of the federal workforce. That's his plan on the trail. Next with our panel. First, let's get you up to date now. Nancy Lyons joins us with world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe, you've been talking about it. Hunter Biden, the president's son, has been indicted on federal firearms charges in Delaware. This follows a plea deal that fell apart. He's alleged to have lied about his drug use on the form that is required in order to buy a gun. Hurricane Lee continues to move north in the Atlantic with winds of 90 miles an hour. Bloomberg meteorologist Rob Carolyn is tracking it.
We expect the storm to make landfall somewhere in New Brunswick or Nova Scotia Saturday morning. By that time, it will have converted from a tropical weather system to an extratropical system. But that's not to say that eastern Maine and parts of Atlantic Canada won't see winds over 60 miles an hour Saturday morning and several inches of rainfall.
Again, Bloomberg meteorologist Rob Carolyn. Majority Leader Chuck Schumer is reporting back to the Senate on yesterday's lengthy discussion with tech executives concerning regulation of artificial intelligence. We get more from Bloomberg's Irv Chapman.
Schumer said when he asked participants whether government regulation will be needed, every hand went up.
We had a consensus on the need for guardrails, because just as AI can be used to design cancer cures, it could also be used to make terrible bioweapons or other dangers. And we agreed, only the government can fill the hole of creating and enforcing these guardrails.
Schumer said it will take months for Congress to study the issues and try to enact a bipartisan bill. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, back above 4,500, 4507 right now, up 39 points, a gain of 0.9%. The Dow is up 1%, higher by 348 points. We've got NASDAQ up 128. That is a gain of 0.9%. The big IPO of the day, ARM Holdings. Stock is surging now by 18.2%. We've got the 10-year 4.29%, with a 2-year now yielding 5.00%. Spot gold, $19.09 the ounce, up by 0.1%. West Texas Intermediate crude back above $90 a barrel, up by 2% right now. Wall Street's also keeping an eye on efforts on Capitol Hill to head off a government shutdown. Congresswoman Christy Houlihan is a Pennsylvania Democrat. She was interviewed earlier this hour right here on Sound On.
I've seen this before, and it's not pretty, and it's very, very harmful to people when it happens. So, of course, the vast majority of us would like to make sure that we avert that, and frankly, avert a continuing resolution, which is basically kicking the can down the road as well.
And you can hear more of the conversation on the Sound On podcast. You can download it wherever you get your podcasts. Lots of eco data today. Retail sales, producer prices both rose in August. And with more on that story, here's Bloomberg's Vinny Del Giudice.
The inflation data show wholesale gasoline costs rose 20% in August, pinching consumers and businesses even more. Fuel sales are tracked in dollars and cents in the retail report, not by volume, boosting the overall tally. Other retail categories held firm for now. Turning to the U.S. labor market, weekly jobless claims remain low. Vinny Del Giudice, Bloomberg Radio.
And again, recapping stocks higher. S&P up 39, up now by 0.9%. 10-year yield at 4.29%. Adobe reports after the close of trading. ARM Holdings again surging in its first day out, up by 18.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It appears one of the founding members of the Freedom Caucus in the House, a former member, has come back to support the group when it comes to a government shutdown. That would be Ron DeSantis. Thanks for joining us on Sound On, the fastest show in politics. I'm Joe Matthew in Washington, where Politico reports that he got on the phone for some time yesterday. Of course, Republican presidential candidate Ron DeSantis got on the phone with Chip Roy and the others, Bob Good, who's called for a government shutdown. They spent about 30 minutes talking. DeSantis told them, "I've got your back. Keep fighting." And he's out with a new ad talking about the wild spending in Washington. Very dramatic presentation.
We will stop the Congress from borrowing and spending this country into oblivion.
We need a radical reduction of the federal bureaucracy.
We need a balanced budget amendment to the U.S. Constitution. We need term
This is out just at the same time as he suggests, maybe a shutdown might be something good to push for. And as he's doing more interviews, he sits down with CBS News, Nora O'Donnell, asking him about the use of deadly force at the border, which he's been saying will shoot you dead if you break through the wall protecting the border. And he's going further now. We talk about leaning in on the cartels to suggest he may actually be ready to shoot missiles at them.
I mean, these are big steel beams, and they're cutting through, and yet they're being allowed to come in to our country. They got backpacks on with fentanyl and all this stuff. So in those situations, yes, we will have deadly force authorized.
Would you send missiles into Mexico?
We would use all available. The tactics, I think, can be debated. If you have something you want to accomplish, people would brief you on the different ways to be able to do it. So that would be dependent on the situation. But I think you're
But
totally...
launching military forces into Mexico is a much different standard. That's why I'm asking this question.
But the reality is they are overrunning our border.
Got to hear from the panel on this. Rick Davis and Jeannie Shanzano. I guess that's actually pretty attractive talk on the primary trail, Rick, but we have to deal with reality here. If a President DeSantis started shooting cruise missiles into Mexico, that could start a war, couldn't it?
Yeah, look, I mean, you want to drive the Mexican government right into the arms of the Chinese? Yeah, sure, launch a few cruise missiles across the border. I mean, and secondarily, I mean, every report I've ever read, maybe he's got to get some research done, indicates that fentanyl comes in mass through the border check crossings. It's in cars and trucks and frankly, airplanes. This is not how you stop the fentanyl. It's maybe how you stop bad people. We're for that, but it is a small fraction of the problem. I mean, he's talking about using deadly force with U.S. military on the border of Mexico. I mean, it is such a overreach. It's unbelievable. But, you know, he's looking for a way back into the narrative. And, you know, I think the lessons he's learned from people like Vivek Ramaswamy is be crazy, get wild, say stuff that nobody else is going to be willing to say because it's so wrong. And maybe I can get on the front page of the paper that way.
Can he pick up a couple points on this, shoot some missiles down the border, Jeannie, and might win the nomination?
Yeah, I think that's what he's hoping. I mean, we all remember that Donald Trump was talking about shooting Patriot missiles into Mexico, and Mark Esper thought he was kidding, but it turned out he was quite serious. And as they all try to, you know, replicate Trump on the campaign trail, this is the idiocy that we are hearing, and there's no other word for it. I mean, the Mexican president was forced to respond to this nonsense and said, we're not going to be anybody's piñata. And of course, how in heck would it help any situation to attack Mexico? I mean, in what universe is that helping the situation with fentanyl, illegal immigration, or anything else? But this is all performative. It is what these guys are doing out there as they all struggle to be Trump's mini-me and hope that if Trump implodes or is, you know, jailed and can't run or decides not to run, they can pick up where he left off. And it's just mind-numbing to hear that a serious candidate isn't ruling out bombing or attacking Mexico in this way. You know, I could see why Nora O'Donnell looked so perplexed when she heard the answer.
I'm actually really curious to see the whole thing. So on to Vivek Ramaswamy, who's got a different idea in an attempt, I guess, to garner some attention, get some headlines going. If elected, he's going to lay off 75% of the federal workforce. You talk about the deep state, the bureaucracy, not under this president.
Large-scale mass layoffs are absolutely what we will bring to the D.C. bureaucracy, both because it is necessary and it is sanctioned by the law of the United States of America.
That would be a lot of workers, Rick, and it would probably keep the government from functioning. He would be talking about eliminating any number of agencies. Is that possible?
Yeah, everything is possible in government. It's highly improbable. First of all, these agencies, cabinet agencies, are statutorily created. In other words, you would actually have to get an act of Congress to get rid of the Education Department, to get rid of the Commerce Department, and it's been talked about. It's a really great talking point. I mean, government has increased in its size and dimensions and cost. And so bringing that back down to earth is one thing. But again, just sort of this, as Jeannie says, the performative nature of American politics these days, you can't actually say, I want to shrink the size of government 5%. Nobody would care about that. You got to say, I'm going to fire 2/3 of the federal workforce. And, you know, let's see what happens. I mean, if it's a total crisis, who cares? I've just done something really wild. So I guess this is the wild day on the show today. But, I mean, it really is bothersome that these people who want to represent the American people in the Oval Office don't have more rational programs.
Maybe, Jeannie, if he shot a missile at the bureaucracy, what do you think?
Yeah, and I'm not going to be surprised later, Joe, if we hear that that's what he's come up with. Maybe he's listening and he's going to say, boy, Joe Matthew, excellent idea. I will do that. And by the way, this is very similar to Donald Trump's Schedule F. Although Donald Trump was talking about making it easier to fire these people so that you get people who are all beholden to him. So this is where we are headed, and it is utterly unthinkable. It is not workable. You can't do it, but they're going to try.
Rick and Jeannie, with a few final thoughts ahead as Mike Pence finds his sense of humor on the campaign trail. We had to bleep it this time, not the former vice president, but the heckler. We'll have that next from Iowa. I'm Joe Matthew in Washington. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are keeping an eye on ARM Holding shares. They are higher first day out, and the stock surging 18.1%. ARM rallying after raising $4.87 billion in the year's biggest initial public offering. And Bloomberg Radio caught up with the chip designer's CEO, Rene Haas, on the floor of the New York Stock Exchange.
It was a great process. Investors really wanted to understand the opportunity we had in front of us. And of course, AI, which you can't really talk about our industry without talking about AI. And I think helping them understand that you can't really run AI without ARM, without a CPU, and just pointing out to them that it's everywhere in every device that people touch was a big part of the process for us.
And you can hear more of the conversation on the Bloomberg Technology Podcast. Lazard's Peter Orszag setting fresh targets for the 175-year-old investment bank, including doubling revenue by the end of the decade. More on that story from Bloomberg's Steve Rappaport.
Charlie, Orszag takes over as CEO next month. He's also aiming to double earnings by 2030 under a plan to improve performance among the firm's investment bankers. Lazard wants to boost results roughly evenly between its key investment banking and asset management businesses. Several leaders were named to help implement Orszag's plans as the firm eliminates his prior role, CEO of Financial Advisory. Orszag is a former director of the U.S. Office of Management and Budget in the Obama administration. Charlie?
And that's Steve Rappaport reporting Lazard shares up now by 0.1%. Again, ARM Holdings first day out up by 17%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
YouTube, as we're back in our snazzy DC studio. Kaylee Lyons will join the conversation in just a moment. Search Bloomberg Global News on YouTube. You can still make it for hour two as we turn to Nancy for an update on world and national news. Nancy Lyons now in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Well, Hunter Biden has been indicted on federal firearms charges in Delaware. He's accused of lying about his drug use when he bought a firearm in October of 2018. That's a period when the president's son acknowledged struggling with an addiction to crack cocaine following his divorce and the death of his brother. The gun possession charge had been part of a plea deal, but a judge raised questions about its unusual provisions. A trial date is still up in the air for former President Donald Trump in the Georgia 2020 election case. We get more from Bloomberg's Nathan Hager.
Fulton County Judge Scott McAfee has ruled against prosecutors who wanted to try Trump and his 18 co-defendants at the same time. The judge says only two lawyers, Sidney Powell and Kenneth Chesbrough, asked for speedy trials, and they'll get them starting October 23rd. Putting the rest of the defendants on trial at the same time, McAfee says, would have been unrealistic. Trump is accused of leading a criminal enterprise to stay in office after he lost in 2020. The former president calls all the criminal cases against him a witch hunt. In Washington, I'm Nathan Hager, Bloomberg Radio.
The United Auto Workers Union says it'll strike against Detroit's big three automakers unless a deal is made before tonight's midnight deadline. During a Facebook Live speech late yesterday, Union President Shawn Fain ruled out any extension of the existing contracts with GM, Ford, and Stellantis.
They pretend that the sky will fall if we get our fair share of the $250 billion the big three has made over the past decade. But it's not just the economy. When they talk about that and they say we'll wreck the economy, it's not the economy that'll wreck. It's their economy. It's the billionaire economy. That's what they're worried about.
UAW President Shawn Fain says workers want a 4-day work week and pay raises. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
All right, Nancy, thank you. So you're saying there's a chance former Vice President Mike Pence showing a rare dose of humor on the campaign trail in Iowa. We did have to bleep it. You never know what's going to happen when you bump into people, and the hecklers are waiting for you there. He went to Iowa for a town hall with one of the conservative news networks, Decorah, Iowa, where somebody was ready for Mike Pence when he walked in the room.
Get the out of our country and get the out of Iowa. I'm going to put him down as a maybe.
I'm going to put you down as a maybe, he said. Rick Davis and Jeannie Shanzano joined. This is so much of the job, right, Rick? To be a normal person, to show some humor, to actually maybe take an insult with grace.
In the room, and he's absolutely the adult in the room in this campaign. And remember, he's run for Congress, he was governor, he's been vice president, and he's ran 2 presidential campaigns, and so he's a seasoned veteran. I mean, compare him to a Ramaswamy who's never run for anything in his life, and this is what it trains you to do. And so kudos to him. He had decorum in Decorah.
That's pretty good. I like that. What do you think, Jeannie? Can Mike Pence get a couple points the more he shows his personality?
He very well could. And, you know, the young kids call that clapping back, Joe. That's what he's getting good at. He's clapping back out there, and people are liking it. So he's got to do more of that. Show that sense of humor, who he is. And, of course, we should all have, to Rick's point, more decorum everywhere than we have.
Yeah,
that
no doubt.
clip that you just played was pretty bad.
Especially when someone's attacking you. I don't know. Being able to laugh off an insult has got to be one of the more attractive qualities we can have. Great conversation as always. Rick Davis and Jeannie Shanzano, we thank you both. This is going to be quite a day ahead here as we wait for news on a potential auto strike, even as the debate continues on Capitol Hill over a potential government shutdown if we can't figure out this whole budgeting situation. Kaylee Lyons joins next, and we're going to sit down for a couple of moments with Senator Marsha Blackburn following that important meeting on AI on the Hill yesterday. Hour 2 of Sound On starts right now.
from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
How to follow the $500 billion meeting. Welcome to Hour 2 of Sound On. As Washington plans its next move on artificial intelligence after the big meeting yesterday with the titans of tech behind closed doors. We're joined in a moment by Senator Marsha Blackburn of Tennessee, who's working with Chuck Schumer now on a bipartisan approach to this fast-evolving technology. We'll be very curious to hear what she has to say coming up next. Later, a special conversation with Amos Hochstein, the White House senior advisor for energy and investment. We'll be joined for that by Bloomberg's Anne-Marie Hordern for the conversation. And we'll check in as well with Bloomberg's Detroit bureau chief, David Welch, just hours, as we mentioned before, a potential auto strike against the big three. He's deep in the weeds on this and will join us later with what we should be watching later on tonight. So let's get to it here. Kaylee Lines, it's great to see you. Welcome back, of course, to the program fresh off the crypto conversation. And it's an interesting thing because Congress is trying to get its arms around crypto as well. This artificial intelligence story, though, yesterday, it just reminds us of how kind of abstract this is as an issue to regulate.
Yeah, both technology-oriented issues that senators have been trying to get their arms around, those in the House as well. The difference is in the House, we actually have seen some legislation passed out of committee in regard to regulating crypto. In the Senate, AI regulation and actual bills being produced, maybe we're not quite there yet, even if there was a big summit that took place yesterday.
Well, that's true. We can call it a summit, right? It was not a hearing. We know that.
No, closed door.
The senator from Tennessee is with us to talk about it. We've talked AI before with Marsha Blackburn, but it takes on new meaning after this meeting yesterday. Senator, welcome back to Bloomberg. We appreciate your time here. I wonder to what extent this was an important moment, not so much for the drive to regulate, but just to get everyone's attention on a critical matter. What was it like to be in the room?
Well, it was good to have everyone assembled before us. It was appropriate that we turn our attention in a more fulsome way to the issue of emerging technologies. And whether it is blockchain or quantum computing or AI, the U.S., if we're going to maintain our leadership, we need to step up and say, what can we do that is going to be helpful so that the private sector does what they do best, which is to innovate and to bring forth these ideas, build these companies, and then create those jobs and that tech leadership that is prized globally.
So, Senator, as you say, it was important to just kind of highlight the need to do something here. It just becomes a question of how quickly something is actually going to be able to be done. Senator Schumer said he would like to see this addressed in months, not years. What's your degree of confidence that an actual regulatory framework legislation is going to be passed by the Senate anytime soon?
Well, we have to realize that the EU does have a federal privacy standard, which we are yet to pass, and everyone says that's got to be building block number one. And the EU is ready to pass their AI Act, as they're calling it. And this will put their framework in place. So the U.S. does, over the next few months, need to do a national online consumer privacy bill, which allows people to keep their information out of that open source network. That would allow them to build a firewall around their content. We also need to do a data security bill. And then we need the rules of the road for AI and making certain that the environment, that you've got a referee, as it was referred to many times yesterday, that is there to call those balls and strikes and make certain that that environment stays healthy for innovators. We've talked to people over the last couple of days that have chosen to establish their company in the U.S. rather than elsewhere because they want to protect their intellectual property. So they have chosen here. We need to make certain that we keep that robust environment.
Senator, I know that you've not always been a fan of big tech, particularly the social media companies. I wonder, was yesterday's exercise an opportunity to learn from these executives or to put them on notice?
It was a wonderful opportunity to learn from them, to see how they see the utilizations of AI. You know, we have lived with AI for years. We've talked about AI and applications, facial recognitions, auto correct, autofill, voice assist. All of those things are AI applications. And in my state of Tennessee, whether it's the healthcare industry, the logistics industry, auto manufacturing, there are so many utilizations of AI. Also, we have our entertainers, songwriters, singers, musicians, authors, publishers, who are very concerned about what is going to happen with voice cloning, with concepts like ChatGPT or jukebox, and how that may rob them of the potential, their constitutional right to benefit from their creations. So getting everybody in the room, giving everyone some education. Not everybody works on these issues all the time, like members like I have. And it is important for people to have an understanding so they have that foundation, and we can begin to move forward on this legislation with an understanding of why it is important.
Senator, we could continue this conversation with you all day, but as the AI conversation is moving forward, there are some things that just aren't moving at all in the U.S. Senate right now, including military promotions and nominations, thanks to your Republican colleague, Senator Tommy Tuberville. What's your message to him right now? Should this continue?
Well, the message is to Leader Schumer, who, as even some of the Democrats have said, look, let's begin to put these on the floor and let's call the vote. Today, we have had one vote. We had one vote on Monday. There have been opportunities to put these nominations on the floor and call them. And also, Senator Tuberville has said if you've got the command team over at DOD that would sit down with him, discuss the policy, that they could probably work this out.
Do you worry about military families in Tennessee who are in temporary housing or might have missed a pay increase because of these delays?
We are always concerned about our military families, and we continue to work with our military families. That's one of the reasons we work so hard on getting the NDAA across the finish line, because of the pay increase for our men and women in uniform.
I've got to ask you about the matter of impeachment, Senator. I wonder if you're preparing to receive an impeachment referral. And I'm asking you this as we just learned that Hunter Biden has been indicted on gun charges. I know these two are not related, but it's hard to ask you about one and not the other.
Yes, and on the impeachment, I appreciate why Leader McCarthy felt like he needed to move forward with this, and why the House members who are on these committees wanted to move forward with the inquiry. They need to preserve their ability to issue subpoenas and to have those acted upon. And because of that, they needed to move forward with the impeachment inquiry. I think that you will see them continue to gather information and to determine what is alleged, what actually transpired, and really kind of build those threads out. The American people want answers on this. They want to know what the then Vice President did in conjunction with Hunter Biden and also with Biden Incorporated. And when it comes to Hunter Biden and these indictments, I am certain that they chose to go with the gun charges first, the 3 charges that are in this indictment. because they don't want to be pulling the president in for depositions.
Senator, just quickly, do you not worry about the precedent that could be being set here, just impeaching one president after another, depending on what party is in control of the House?
We always worry about precedent that is set, and many of us try to continue to work across the aisle. And I spend a good bit of time working on legislation and efforts that I have to make them bipartisan, because bipartisan legislation is going to stick, and making certain that you are writing legislation that is going to be good for Tennesseans and all Americans, that is going to improve the quality of life for Tennesseans and all Americans. That is something vitally important to me.
Senator, we appreciate your coming to talk to us about all matters of import, including artificial intelligence. That's a conversation that will not be going away, and we'll stay in touch with Marsha Blackburn from Tennessee, of course, on that. The Republican view there, Kaylee, on the impeachment inquiry and the indictment now made official. We did know this was coming, and I'm glad that we gave our listeners and viewers a heads up on this. The special counsel said, gosh, it was, about 2 weeks ago that he'd do this by the end of September.
Yeah, and he's done it right in the middle of the month. And this is obviously a headache for the administration. This is something the president's done that he has been very reluctant to address. He just doesn't want to talk about this issue. And as he's actively campaigning in 2024 and now facing an impeachment inquiry that is also tied to the business dealings of his son, how much longer realistically is he going to be able to avoid this?
As we prepare to bring in Amos Hochstein from the White House in a few moments, we wanted to talk to Julie Fine. You know, we're lucky to have Julie Fine in Washington this week, so we just keep working you. And I hope, we're going to have to get hazard pay for this. Thank you for coming over. The timing here, of course, our Texas bureau chief, the timing here is not good for Joe Biden. This Hunter Biden gun charge has nothing to do with the impeachment inquiry. But you squint your eyes a little bit, you might already have a problem with the Bidens, and they just all start to collide into one ugly picture.
Listen, it's never good timing for anything to happen to your son legally when you're the president. There's never good timing for an impeachment inquiry, but all of them at the same time equals worse timing. Yes. So it's not good for the president, because these are the things that he's going to be talking about on the campaign when he really wants to talk about Bidenomics, which has had trouble sticking that message. So this is a massive distraction for him and not something that he wants to continue talking about, clearly.
And just on the subject of impeachment, which, again, this entire question is related back to money that may have flowed from Hunter Biden. We're still looking for evidence that the president, then vice president himself, actually benefited from these business dealings. And yet what Senator Blackburn was just saying here is that people want to know that the House should be pursuing this inquiry to, unearth all this information. You always give us that outside the Beltway perspective. Is that true?
Well, I think that that there are some Republicans in Texas that will sure discuss this. What you basically hear is Republicans saying, we keep hearing about the former president being indicted. What about Hunter Biden? So now you've got both of these. But I do think overall, though, when it comes to indictments and inquiries, overall, there's a little bit of fatigue setting in. And the fatigue is every time it happens. Remember the first time that the former president was indicted? It was like, stop the presses. And then it's happened again and again, and it becomes it's more familiar. So I think the fatigue on this does really begin to set in.
Well, so when's the Hunter fatigue start? We've been hearing about laptops for a couple of years around here, along with other issues, and it just seems to be fueling the conversation.
Well, I think it fueled it because everyone talked about how there was no action compared to what you were seeing with the former president. I just think this becomes a huge campaign issue where I think voters end up losing out in a sense is they don't get to hear about issues as much. And it's the issues that affect their everyday lives.
Well, issues like spending and how much spending the U.S. government is doing, what money is getting spent on, if the government is even open at all or not, because it can't agree on spending. If we were to see a government shutdown, how does that play outside of Washington, D.C., which obviously would be most greatly impacted in some senses?
We see things so differently from different parts of the country, but at the end of the day, one thing we will all see the same is everybody's blaming somebody. You know how you often hear people say, oh, I don't like Congress, but my guy, that's the best. Yeah. So I think in this type of situation, you're going to see so much of the blame game, but you're also going to see people that are like, wait a minute, I can't afford gas. Mm-hmm. So at that point, you're just angry, period. So what do I think? I don't think that works well for an incumbent.
We started our conversation with Senator Blackburn talking about artificial intelligence. You know, the Hunter Biden thing in the grand scheme, this is not something that's going to impact the universe beyond a certain period of time, nor is Joe Biden, really, for that matter. This AI story is potentially an existential threat against society as we know it, maybe humanity. And that meeting yesterday turned into kind of a page 6 story. You got some, you know, some famous CEOs came to Washington. But at what point will people, or are people capable of caring about such a big
They'll care about
issue?
It when it hits their life.
Okay, when they lose their job is what you're saying.
Right. I mean, I think you pay more attention to things when it eventually hits you. You know, we always talk about the infrastructure bill.
Yeah.
Like, you know, people
Where are the
in
cranes?
4 years when they see bridges, they'll be like, oh, now I get it. But people need to see the tangible. So I think with AI, when something happens that affects their paycheck, that affects their life, then you're like, oh, we got a problem here.
And what's so interesting, though, is you did hear some senators yesterday, and even some of those who were in that closed-door meeting who were invited to speak, talking about the job market, how it could affect the job market. I believe the CEO of Palantir actually was telling her, Tyler Kendall, about that idea. But we also heard a lot of it about being about competition with China. Yep. We know there are a lot of China hawks in Congress. There was a lot of concern about the Chinese Communist Party and how it may get ahead or advance to the U.S. on certain technologies. And I feel like I ask this question often, but how much does that kind of foreign policy consideration factor into the mind of an American voter when, as you say, they're just paying attention to prices at the pump and what they have to do to put food on the kitchen table?
Well, you know, again, the average voter is not spending their day, they're working. They're not in front of a television, or they're not looking at their phone all day for the highlights of foreign policy. So again, I think things have to be really, really tangible, or huge news events. When something happens, when it hits every single... Now, that's not to say there aren't people that consume a lot of news, but a headline has to be pretty massive or affect, I think, a bottom line for people to pay that much attention.
Thanks for coming over to talk to us again.
Well, thanks for having me, guys.
Yes,
I love seeing you.
Well, you know, we see your job is to be our reality check, I guess, right? And you'll at some point tire of the questions. What's happening, Julie, outside of the Beltway?
Well, I don't tire of it. You know why? Because we got a whole world outside of the Beltway.
Yeah, well, that's right.
I've lived inside the Beltway. I've lived outside the Beltway. So there's a whole world out there. You know, we're state to state, our nation's great.
Yeah, well, you're here. Julie's going to have a business card. This is Julie Fine, outside the Beltway.
There you go.
Thank you, Julie.
Thanks for having me.
Great to catch up. Let's get to Wall Street before we bring in Amos Hochstein and Anne-Marie Hordern. Right now, Charlie Pellet has an update on trading for us in New York. Hey, Charlie.
Thank you very much, Joe Matthew. Busy day on Wall Street. Lots going on. The Dow, the S&P, NASDAQ all rallying, but a developing story and a headline from the Bloomberg Professional Service. Sources tell Bloomberg Walt Disney has held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. Right now, we've got shares of Disney up by 0.5%. Those sources say these talks are preliminary and have not involved a specific valuation. But again, a developing story, one we're watching. Headline worth reporting. Sources tell Bloomberg Disney has held exploratory talks about selling its ABC network and TV stations to Nexstar Media Group. Stocks higher across the board right now. Strong economic reports revive speculation the Fed will be able to engineer a soft landing. S&P up 34, up 0.8%. The Dow up 323, now up 0.9, very close to the best level of the day. NASDAQ up 104, up 0.8%. We've got the Russell 2000 higher now by 1.3%. 10-year yield 4.28%, with a 2-year yielding 5.00%. Spot gold higher, a little changed, up 50 cents the ounce to $19.08, while West Texas Intermediate crude above $90 a barrel, $90.09. That is a gain right now of just about 1.8%. Brent, the global benchmark, up now by $1.09. We do have a gain of 1.8% for Brent. Barrel of Brent crude now at $93.53. ARM Holdings, the big IPO story of the year. Shares are surging in its trading debut after raising $4.87 billion in the year's biggest initial public offering. We do have shares of ARM up now by 16.3%. Automakers underperforming today, Ford, GM, and also Stellantis, all trading lower. Ford shares down now by 0.4%. General Motors down 0.5%. Stellantis, the parent of Chrysler and Jeep, all declining ahead of that midnight strike deadline. So again, recapping, we are looking at an up day on Wall Street. All major groups in the S&P 500 index advancing as that gauge tops 4,500. Adobe due to report results after the close of trading. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, we thank you and appreciate your being with us here on Bloomberg Sound On, the fastest show in politics, on the radio, on the satellite, the podcast, and now on YouTube. Find us right now because we're about to have a very special conversation. Go to YouTube, search Bloomberg Global News, and you'll even find Anne-Marie. She's back. Anne-Marie Horduren with us in studio. It's great to see you. I love the way this works. Amos Hochstein shows up, and so do you. This is excellent. We've got another opportunity to spend some time. It's great to see you.
Thanks.
As we try to decipher the takeaways from the G20.
Yeah, that's right. Amos is back from this trip from the G20, and on the sidelines, they were able to get this deal done that I know that he looks after broader infrastructure, connecting the dots, but this will go through the Middle East, into Southeast Asia, also to Europe. But I think there's broader implications what the U.S. is trying to do in the region, specifically with Saudi Arabia and Israel, and maybe deals like this potentially help the U.S. get to that final broader policy goal.
The White House senior advisor for energy and investment. Amos, welcome back. It's wonderful to see you.
Thank you. It's good to be here.
Apparently, this was a very good trip for the administration. President Xi wasn't there. President Putin wasn't there. President Biden was there. And as we consider this deal that Anne-Marie just described, that hasn't gotten enough attention, is this your answer to Belt and Road?
Well, first, thank you for having me. It's good to be back on the show. Look, I think it was a very good G20. I think the world came together on a number of very important issues, specifically on economic issues and what the world is facing as we are reaching so many inflection points. I think to your point, President Biden said he wished that President Xi was there, but nonetheless, it was a very good summit and underscored the importance of the G20 itself, and that the world can come together and resolve some specific issues and tough questions within the context of the G20. So I think the G20 was strengthened by this summit, and we're looking forward to future work. Look, the event that we held at the G20 with Prime Minister Modi, with President Biden, the Crown Prince of Saudi Arabia, Sheikh Mohammed of UAE, together with the President of the EU Commission and the Presidents and Heads of State of France, Germany, Italy, and Japan, underscored what we can all do together. We've talked for decades about connecting Asia to Europe. And this is finally, for the first time, actually putting this infrastructure together. So from connecting the ports of India and the UAE, connecting India by rail to Vietnam and Myanmar, so that you really have Southeast Asia to South Asia to the Middle East, and then from ship to rail, UAE, Saudi Arabia, Jordan, Israel, and then from there by ship to Europe. That cuts down on the cost of shipping products and goods, reducing costs, making them more efficient and cleaner, less diesel when you do a lot less shipping time and more on rail, which is both faster and cleaner. So connecting that then and putting subsea cables for high-speed data, for hydrogen and electricity, instead of transporting molecules of oil or gas, we're going to be transporting electrons of electricity. And this way, Saudi Arabia, UAE can produce enormous amounts of clean energy, but they don't have the markets to be able to sell that to. So now if we can connect these dots and connect that to Europe, that wants to buy more clean electricity but doesn't have the ability to produce it, suddenly this is a match that works. And so we've been working for many months on putting this together, making sure we have the financing, the arrangements, This is not an easy thing to do diplomatically. Not everybody is a natural ally, but I think putting it together, that event really underscored what we can do when we work together.
Well, Saudi Arabia at this moment doesn't even recognize Israel. Do you see this as a first step for potentially that normalization between Riyadh and Jerusalem?
Well, as you know, the president, when he went to Saudi Arabia last year, talked about his wish to be able to facilitate more regional integration. We had announced, President announced during his visit the first overflights from Israel. He himself was the first flight to fly from Israel direct to Jeddah on that trip. And since then, there's been a lot of reports of some of the conversations that we're working on. I think that there's a lot of work still to do, where we have a long way to go. Some of the reports are a little bit ahead of where the discussions are.
But it gets done in this administration, you think?
You know, I think if the parties come together, we can achieve what we're trying. But again, maybe. But we're working towards that goal, and we have to see if we can get there. But this arrangement that allows for infrastructure that connects Saudi Arabia, ultimately Europe through Israel, is definitely a big step forward. It is not part of normalization, and there are not going to be direct conversation between Israel and Saudi Arabia. That's clearly can't happen at this point. But the idea that the United States can facilitate this conversation. While we signed the MOU with all of the countries I mentioned, we also signed a separate MOU of just between the United States and Saudi that allows us to be that sort of directs the United States, and we acknowledge that we'll facilitate this entire transaction, including how to work out the differences so we can go through Israel.
Spending some time with Amos Hochstein, White House Senior Advisor for Energy and Investment. Anne-Marie Cordern is with me here on Bloomberg Sound On. We have to ask you about energy prices right now because there's so much talk about crude oil at $90 a barrel. We've had any number of forecasters tell us we could see 100. Did you miss an opportunity to refill the SPR while prices were, say, in the 60s, or were your hands tied by the bidding process?
I don't think we missed an opportunity. The president said very clearly that when prices came down to the lower 70s, we would be opportunistic and buy oil on the market in order to refill the SPR, which is a strategic asset. We did that. And in fact, we made a number of purchases during that time when prices were lower. We will continue to take that approach that when prices are right, we will continue to purchase crude and make sure that we refill the SPR. The SPR has still has significant amount of resource in it, which we need for emergencies. But we are in a position of buying in as soon as we can.
So we have crude prices, WTI, above 90 today, so that's a significant development. The IEA says we're going to see a significant shortfall, and we're past peak driving season here in America, and we have prices approaching $4 a gallon. What does the administration have in its toolbox to potentially insulate consumers at the pump?
So let me make a couple of points, because you're right. The facts are there. The president has been clear that he wants to make sure that American families have less of a burden and that costs don't hurt American families, especially families that have one or two drivers. And he's still committed to that. We see a couple of factors that are coming into the oil price increase. One is, obviously, you've stated it yourself, OPEC has decreased supply and constrained supply, and they did that when prices were significantly lower than they are today. Since that decision, prices have come back up to some degree because of that. The other factor is that Bidenomics works, right? We have an economy that is strong, and we have a labor market that is strong, where wages are higher than costs. And we want, when that happens, when you have a strong economy and stronger than people had expected to have at this point, as resilient as it has, then you also have demand growth. So there is stronger demand when you have stronger manufacturing and stronger productivity. It comes with demand growth. So between the supply,
good, but people don't feel it because of inflation, and pump prices is one of them. The latest inflation report, more than 10%. The biggest increase in that inflation report was gasoline.
So, as I said, we are seeing the factors for it, for oil prices coming up. We think that we're just in the process of ending driving season. Temperatures are still high. We should see some inventory buildup over the coming days. We've seen record production in the United States. And again, there's been this idea that somehow clean energy policies or energy transition policies are related. The president has been able to say the United States can do two things at the same time. Number one, accelerate the energy transition so that we're not as reliant on fossil fuels. At the same time, recognizing a transition takes time, and we need fossil fuels at the moment to power our economy and to power our families. So to do that, we're still looking at production in the United States. We're seeing record production in the United States. So there's nothing this administration is doing that is restricting production to the point that it's hurting the manufacturing side or the energy system. So we're seeing record production. We're seeing more production coming on. We've seen some curtailment out of Libya, out of the heartbreaking disaster of the floods there. So I think that as we come into the next several days, we're going to continue to monitor these prices very, very carefully and look at what our options are. I think we will see some reduction and some relief at the price is what we're hoping to see as we make this transition from summer into fall and seasonality plays into it. And we'll continue to monitor and see what we can do as we go forward.
I know we're just about out of time, but I wonder to what extent you remain in touch with the oil companies. There's been so much talk about the friction between this administration and drillers. You talked about record production levels, though. To what extent are you in touch on this and encouraging this?
Look, I'm not going to break any news by saying that the Biden administration and the oil companies are not in agreement on many issues. However, having said that, we're all adults and we have conversations to understand where it is. The president has been clear last year. We want to accelerate the energy transition. We want oil companies to be a part of the energy transition, of decarbonizing what they're doing and to invest in renewable energy. They know the energy system. They're probably as good as anyone else to do it. But at the same time, we've told them, the president has told them, you need to invest in America at a time of this energy transition. And I think that as we look at the facts, we're at record production. There's not much more that we can argue that the administration is restricting it or that prices are there because somehow we're doing something in the United States to restrict it. So we have to look at the domestic factors. We are in touch with the oil companies. I promise you, several people in the administration talk to them regularly, and we do the same thing with the international oil producers as well. And again, this is the United States. We can do both things at the same time. We don't have to only do one thing. And I think, again, with the economy as strong as it is at the moment, with the labor market as strong as it is, we have to manage the balance here of making sure that inflation doesn't cost American families. And that's what we are singularly focused on.
We're really glad you came over. Thanks for the update on all of these important issues. And glad to have you back from the G20. Amos Hochstein, many thanks for being with us here on Bloomberg.
Thanks for having me.
Anne-Marie, it reminds us that this is, and you know it as well as anyone, having spent as much time as you had covering oil and the energy markets, this is a global market. And this administration can only have so much of an impact. This country can only have so much.
One thing Amos does say that I think gets lost a lot when you speak to a lot of individuals as well on Capitol Hill is that the U.S. is the number one when it comes to production. So if Saudi Arabia does something, they're in the top three, but we are still number one. I think the issue is at the moment is that when you have Saudi Arabia and Russia working together to cut, which we thought was going to be a month, but now into 3 months, and then the IEA coming out and saying they see a significant disconnect and they see that we're going to be short in the market, then you have prices go up. And we have to see how much that actually trickles down, though, into gasoline prices.
Yeah, that's for sure. Don't be a stranger. Almost great to see you. Great to have you back, Anne-Marie Horduran. This is like a daily thing.
See you at 5 p.m.
Wow. I can't thank you enough. I'm Joe Matthew in Washington, and it's time to get you up to date. Nancy Lyons joins with World and National News from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Joe Biden's son, Hunter, has been indicted on federal charges that he purchased a firearm without disclosing he was unlawfully using drugs. The charges follow the collapse of a plea deal in which Hunter Biden agreed to plead guilty to 2 misdemeanor tax crimes and to acknowledge a firearms violation without a conviction through what is known as a diversion program. Former President Trump will not need to stand trial on election interference charges next month. Today, Fulton County Superior Court Judge Scott McAfee ruled that 2 of Trump's co-defendants will stand trial in October, but he severed the remaining 17 cases, including Trump's. District Attorney Fani Willis had argued the separate trials would be a logistical quagmire for the court system. Well, proceedings did become heated today during a pretrial hearing in Fulton County, Georgia. Scott Grubman, the attorney for Kenneth Chesbrough, accused the district attorney, Fani Willis, of lying. Judge Scott McAfee pushed back.
the fact that she got up here and lied to the court.
All right, Mr. Graham, I don't think we need to go down that road.
Your Honor, she lied to the court, and I apologize, and she defamed my
Mr. Graham, I've
co-counsel.
said it's over.
All right.
Judge McAfee says due to the speedy trial statute, jurors hearing the trial involving Kenneth Chesborough and Sidney Powell might need to be sworn in by November 5th. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. A number of key business stories. Right now, we begin with the Walt Disney Company. Sources tell Bloomberg Disney has held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. This, according to sources. Again, we've got Disney shares advancing now by 1.5%. The other big business story today, the ARM Holdings IPO. That stock now surging by 16.5%. We've got you covered on both ARM and Disney. Stay with Bloomberg for the very latest. Stocks are rallying today after some better than expected economic data today. Those reports reviving speculation that the Fed will be able to engineer a soft landing, even if it keeps rates higher for longer. Right now, we have got the S&P up 37, back above 4,500, 45.05 right now for the S&P 500 index, up by about 0.8%. Dow Jones Industrial Average up 361, up 1% right now. NASDAQ up 112, higher by 0.8%. We are trading close to session highs. 10-year yield 4.28%, with the 2-year yielding 4.99%. Spot gold up 0.1%, 19.09 the ounce. And West Texas Intermediate crude development there, with crude trading above $90 a barrel. Amos Hochstein is the White House senior advisor to President Biden for energy and investment. And right here on Sound On, he talked about what has been driving crude prices higher.
We have an economy that is strong, and we have a labor market that is strong, where wages are higher than costs. And we want, when that happens, when you have a strong economy, and stronger than people had expected to have at this point, as resilient as it has, then you also have demand growth. So there is stronger demand when you have stronger manufacturing and stronger productivity. It comes with demand growth.
And you can hear more of the conversation on the Sound On podcast. You can download it wherever you get your podcasts. Delta has reduced its expectations for third quarter profit because of higher fuel prices. Delta shares now down by just about 0.3%. Again, we've got the ARM IPO today, and the stock up by 15.8%. And Disney said to be holding initial talks on the sale of ABC to Nexstar. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Always trying to keep you up to date here. Let's do it right now with a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Oh, I guess it is.
I do have some news for you, though.
Thank you.
Share it?
Sure.
Because we are right now about 9 hours and 15 minutes away from a pretty important deadline for the big three automakers in Detroit. That is when the current contract expires. They are trying to get an agreement with the United Auto Workers Union, and we just actually had a letter shared by the CEO of GM, Mary Barra. Mm-hmm. GM is now offering a 20% raise to the UAW over the life of the contract. Their previous offer was an 18% wage increase. The offer would not increase healthcare premiums for workers and offers a 25% increase to retirement healthcare plan.
Well, all right.
So I guess it becomes a question of, does that seem like enough for
and
the UAW?
And the ask was 46% wages, 32-hour work week, right? Over the course of the contract?
Initially, yes. They had then brought that down to 40%. Okay. So still much higher than what GM has on the table here.
What they're asking for, to be clear.
But getting closer together, perhaps?
Apologies to Nancy Lyons.
You just really wanted to hear from her,
brains are scrambled.
She's the best.
Sure, she is. Nancy, we'll see you in a moment. All right. What we are going to do, though, is go to Detroit, especially with this breaking news. How did you time that? That was incredible. Let's bring in our Detroit bureau chief for more on this. If only I had it in front of me here, ladies and gentlemen. Double printed paper. David Welch has been a voice of reason on this and helping us understand what's happening here with the contract proposals. Bloomberg Detroit bureau chief. David, these headlines are pretty important here. Is GM trying to let us all know how generous its offer is before a potential strike happens tonight?
Well, they are. Look, a lot's been going on here in public that we don't normally see with union negotiations, and that was started by the union. I think what the companies realize is that they've got a president with big demands, with pretty hot rhetoric, getting the rank and file all fired up to go out on strike. And with the companies, and Ford's been doing this all along, they want the workers to know is, hey, there's some really rich offers on the table here. And do you want to go out on strike and survive on strike pay for weeks or a month or more, or do you want to just take this? And look, union leadership has to take any tentative agreement to those workers for a vote. But if there's a good offer out there and workers are on strike for weeks, workers don't particularly enjoy being on a picket line and making meager strike pay. Does that start to put pressure on union leadership to settle if the rank and file is starting to like more and more of what they see released by the companies to the media? So I think that's the pressure game that's going on. It won't work immediately, but it could work over time.
And I'm reminded by our other car guy. We have a lot of car guys here at Bloomberg. David Welch is one of the best. Matt Miller is a big car guy, too.
Yes.
He reminded me that the union had brought down their demand even further to 36% increase.
Okay.
So, again, still above what GM is offering here. David Welch, as we talk about, what actually a strike could look like if we get past that deadline today and there's no agreements, they're going to do this in a very specific way, right? This isn't just all 150,000 of them-ish walking out at the same time for an extended period of time. They're going to be very targeted and, determined in what they do here.
That's right. What they're going to do is they're going to strike select plants, and they haven't told us where those plants are or even what kind of plants they would be. But they're not going to march the entire 150,000 person workforce of the three companies out all at once. One strategy here is save the strike fund. They've got, I think, $850 million in there that would last about 7 weeks if everybody went out at all three companies. They don't want to burn that up. Plus, you've got Blue Cross Blue Shield workers in Detroit on strike right now. They draw from that same fund, that same strike fund. So there are other workers besides the auto workers. So they can't run it down to zero. So arguably, three companies could strike for even less than the 7 weeks. That's just back of the envelope math. So they want to kind of trot it out. And also, it is a way for the union, if they strike a key plant here, say a truck plant that makes very profitable vehicles, and they don't get what they want, then they maybe add another plant. They can kind of keep ratcheting up the heat, ratcheting up the pressure on management to cut a deal. So they can march their way through this for a while, and by going 1, 2, 3 plants at a time, they can also save a lot of their money and stretch the entire drama out for months.
Let's just listen quickly to Sean Fain from his session last evening. He's going to talk again, I guess, at 10 o'clock, 2 hours before the deadline. Here's how he put it less than 24 hours ago.
All three companies continue to reject all of our proposals for retirement security. For the first time in our history, we may strike all three of the big three at once.
I don't know if you could hear that. It sounded super quiet to me. We're talking about striking all three of the big three at once. David, is that what you say the night before the deadline, or does he mean it?
Bit of both. I mean, I do think there's there's an element of trying to get company negotiators on their heels and worried about a big strike. And there's also just preparing workers at all three companies to go out. The key part of that is the retiree benefits. He wants to reinstate pensions. Right now, anyone hired after 2007 has a 401k and retiree health care. The companies hate that. Arguably, that's what played a big role in driving General Motors and Chrysler into bankruptcy over a decade ago. They want no part of that.
Right.
And, this is the big question for the entire set of negotiations. Walter Reuther did not get retiree health care his first request, the first time he put that in. It took at least one more negotiation to get it. He was the legendary president of the union. What the question here is, will Sean Fain take a tentative agreement to the workers that doesn't have that in there? Is that what the bluster is? The rhetoric, of course, the fiery kind of class warfare stuff, talking about CEO pay, that's a lot of his rhetoric, but is he going to take an agreement to his membership that doesn't have those retiree benefits in there? That's a big question. Because a lot of people think that the workers, if they're given a big enough raise, they would pass an agreement that doesn't have that in there. So it comes down to what does Sean and his negotiators, what are they going to take to the membership?
David Welch, Bloomberg's Detroit bureau chief. I'm guessing you're going to have a busy night here. Thanks for all your great reporting, David. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. First day out for ARM Holdings. Stock now up by 15.3%. Its trading day debut, and it did raise $4.87 billion in the year's biggest initial public offering. The chip designer, owned by SoftBank Group, sold 95.5 million American depository shares at the top of a marketed range of $47 to $51 apiece. And again, right now we've got ARM trading at 58.71. It is up by 15.1%. And Bloomberg Radio caught up with ARM CEO Renee Haas on the floor of the New York Stock Exchange.
AI is everywhere, and if it's your edge device like the Assistant or the Alexa or your autonomous vehicle, that's all AI. And now we're seeing it in the cloud and the data center with all the growth with NVIDIA. NVIDIA announcing one of their newest products, Grace Hopper, that is based on ARM. So ARM is everywhere relative to AI.
And you can hear more of that conversation on the Bloomberg Technology Podcast. You can download it wherever you get your podcasts. Automakers very much in focus ahead of tonight's strike deadline. UAW preparing to launch a simultaneous stand-up strike against all three Detroit automakers if agreements are not reached by midnight tonight. Our Nancy Lyons will have more on the automakers coming up in just a moment. Ford shares, though, they're trading lower now by 0.4%. General Motors down now also by 0.4%. 0.7%. Stellantis, the parent of Fiat and Jeep, among other brands, lower by 0.7%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
Let's bring you up to date on world and national news now. I mean it this time. Nancy Lyons, we've been waiting for you in the Bloomberg 99.1 newsroom in Washington. By God, here she is.
Thanks, Joe. Well, the United Auto Workers Union is ready to strike against all three Detroit automakers if a deal is not reached by midnight tonight. Bloomberg's Detroit bureau chief David Welch says UAW President Shawn Fain is looking at a so-called targeted strike.
One strategy could be to shut down engine plants that would effectively shut down all of the assembly plants. But that would be the same thing as a national strike very quickly anyway. It's what they call a bottleneck strike. He could do something else like strike that's where most of the profits are made for these three companies. So by shutting down just a few plants, he does a pretty severe amount of financial damage to earnings.
Bloomberg's David Welch in Detroit. The UAW is at odds with the companies over wage increases, pensions, and job protections. Hunter Biden has been indicted on 3 federal gun charges. We get details from Bloomberg's Steve Rappaport.
The Justice Department alleges that Hunter Biden purchased a firearm without disclosing that he was unlawfully using drugs. The indictment follows the collapse of a deal in July that allowed the president's son to plead guilty to a pair of misdemeanor tax charges and acknowledge the firearms violation without a conviction. The plea bargain fell apart at the last minute when a judge questioned the terms and refused to sign off on it. House Speaker Kevin McCarthy this week instructed a House committee to open an impeachment inquiry against President Biden, based in large part on Hunter Biden's business dealings. Steve Rappaport, Bloomberg Radio.
President Biden is speaking this afternoon about the potential fallout if there's a government shutdown. White House aides say Biden will talk about the impact of federal budget cuts with less than 3 weeks before government funding expires. Some House Republicans are demanding a spending cut of about $120 billion before approving the budget. The White House and Senate leaders have rejected that demand. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. And you should know you can get the latest news now whenever you want it from Bloomberg. It's called Bloomberg News Now, the top stories from our global team of reporters with just the click of a mouse. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, anywhere you get your podcasts as well. And, don't forget to subscribe to the Sound On podcast. Now, Kaylee Lyons, we know for a fact that this Congress is having trouble producing anything, and there's a good chance that we're going to go into a government shutdown.
Right.
Contrast that with the phenomenon that is the Renaissance Tour. That's Beyonce, right?
That is Beyonce.
Taylor Swift is Eras.
Is Taylor Swift,
And they've been called out by the Fed for being economic stimulants.
Yes, to whatever city they go to.
But those tours are ending, right? Or they're going somewhere else, and we're not going to have the stimulus.
Abroad, yes.
Either way, Congresswoman Sidney Kamlager Dove of California, she's seen the Renaissance, and she took this message to the House floor. The contrast between the two.
Both Beyonce and Taylor Swift sold out shows at SoFi Stadium in Los Angeles, where hundreds of thousands of my constituents celebrated with them, and where Swifties and the Beehive showed their power. The Renaissance and Eras tours are stimulating economies across this country, keeping businesses open and keeping hearts healthy. Everything this Congress is not doing. Even more than that, these concerts create safe spaces for women and the LGBTQ community. We must continue to support the arts through our work in Congress, not by shutting down the government, to ensure that future generations of female artists can share their gifts with the world.
See that? But now they're done, so we're just left with Congress.
Unfortunately.
Look at the replies here, by the way, from our friends and producers. Nancy's daughter went to both of them.
Mm-hmm.
Brendan is heading to New Orleans to catch Beyonce. Is that the one? I hope you have fun, Brendan. We need to bring them in and find out. Have you seen either of these?
I haven't.
No.
I feel like a terrible millennial for that reason.
Well, I don't think you are, but I'm sorry that you missed the shows. At least we have the economic benefits of them.
Yep.
Kaylee, great to spend time with you this hour. We'll meet you later on Balance of Power. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Hello, 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 everyone. Good afternoon. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It's Thursday, September 14th, 2023. I'm Tim Stenivek, along with my co-host, Bloomberg TV correspondent Simone Foxman, in for Carol Masser once again this afternoon. Simone, stocks, look at this. The Dow above 4,500 right now. Excuse me, the S&P 500 above 4,500 right now, up more than 0.9%.
Well, we're back to where we were really at the start of the month. So I don't know that it really we should consider this a huge turnaround in optimism, but hey, it's a green day, right?
Yeah, it really is. Those strong economic reports earlier this morning are reviving speculation that the Fed is going to really engineer a soft landing, even if it keeps interest rates higher for longer. We're going to have more on that with Abigail Doolittle and Michael McKee in just a few minutes. And then we got a big guest today.
I'm so excited.
I'm so excited.
I was a former hedge fund reporter, so this is so exciting to me.
Legendary short seller and longtime China bear Jim Chanos is going to stop by. We're looking forward to speaking to him, not just about China and what he's shorting, but much more, Simone.
We'll also speak about pizza. We speak to the CEO.
I believe it's
COO, excuse me.
Pizza.
Yeah. I'm sorry.
Does everyone know that's Little Caesars? Do they still do that?
I think they do.
I think so.
My American cultural references are completely out of whack.
Just
moved back
for quite a few
few months ago. But we will speak to the COO of the third largest pizza chain in the world.
We're also going to check in with the National Director of U.S. Retail at Colliers on the state of retail, this after this morning's hotter than expected report. And then in the magazine, feature, the cover story, it's all about meeting the parents.
Yeah, Sam Bankman-Fried's parents, that is. A new investigation revealing how they helped shape their SBF's worldview.
Well, let's take a look at shares of Disney. They're higher right now by a little less than 1%. The company said Bloomberg News reporting, has been said to hold initial talks on the sale of ABC to Nexstar. Exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. That's according to people familiar with the discussions. We should note the talks are preliminary. They haven't involved a specific valuation. That's according to one of the people who asked not to be named because the discussions aren't public. Nexstar would only be interested in at the right price. We're going to have much more on this breaking story throughout the program today. All of this to come. We begin, though, by taking a look at what the equity markets are doing. And we're going to do that with our TV colleagues. They are coming up in just a minute. Bloomberg's Countdown to the Close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Romaine Bostick alongside Bonnie Quinn. We're joined right now by our colleagues Tim Stenivek and Simone Foxman. Simone filling in today for Carol Masser, our global simulcast here. As we keep an eye here on the broader markets, Tim, the big news, if you go through the Bloomberg terminal, the most read stories about Christine Lagarde and the ECB hiking rates for 10 straight times, about the latest data out of the Fed, about Disney, about Sam Bankman-Fried. What are you looking at, Tim?
I'm looking at the sky. I'm looking at UFOs.
UFOs.
Oh, yeah. They're not called that anymore, Tim.
I know, that's true. I have to make sure I get this right.
That's offensive, I think.
UAPs, unidentified anomalous phenomena. Romaine, do you believe in I'm not going to say it right, guys.
Yeah, be
UAPs.
careful.
Do you believe in UAPs?
You have to be sensitive. Haven't you take sensitivity training here?
I have not taken the
UAP
UAP
You can't offend these
yet.
otherworldly creatures. It'll probably take us all over. I mean, I don't know if I believe or not. I mean, is there any truth to this? Why are we talking about this, Tim?
Well, the interesting bit is that NASA appointed a research director to oversee its effort investigating sightings of these UAPs. But they're not going to name exactly who this is because of potential security.
Yes, exactly. Does he even exist?
Does he even exist? I think that's him in the suit right there. I guess, okay, fine, whatever. I guess this is what NASA is designed to do. And I guess if things are out there, and who knows, they might be, you need somebody to maybe keep watch on their skies.
Well, they might be anomalous. And that would be a terrible thing.
Yeah.
I mean, is it X-Files we're looking at here or something more like Resident Alien? We'd have to see. But you know where we won't be able to watch it is on ABC, potentially, unless you're a Nexstar customer, because it looks like ABC might be getting sold to Nexstar, or Chris Palmieri and the team just reporting that out now, that the whole network might get sold off by Disney, not just the local stations, which had been in the mix before. Now in the network and all of the local stations could be getting sold to Nexstar. We don't have a price or anything like that yet, but it wouldn't even be too difficult regulatory-wise.
Yeah, this news crossed the wire a little while ago, and again, it's based on, Bloomberg reporting, citing people familiar with the situation. But I think the idea that our reporting is basically saying these talks have already been held. And so we've gone from just, okay, this might be an idea, that Iger apparently is now actively shopping this around. Whether he gets the price that he wants, I guess that remains to be seen.
Yeah, Nexstar, we should note, according to people who we did not identify because the discussions aren't public, would only be interested in this at the right price, Simone. I think the question is what does this do to Disney in terms of assets that they do want to shed, in terms of legacy linear TV networks that they want to shed, and then perhaps the impact that has on the direct-to-consumer streaming division, which we know is really what the company's focusing on.
Well, and ultimately they're going to need content, right? It has to come from somewhere. So even if they want to become this, direct-to-consumer business, if you give away ABC, where do you get all your stuff that you're showing to consumers?
But also, we just had this blackout, right? Charter just had this huge tiff, let's say, with Disney. I don't want to call it a fight, but, there was a blackout there for several days, and it had to pay up to get these assets back. And does this mean now that Charter is going to be annoyed because suddenly Disney doesn't have ABC to offer, and how does that all work? It sounds complicated to me.
I mean, I think that's the big picture here, is the idea that in the future, these traditional media companies are just going to bypass the middle people, right? The Charters, the Comcasts, and go direct to consumer. Part of that deal did include Charter, of course, offering some of the company's direct-to-consumer offerings. We're going to keep talking about this throughout the program today. You guys have a great program. We have a great program. Let's check back in with each other in just under an hour when we all come back for Beyond the Bell. It happens weekdays at the U.S. market close. 4 p.m., we're going to take you through today's market close. Market news to get to this afternoon. U.S. retail sales and producer prices both rising in August by more than forecast. And then, of course, there's ARM, the chip designer ARM Holdings, jumping as much as $58 on Thursday after its IPO priced at $51. It's even higher at this point, I should say. Energy also, West Texas Intermediate oil hitting $90 a barrel. Then we have what's going on over in Europe. The ECB raising rates for the 10th consecutive time as President Lagarde signaled a shift in gear that could mean the peak has been reached. We got a great roundtable with us this afternoon. Michael McKee is international economics and policy correspondent at Bloomberg News. Abigail Doolittle is markets reporter for Bloomberg News, joins us here in the Bloomberg Interactive Brokers studio. Mike, I want to start with you. Sort of take us through the big highlights of the day today, because we are parsing through a lot of data.
Well, the highlight of the day is oil. Not only is Abigail and everybody on the market side watching the price of oil, we're watching the effect of oil. Retail sales boosted by a 5.2% rise in gasoline prices during the month of August. And we saw PPI rise because the PPI for goods rose 2%, and 60% of that, according to the government, was oil prices. So oil prices having an effect on sales and on inflation, which is not necessarily good news. The good news in the retail sales numbers is that we did continue to spend, not as much, but we continued to spend. And if you take out oil prices, it was kind of a back-to-school season month in August, which is exactly what you'd expect. Clothing store sales were up 9/10. Personal care, I guess everybody went out and got their back-to-school haircuts.
I did.
Yeah, and you look great too,
Thank
by the
you,
way.
Mike. That's nice.
And so it's hard to make a case that things are going to be bad going forward based on these retail sales numbers, but we don't know what longer-term impact continually rising oil prices would have on people's spending plans.
Right, and you could see, some of this impact of higher oil prices already feeding through, the airlines. We had Delta today coming out and talking about how it's revising up its projections for fuel costs, et cetera. But, one of the things that kind of struck me from this report was even retail sales ex-auto, ex-gasoline, they came in a little hotter than expected. I mean, 0.2% isn't much on a month-on-month basis, but it's something like slightly better, Mike. I mean, what do you make of that? Was that inconsistent in any way?
Well, the thing that you want to look at is what they call the retail sales control group, where you take out the auto and gas, and you also take out home supplies, because in terms of autos, a lot of the auto sales are fleet sales. Those get recorded as business investment in the GDP accounts, and same with housing and a lot of the building material stories. You look at the retail sales control group, it was up only 0.1%, but the forecast was for a decline of 0.1%. So you take the good news where you can get it, and it's hard to make an overall case one way or the other, because you have to realize that every month there's a different mix of spending, what people spend money on, and probably the home builder, the home supply stores did really well in May and June when you were planting your garden. So right now it's still relatively good.
My garden is only in my head at this point right now. It's the only garden that I'm focused on. Abigail, I'm going to bring you in just a sec, but first, real quick, Mike, what does all this mean for the Federal Reserve?
Nothing.
Okay, there we go.
Now that you wanted real quick, I mean, the Fed is pretty much going to do what it's going to do next week, because they've already seen enough data to know that.
But what about November?
The situation hasn't changed a lot. November, they're going to have more data, and that's what they're going to be looking for. I think one reason people were surprised by the ECB today was because the ECB had indicated they wouldn't tell people what they were going to do, and so a case was made by rising inflation and slowing growth for them to go one way or the other, and they chose to fight the inflation side because that's their mandate, and that's what the Fed will do.
Okay, Abigail Doolittle, markets reporter for Bloomberg TV. Give us an idea of the oil story that you're watching today.
So I think that Mike is right on in terms of oil being the biggest factor. I would argue, though, and this is just speculation on my part, that the Fed right now is watching oil very closely. We've seen it basically go from $70 a barrel to above 90. From a technical chart standpoint, it's probably confirmed to go above 100. And, you know, the Fed has really not backed off of hiking. Jerome Powell explicitly at one point said that cuts are years away, even though our world interest rate probability suggests otherwise next year, that there could be 1% of cuts. So the more oil goes up, I would argue the more that they are going to see this as a data point to think about the 1970s sticky inflation. If gasoline continues to rise up another 2% today in terms of what's traded, but at the pump, and that slows spending, that could be an issue. Now, we're certainly not seeing anything like that right now with retail sales. To Mike's point, there's going to be a lot of data between now and November. Will they indicate anything along those lines next week in terms of just like color? Probably unlikely, but you never know. I feel like every now and then there's sort of a candid moment with Jerome Powell, and we have seen oil go up tremendously in a very short period of time here.
Yeah, can you talk to me a little bit about what's driving the moves in oil right now? Because, you know, you look at some of the analysis that's come out for the better part of a year, and the true oil analysts have been saying we're going to have a tight market at the end of the year, and only now do we actually see that reflected in the numbers.
So I think that it has to do, from a fundamental perspective, exactly what you're talking about, the fact that OPEC Plus has been pretty hard in terms of their production cuts, sticking with it. I think that there's also the hope that there's not going to be a recession, that there is going to be a soft landing here in the U.S. So if that's the case, you're going to see oil traders bid it up. Now, something I would point out, China is not in the best position. I actually know somebody who's coming back from a trip in China this week, a real estate investor. He said it's so much worse there than he'd possibly expected. I mean, if I actually use the language in my text, I mean, it's sort of nuts. So China is the world's largest user of natural resources. That could create a real problem, but I think ahead of that, we do see oil spike higher.
I should mention we're going to speak with Jim Chanos, who just presented some testimony to the House Committee on the Chinese Communist Party. And he has been a China bear for a long time. But we'll see what he thinks. Is it, you know, how much worse? I suspect he'll say it's worse than expected.
Yeah, well, I was shocked by the language from this friend. I mean, he's actually a big-time real estate investor. He invests a lot of money there in real estate, and he said it's so much worse than anything anybody can expect. Wow. I mean, he was calling it nutso, literally.
That's what I've been reading. You hear a lot of people say it's not that bad. China's still a big economy. They'll be growing okay. And then I read these things from people who say, well, I just came back from China.
And it's
and it's not what you think.
Yeah, and something he was talking about was he said that the real problem is that the government does not know what to do, and that there are pockets of unrest. That is, people, I think there's like a 25% unemployment issue with young people there. That the last thing that they want are these pockets of unrest. He said it's a bad situation.
And we don't even know what the unemployment rate is for young people
exactly.
Because,
I mean, 25%.
Because the government isn't giving out that data anymore.
Mm-hmm.
So, Mike, when we talk about oil, when we talk about China, the Federal Reserve only has so much control when it comes to oil supply. And by so much control, I mean no control over oil supply. That's a real issue.
It is a real issue. And that was what happened in the 1970s. And in the 1970s, they decided to accommodate higher oil prices by keeping interest rates low so that you wouldn't have to pay more for other things. And we all saw how that worked out. So they're not going to do that again. And this may begin to bite because they're not going to lower interest rates unless we go into recession. But if it just means that you have less money to spend on other things because you have to put gas in the car, that's what's going to happen. And they can't do anything about that. And they can raise interest rates all they want, but it's not going to bring down the price of gas.
I have to shift gears here because we have to talk about what's happening with the ARM IPO.
Oh, yes.
Such a bounce in the share price today. This priced late yesterday while we were on the air at $51 per share, but we're now up at over $58 a share. Abigail, I mean, what's been the reaction you've heard from folks you speak to?
So I think that people are trying to be positive about this, and certainly it is a positive. It was priced at 51. They were thinking about 52, 53, but I know that there was this idea that they didn't want to be greedy. They wanted to make sure the IPO was successful, and it is successful, up 14%. However, when I think about the last batch of IPOs back in 2020, 2021, we had some of these stocks, they were basically doubling on the day. Airbnb, Bumble, up huge amounts. So relative to that, I would call this 14% gain subdued, if I'm allowed to do that. On the other hand, it creates a nice...
you can do whatever you want, Abigail.
It creates a nice runway for Instacart next week, and there's an automated marketing company that's coming due next week, or coming public next week. I think that the bigger question is, does this really open the window where other corporations are watching and they're like, okay, this is really healthy, we can cash in now? I think to some degree it does. It is going to depend, though, on earnings season, the oil picture, inflation, the Fed, but it would be very helpful given the fact that it's been a drought up until now.
I think the big question is, not just what happens today, but what happens for the first month and the next few months and what that means.
Yeah, I don't disagree with you on that, because I think that ARM right now, more so than even telling us about Instacart, I think Instacart and the automated company, they're all going to kind of be batched together to see the health, and it's more about 2024. Can some of these big tech companies go public then? Are they going to feel secure doing that?
Hey, Mike, 30 seconds just on initial jobless claims today, coming in at 220,000.
Nothing. I mean, it's a tight labor market. People are not losing jobs at this point. And so it does suggest that companies at least see a long runway before they would need to cut people, or they don't see a real downturn. They need to keep the people they have.
Wow, we just accomplished a lot, you guys, in a very short time. I love it.
I was going to announce that I'm going to go public and everybody can buy shares in me. Do you think that would work?
That's like a very 2021 thing to do. That's like,
You missed your window, Mike.
Yeah. Mike, just wait for the, next sort of round of stimulus.
I don't pay a lot of, my dividends are very small.
Good to know. That's Michael McKee, International Economics and Policy Correspondent at Bloomberg News. Abigail Doolittle, Markets Reporter for Bloomberg News, with us here.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advancing. ARM Holdings up by 14.7%. And this update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Story we're keeping an eye on for you. Sources tell Bloomberg Disney, who's held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. We've got Disney up now by 1.1%. S&P 500 index up 41 points, up by about 0.9%. Dow Industrials up 369. That is a gain of 1.1%. NASDAQ in the green as well, up 131 points, up by just about 1%. Again, first day of trading for ARM Holdings. That stock rallying now by 14.4%. 10-year yield 4.28% with a 2-year, 5.01%. Spot gold up 0.1%, 19.09 the ounce, and West Texas Intermediate crude up 2.1%, 90.40 a barrel on WTI. European Central Bank today raised rates for the 10th consecutive time as President Christine Lagarde signaled a shift in gear that could mean the peak has been reached. And in the U.S., Federal Reserve policymakers will be meeting next week with a decision on Wednesday. Lori Brignac is head of global liquidity at Invesco Advisors. And on Bloomberg Television this morning, she talked about the environment for central bankers on both sides of the Atlantic.
We've seen improvement in the inflation number. We are starting to see, growth slowing. But listen, at the end of the day, it's not happening as quick as they want it to. And so they can't afford to change the rhetoric from the hawkish stance that they find themselves. So, we actually think that's the appropriate policy, where they're at a hawkish pause, effectively.
And you can hear more of the conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Adobe reports after the close of trading today, shares up now by 0.2%. ARM Holdings first day out up now by 14.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. We've been talking about it throughout the program, throughout the day. U.S. retail sales, also producer prices, both rising last month by more than forecast, driven higher by fuel costs that risk tempering household spending and keeping inflation elevated. The reports, along with consumer inflation data on yesterday that showed an underlying price measure that rose more than forecast last month, they altogether indicate that U.S. households are feeling the impact from higher costs. That said, consumers have remained remarkably resilient when it comes to these headwinds. Anji Solanki is National Director of U.S. Retail at the global real estate services firm Colliers. She joins us on Zoom from San Francisco. Anji, we love it when you join us to give us an idea of what's going on in your world. How are you?
I'm great. Thanks for having me again.
Yeah, thanks for coming back. So what are you seeing across your portfolio, across the clients you're speaking to? What are you seeing when it comes to retail?
It's really interesting because we are seeing, the conservative numbers in terms of spend. Although, core retail for the month of August was up just by 0.1%, so not significant. So to your earlier comment that things are slowing down a little bit. If we look at where the increases are, they're still layered in with inflation. We're going to see a little bit of a, call it slowdown. Consumers are very cautious. They're being cautious because they're not buying impulse any longer. So we're seeing, consumers going into stores, they're browsing a bit more. They're not buying on the impulse or the discretionary items. So there's a bit of a slowdown. It's really buying for purpose.
How do you measure impulsiveness?
Yeah, it's a great comment, right? So I think that, if you look at what we've seen in, call it that revenge spend back in 2021 and 2022, I think people are starting to realize that we need to really take a pause, slow down, think about what our real necessities are and needs. Prices are increasing at the grocery store. Prices are increasing elsewhere in food spend. So I think people are saying, hey, we need to take a pause, not go in and start to, look at the shelves that hit us right when we walk in to the front door and say, hey, we may not need all these, call it accessories or items that are just not purposeful anymore.
What are you seeing on the food front? Because it looks like food inflation is slowing a little bit, but maybe not as much as the consumer would certainly welcome. How are they going out and dining?
So it's interesting to see. I think we're seeing, the basket spend in groceries start to slow down. It's a smaller basket size. And what that really translates to is that we're starting to see an uptick in spend in F&B. So these are like eating out at, quick service restaurants. So your Chick-fil-A's, your Raising Cane's, your, F&B that's just easy to get to. It's convenient. It's somewhat affordable because you can still get a full meal for four or a family of four for less than what you may spend at the grocery store. So we are seeing a nice healthy uptick year over year in our, in the quick service side in F&B. It's almost by 14%. So it's a pretty healthy number.
Wow, that's more than I anticipated. And because it seemed like the likes of, when you looked at the earnings that we heard, maybe last month and in the month of July, that folks who could cater to a broader subset of the public, your McDonald's, for example, were doing better than the, higher end food plays. Does that jibe with what you're seeing now?
We are, because if you stop and think about the different type of, call it emerging fast casual restaurants that are coming out, they're opening quite a bit of locations throughout the U.S. And these are companies such as, Dave's Hot Chicken. As I mentioned, Chick-fil-A continues to look for locations and they're opening. Raising Cane's is starting to open everywhere. They just opened one in New York and in downtown. So they are bullish. I think their price point is very approachable. And because of that, and it's it's good quality food as well, you're going to still see consumers go, okay, I have the ability to still spend outside of the grocery stores, and I have the opportunity to visit all these different types of fast casual restaurants. So I don't see a slowdown there at all.
That's interesting. What about a slowdown when it comes to sort of competition here? You just mentioned so many different companies. A couple of those are relatively new upstarts like Dave's Hot Chicken. Is there a concern? And I know this isn't necessarily your coverage area, but you have such a good view at Colliers with what you're doing there and across the portfolio, across the real estate landscape. Is there a chance that consumers start to get bored of all the chicken?
I know. I personally, at first I couldn't even realize that, is there enough chicken out there first and foremost? But
there have been issues with supply chains in the past, but I think we're past those.
Sure. 100%. So I think what we're seeing here is that people want variety. People want, even though your base is chicken, right? There's still a unique, I think, offering from all these different brands. And so with that, I think you're still going to see people go, well, let me try this new concept out, and let them be the ones to say, hey, I may enjoy it, but maybe my kids may not, and they want Chick-fil-A. Well, what you've just done here is one person's going to possibly Dave's Hot Chicken, the other one's going to go to Raising Cane's. They're going to say, hey, Mom and Dad, take me to the other one. It's close by. So what you're starting to see is that people are saying, hey, I'm okay if it's not a far drive to go to one or two different, fast casual restaurants because my kids really want that specific brand, and I want a different brand for other reasons. People are still going to do it. I think they're close enough where it's convenient and they'll make it happen. So I just see that, these emerging brands, these newer brands are still going to continue to expand.
One of the things that some folks, especially I think of credit rating agency Moody's, has called out is that there could be a rise in retailer bankruptcies upcoming. And we've seen this sort of start to trickle in slowly with some smaller players. I imagine one of the first things they would do is get behind on the rent. Where are there any pockets in which you're seeing this actually come to fruition?
I think really when the pandemic occurred, it was kind of a correction, right, in the market in terms of landlords and retailers were really working in partnership to make sure that they could be healthy going forward. Now, as we saw this significant increase in sales in the past years, and we're now starting to see, call it more of, I would say, a stabilization, right? So year over year, past 10 years, retail has seen a pretty healthy growth. And that's around about, say, 4%, 4 to 5%. Now, you do layer in inflation, but the good news is inflation's coming down. So with that, what we're seeing going forward is we actually are forecasting more store openings than actual store closings. And with the store closings, it's, you can call it bankruptcy, you can call it right sizing of portfolios. It's really allowing the retailer to be much more, focused around optimizing their portfolio. So it's healthy to have store closures in certain markets. And that could be purely because of either, operational items, labor costs, maybe their location wasn't in a prominent part of that market or in the right area from a market share perspective. So I think we're beyond that. It's really more looking at, and of course, these are going to be retailers that are much more, focused around their store growth and new customer growth versus those that are just unable to kind of move forward. Those retailers that have that type of struggle, we'll definitely see them, cross over into a complete bankruptcy and or portfolio closure of all their stores. And that's purely because they just haven't reinvested in their brand.
Angie, are we at this point back to that 2019 conversation of quote unquote experiential? Brick and mortar retailers doing what they can do to get people into their stores, providing experiences that they can't provide online?
100%. I mean, what's really interesting is we're seeing a pattern now with online sales starting to stabilize, and we don't see this, kind of significant swing that all sales are, being channeled through online. I think it's healthy to have both online as well as brick and mortar for retailers because, people want that convenience to shop and how they want to shop. But going back to your question, what we're really looking at here is, there's the experiential that's occurring right now. We're seeing that in a whole host of different, venues, if you want to call it. So, for example, Panera has their, fully digital location. So there's no in-store or there's no seating inside, which is really cool. I mean, it's great to have that.
It's a really interesting concept seeing these smaller stores open up that are for like delivery or takeout only. Angie Solanki is National Director of U.S. Retail at the global real estate services firm Colliers, joining us this afternoon on Zoom from San Francisco. This is Bloomberg. Well, people familiar with, pop culture might know the reference in this song. The reason we're talking about this or hearing this is Walt Disney, according to Bloomberg News, has held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. That's according to people familiar with the discussions. We got with us right now Bloomberg News entertainment reporter Chris Palmieri in our LA bureau. Also with us, we have Bloomberg Wall Street Week host David Weston. He's in the Interactive Brokers studio with us right now. David was former president of ABC News from 1997 through 2010, and before that, he was president of the ABC Television Network and general counsel of the parent company, Capital Cities ABC. Good to have you both with us. Chris, I want to start with you. Just give us the news here and what we know so far.
Well, there's some interested parties now in buying ABC, the network, and its 8 local stations, which are big markets, Los Angeles, ABC, and in New York, for example. And so it's Nexstar, which is the largest owner of local stations, is one of the parties that's held preliminary talks. We also have heard that Byron Allen, who owns the Weather Channel and a bunch of other local stations, has expressed interest as well. So we're far from a deal, it seems. Disney seems to have trouble making up its mind whether it really wants to go forward with this, but there are people interested.
Chris, can you talk about how likely anything like this would be to go through as well? I mean, we've seen an FTC that's incredibly reactive, I suppose, proactive at the moment. I mean, is antitrust kind of a concern here, or is that something?
Big concern. I mean, they essentially didn't let the acquisition of a local station owner, Tegna, go through earlier this year. That was a sale to private equity. So really no traditional sort of overlap and antitrust issues. Whether that would be a cause. I mean, if you had an ABC would in this scenario with Nexstar, for example, own CBS affiliates and NBC affiliates, Fox affiliates, whether all those those networks would be happy about being owned by ABC remains to be seen. So, yeah, that's a big concern.
I want to bring in David Weston, host of Bloomberg Wall Street Week. As I mentioned, former president of ABC News from 1997 through 2010. Spent years also as president of the ABC television network. David, you've spent a lot of time at ABC, spent a lot of time at Disney. If this were to go through, would it be the end of an era?
Yeah, but that era may have ended anyway. I mean, streaming sort of has changed an awful lot of eras, and I think to some extent all the media companies are trying to figure out what the new era is, not whether we're going to continue the old one. I mean, look at the bundle that's gone away. I must say, I'm not shocked that they're thinking about it. To say they're thinking about it is not to say they're going to do it. When Bob gave that interview and said everything's on the table, and everybody was, oh my goodness, how could he say that? Well, he wouldn't be doing his job if he weren't willing to consider everything, because I think the really turmoil and upset in the media business is just that profound. And if you're a CEO, you should be looking at all the options. So it doesn't surprise me to look at it. It would be quite a big deal, and there'd be a lot of complexity to it. But you know, if it makes business sense, you can get past a lot of complexity.
Hey, David, you said you're not surprised that this is something, you know, Disney may be looking at. Are you surprised it's something that they may be looking at with Nexstar specifically?
Well, it depends on whether their check can clear and how big the check is, right? I mean, let's be frank. This is business. This is not personal, and you'd want that out of any CEO and any board of directors. They're taking a look at what makes sense of our business point of view, and they have to assess things like what are the growth potential for the assets that they're thinking about getting rid of, whatever those assets are, and also are they likely to be of more value in somebody else's hands than in their hands, or is it at least likely that the other person will perceive that they're of more value than they would be in Disney's hands? So those are the things you have to go through.
Chris, in terms of the Disney's push to streaming, not just with Hulu, but of course Disney Plus, ESPN Plus, and the like, how important is this division to that, or is it, since it's live news and local stations, not that important?
Well, Iger has indicated it's not that important. You certainly could make an argument that it's to keep it. I mean, it is profitable at this point. You have so much synergies you can do. There's big sporting events that run on ABC and ESPN. Obviously, the shows that starred or run on ABC can also run on Hulu and other streaming services. So this has been the model that all of these big media companies have been doing, is sort of putting the same content on different platforms. But I think Bob has indicated that traditional media company model, which is shrinking so sharply, it might be just better to just part with it at this point.
Yeah, but at the same time, you know, if the traditional media model is sort of ending, and David, I'd love to get your views on this. You know, Nexstar has been going out and acquiring bunches, like lots and lots of stations. Also launched News Nation, a cable news channel. I mean,
it's an enormous number of stations. I do think it's probably helpful. I'd be curious what Chris thinks about this. To go back, I was there when Disney, it was at that point, sold the ABC radio business, which was a big business in radio. And I was there and talking with Bob and talking with the people involved. By the way, it involved Tom Staggs and Kevin Mayer, the people who were there with him now. And they decided basically either they had to really double down and go bigger and invest, or they needed to get out, because there was huge consolidation going on in radio. Television's not radio, but it sure is starting to rhyme with it. When you get an Nexstar that has that many television stations, I mean, I never would have dreamed of a world where anybody could own that many television stations. So the question is that the future of television? It doesn't go away. Radio didn't go away. It's just that they added a lot more stations. Well, exactly, but they added a lot more stations, and they consolidated. They stripped out a lot of costs, and they tried to make it up by selling in bulk the advertising. So you have a lot of advertising units across a lot of properties. And the question is that a model now for television stations?
Okay, let's talk numbers. Go ahead, Chris.
Yeah, I was going to notice Capital Cities, which is how Disney acquired ABC, also owned a lot of newspapers, and they sold them off. And I don't think anybody would dispute that was a smart decision. So yeah, those legacy media businesses can lose their value pretty quickly over time.
Yeah, as Chris says, they're still profitable, but the
Yeah.
question is the margin. I remember, this is, I don't think indiscreet at this point, 20 years ago when I first went to Cap Cities as the general counsel, seeing the presentation on the margins for the big owned stations in Los Angeles and in New York, and it was north of 50%
That was
margins.
huge.
Oh, it was amazing. Now, I'm sure they're not getting that kind of margin now. They've still got a significant margin, but what's the margin going to be next year and 5 years from now and 10 years from now? I don't think it's going to be bigger.
I mean, there was no Facebook, there was no TikTok at that point. Google was just barely around at that point. Hey, Chris, what are the numbers we're talking about here? How much could the ABC stations, the network, be worth?
$4 billion is what our Bloomberg intelligence analysts came up with. That's based on about 7 times the EBITDA, which is around $570 million. That number was a big surprise to me. Disney doesn't break out the broadcast business anymore, but I can remember it being an $800 million to $1 billion business. Not too many years ago, pretty consistently as well. So it's almost halved.
Well, as my dad always says, something is only worth what someone else is going to pay for it.
Yeah, and you also have to ask after tax. Now, they can get around things, but one of the issues when you do a deal like this is the basis in these things is like nothing. And so that's a lot of taxes to pay. They got to be figuring out a way to get around it. And by the way, with the new money for the IRS, they're clamping down, right, on some of the spin-off situations.
Interesting.
So it might make it difficult. I'm not saying they can't get past it, but I'll guarantee if they're actually working on this, there are people working hard on that question.
So the lawyers are always the winners, David.
That's always true in life. Yeah, absolutely.
That is. Okay, so Chris, what else could be, David brought up Bob Iger's interview recently where he said everything is on the table here. We're just talking about the network and the ABC stations at this point. What else could Iger be shopping around?
Well, we know he's also looking for a minority partner in ESPN, and he's indicated that's probably going to be something along the lines of a technology provider. You can think an Apple or a Google, somebody like that would have not just money, but sort of expertise at distributing this content in new platforms, because that's the direction they're going. There's going to be an online-only ESPN in the very near future. So that's happening. Right now the whole TV business is just in a real state of flux, and so they've got to figure out a way to make the Disney Plus and streaming businesses profitable. They've got to get their deal done with Comcast to buy the 1/3 of Hulu they're required to buy. So just a whole lot going on at Disney.
Hey, David, could you, just because you spent so much time there, talk a little bit about how things used to work with synergies when Disney released a movie? GMA would be all over it. The parks would. What was the machine?
My perception was when Disney bought Cap Cities ABC, Michael Eisner ran Disney, and Michael made he had committees for synergy, and he talked about synergy all the time, and he got resistance everywhere he looked. Bob, one of the things that's underestimated about Bob is he came in and with really a velvet glove got the synergies done. And behind the scenes, he's the one who actually got synergy done, and he was great at it because he didn't demand it the way Michael did. He didn't bully you. He just sort of cajoled and had some people look at it, and they did a terrific job. It was a terrific job.
I mean, from the perspective of like a Star Wars movie or something comes out, there are Star Wars themed rides across parks now. You would see it promoted on Good Morning America.
Yeah, absolutely.
I mean, that would be gone. Some of that would be gone.
Well, it depends on what the deal says.
Yeah.
When they sold the ABC radio networks, ABC News Radio continued with Disney, and they had a long-term deal with the buyer to make sure they took the programming. You can work around a lot of those issues with contractual provisions. But yeah, you'd lose some of the synergies, I'm sure.
It's so interesting. And I guess it's interesting as well as a lot of this stuff goes to these more consumer accessible plays, like what synergies have completely gone away as well, no longer exist in the business anymore too.
Yeah, that's a good point. Hey, Chris, just before we let you go, just give us an update on the Bob Iger turnaround.
Still a work in progress.
Still a work in progress.
Yeah, I think he's I don't know if he's necessarily having second thoughts of coming back, but he probably should be. It's been a rough year and a half now since he returned, So
Well, he's got his work cut out for him.
I'm rooting for him, but he's a friend, so I've got an interest in it. I want him to do well.
Thank you for the disclosure, David Weston. Hey, a big thank you to both of you also for joining us. Chris, congratulations to you and Thomas Buckley on breaking this news. Shares of Disney higher by 1.4% right now. Also seeing shares of Nexstar higher. Chris Palmieri, entertainment reporter for Bloomberg News. David Weston, he is the host of Bloomberg Wall Street Week, also former president of ABC News, and he was president of the ABC Television Network and general counsel of the parent company, Capital Cities ABC. Let's now get an update on everything that's happening here in the trading day. We got less than 15 minutes to go, Charlie Pellet.
Indeed, lots of big stories moving around today, lots of moving parts in this market. Disney, as you mentioned, Tim, up by 1.4%. ARM Holdings, first day of trading, and that stock now up by 20%. 14 minutes to go ahead of the close. ARM surging in its trading debut after raising $4.87 billion in the year's biggest initial public offering. We've got the Dow now higher by 349 points, up 1%. S&P up 38, a gain there of 0.9%. And NASDAQ is up 116 points, higher now by 0.8%. 10-year yield, 4.28% on the 10-year, with a 2-year that's yielding now 5.01%. Spot gold, little changed, up 80 cents the ounce to 19.08. West Texas Intermediate crude, keep an eye there because WTI at $90.32 a barrel, trading back above 90. That is a gain right now of 2%. We've got Brent crude, the global benchmark, north of 93 right now at 93.84, a gain right now of 2.1%. So again, recapping here, a couple of major stories today. Bloomberg News reporting that Disney has held initial talks about selling ABC. We've got Disney up by 1.4%, and the ARM IPO, it is surging by 20.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it's hard to believe we are almost there. In fact, we are less than 12 minutes to the close of U.S. equity trading here on this Thursday afternoon. Excuse me, time flies when you're having fun. We just heard the numbers from Charlie. Worth repeating, though. The Dow up 1% right now, 348 points to the upside. The S&P 500 up a little more than 0.8%, over 4,500. The NASDAQ higher right now by just about 0.8%, 115 points to the upside. Let's get with our next guest, George Schulze, founder and chief executive officer at Schulze Asset Management. George, this afternoon joining us on Zoom from Rye Brook, New York. George, good to have you with us this afternoon. How are you?
Thanks, doing well. Good to be back. How are you?
We're doing pretty well. Looks like traders are having a pretty good day as well. We just heard a lot of the headlines from Charlie. We got the ARM news. We got hotter than expected PPI and retail sales a little earlier today. Where do you fall on things right now?
Yeah, it certainly seems like we're back in a risk-on move right now, and I think there's still a lot of cash sort of sloshing around the system, so people are getting excited, and the inflation figures earlier this week are probably giving people optimism that maybe we're close to the end of the rate hiking cycle, and possibly it's time to really put on risk again. So we'll see how it all goes.
That's a pretty optimistic take from someone who is writing about the alarming rise in bankruptcies and defaults worldwide that might signal imminent changes ahead. Those in some notes you sent across to us. Does the momentum shift dramatically then from the kind of optimism that we're seeing in certainly the equity markets today?
Yeah, well, listen, we've certainly seen a big spike in interest rates from absolute record lows of just a couple quarters ago. And there are a lot of companies that borrowed a lot of money prior to that move up. And it's just, it's concerning for those companies. It's also concerning for the banks and other lenders that lends money at a fixed rate of interest, really at the record lows for the interest rate cycle. So even though the economy seems to be recovering and doing quite well now, and people seem to be more optimistic in the markets, that doesn't mean that we can't go through what would really be a kind of normal default cycle with a certain percentage of companies, call it 3 to 4%, restructuring and having to go bankrupt and ultimately deal with, sort of a changing environment with much higher costs, not just with interest expense, by the way, but also just inflation going through most corporate income statements and balance sheets. So, I think that's sort of a challenge, but it's not a systemic problem that will cause everybody else to fail.
Where are you seeing opportunities right now?
Good question. One thing that we think is very interesting right now is this Grayscale Bitcoin trust.
Oh, talk about that a little bit.
Yeah, it's kind of an interesting one-off situation where you have a publicly traded trust that's currently trading at a large discount to the value of its underlying Bitcoin that it owns. Now, this trust has been trying for years to convert into a regular retail ETF, and the SEC has really clamped down and shut them down and not allowed them to do that. But Grayscale recently won at the district court level a ruling just a few days ago, and we think that helps unlock that value going forward. Of course, the situation has not been resolved yet, and the SEC, of course, could appeal the ruling. Perhaps this case goes all the way up to the Supreme Court, but we think here at Schulze Asset Management that eventually the SEC will either just give up or will lose, maybe even up at the Supreme Court level, and that Grayscale at that point will be able to convert its publicly traded trust into an ETF, which should help eliminate that trading discount, which earlier this year was as much as 50% of the value below its trading price.
Oh, that's pretty interesting. So interesting, Grayscale. Well, where else are you seeing some opportunities right now?
I think there's lots of opportunities for short selling companies that are over levered and that are facing that risk of, problems with their lenders. So, we think the best opportunity there is to short sell the equities of those companies, because when and if there is a restructuring, and in many cases it will be inevitable, the shareholders typically get wiped out. So that's one opportunity. On the other hand, some companies have taken the opportunity and gone through a restructuring and cleaned up their balance sheet, and some of those present excellent value-oriented investment opportunities with lots of upside, given where their current stock prices are trading.
Do you think the opportunities for distressed are going to increase in the near future as a result of higher rates?
Absolutely. Absolutely is a good question. And if you think about that, looking backwards, there really weren't that many opportunities in distressed land over the last few years. When we had the COVID crisis, for instance, there should have been a big restructuring cycle, but then we got so much financial liquidity from the government and so many bailouts that you really didn't have a default crisis. And so looking back over time, interest rates were just so artificially low that we haven't lived through a normal default cycle for a long time. And so if you go to sort of a normal average rate on defaults, again, maybe 3.5% or 3.75% of the total of debt outstanding getting restructured, that would create a lot of opportunities. And so, yeah, we do expect that. There's also a lot more debt outstanding these days than there has been in prior cycles. And so I think it's inevitable that you'll have a restructuring cycle with more opportunities in distressed land.
George, I'm looking at WTI over $90 a barrel for the first time since November 2022. How does that play into the opportunities that you see in distressed space?
Interesting question. Yeah, I think it does in a lot of different ways. And I think the price of oil is just sort of emblematic of where commodities all trade. And it's a sign of inflation, really. But that can impact certain companies in certain ways. I mean, certainly, looking back a few years, in fact, at the beginning of the COVID crisis, the price of oil dropped to below zero. And there were lots of companies in the space that produce oil and other commodities that restructured back then. Well, now those companies look great because they're generating lots of cash flow, and some of them, took the opportunity when prices were so low to restructure their balance sheets. Now, of course, they're generating so much cash flow, and it's likely to increase with these higher prices recently, that they can be aggressive with returning capital to their owners. And so that's an exciting opportunity in the oil patch space.
Do you see the price of oil going down in the long run?
That's really hard to predict. But I do think that there's a lot of structural things going on behind the scenes in the oil market that make it unlikely. I mean, you have the cutbacks from Saudi, you have the ongoing conflict in the Ukraine, and just generally, a global economy that seems to be doing pretty well, that's supporting demand. So with increased demand and relatively limited supply, in my view, there's a good likelihood that oil prices should stay here or maybe even appreciate from here.
I believe we have a Disney red headline here coming across the terminal. We've been talking all afternoon about some of these potential talks with Nexstar, but Disney now said to cut target for Disney Plus streaming subscribers. So that kind of adding to this question marks about where it gets its future content.
Yeah, that's a good point, Simone. I mean, when it comes to Disney, certainly the company is going all in on streaming right now. This was started under Iger. It was expanded under Chapek, and now it's continued to be invested in under Iger. But the big question is, what happens as the decline of linear, and can they make up for it with direct-to-consumer streaming? That's Hulu, that's Disney Plus, that's ESPN Plus, and more.
Yeah, George, just quickly here, we only have about a minute left. Disney has a decent-sized debt pile, I believe something like $11 billion, but Bloomberg Intelligence saying they may have to go back to the market. Do you have any views on that?
I do. I don't think Disney is a candidate for bankruptcy, but clearly there's massive secular change happening in its industry. And, we've seen it with Sinclair and with Diamond Sports, a subsidiary that's currently operating in bankruptcy. Disney's back and forth with the cable companies is certainly emblematic of that. So whenever you have an industry like this with massive secular change, if you have operators in it that have too much leverage, it's a recipe for potential bankruptcy. And that's where Diamond Sports is right now. So we'll see how this all plays out with Disney, but it's certainly something worth paying close attention to because so much is changing in that space.
Hey, George Schulze, love it when you join us here on the program. He's the founder and CEO at Schulze Asset Management. He joins us on Zoom this afternoon from Rybrook, New York. Taking a look, we do see stocks off their session highs, but still up 0.8% on the S&P. The Dow still up close to 1 percentage point. Don't go anywhere because we're joined by our Bloomberg TV team for our cross-platform coverage. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Tim Stenovic and Simone Foxman. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership for those folks watching this on YouTube. Market screen across the screen here, Tim Stenovic. But before we dive into that, I do just want to bring some breaking news across the Bloomberg terminal. A little while ago, another big headline on Walt Disney Company. This time, said to be cutting their target for Disney Plus streaming subscribers. Remember, a little bit earlier in our show, we told you about the news here that Disney is exploring a sale of its ABC News business, and now further reporting by our crack Bloomberg staff here, learning that Walt Disney expects to fall tens of millions of subscribers short of its last publicly stated 2024 target for the Disney Plus streaming service.
Okay, we had a great conversation with Chris Palmieri out in LA and David Weston here in our studio. Of course, David spending many years at Disney, many years as president of ABC and ABC Television, ABC News, I should say. And David made the point that when it comes to content, even if this deal were to happen, that it sort of depends on the structure of the deal when it comes to content from the network being included on streaming services. Because a big question I have is Bob Iger looks to, like he said, everything's on the table when it comes to potentially selling assets. How do those asset sales affect the content available in the streaming push that he's doing?
All right, hold that thought here for 1 second, Tim. We just want to get you the closing bell numbers here in New York. What has been a very positive day here. Maybe that's partly because of the economic data. Maybe it's partly because of the latest IPO to come to market. ARM having a big day, up more than 20%. The Dow Jones Industrial Average going to finish the day higher as well, up by about 1%. The S&P 500 closing above that 4,500 level, up about 0.8%. Similar move on a percentage basis for the NASDAQ Composite. And the outperformer on the day, believe it or not, the Russell 2000, higher by about 26 points or 1.4%.
I feel bad for Simone on days like this where she has to find decliners. In the S&P 500, 433 stocks in the green today, moving higher. Only 68 of those stocks in the S&P 500, Scarlett, in the red.
Yeah, more than 5 stocks higher for every one that is lower on the New York Stock Exchange. So when you look at the sector groups in the S&P 500, no surprise, everything is green. Banks, real estate investment trusts, and auto companies are leading the advances. They're each up by at least 1.5%. The laggards here are healthcare equipment companies. They're barely positive. Diversified financials, interestingly, given that banks are higher as a group. Diversified financials gaining about 0.2%, and pharma companies just barely eking out a gain as well.
Well, let's take a look at some of the gainers on the day today. Shares of ARM really popping toward the end of the day today. We were talking about them hovering around $58 a share. Look at that, closing up more than 24% to $63.59 on their first day of trading. The company raising $4.87 billion in the year's biggest IPO. We know what happened today. The big question is what happens in the next few weeks, what happens in the next few months. Is this going to be a catalyst for other IPOs from the companies that have been on the sidelines over the last couple of years? It's been the deepest, longest listing drought since the financial crisis back in 2009. Let's take a look at shares of Disney with all of this breaking news happening late in the day. Shares still higher by 1.2%, despite the headline that Romain gave you moments ago about adjusting its own forecast for its own streaming subscribers, up 1.2% on the day. This after Bloomberg News reported that the company's held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. That could bring in $4 billion, according to estimates from Bloomberg Intelligence.
And we should just point out real quick,
yeah,
Nexstar also had a pretty good day, up more than 5% at the close.
Yeah, so investors could optimistic that a deal could be beneficial for Nexstar too. You don't often see that, Romain, when it comes to potential acquisitions, right? The company that's doing the buying sometimes gets punished when that news comes out. Again, nothing has been confirmed at this point, just reporting from our team. Let's talk about AT&T. Shares of the company finishing higher by 3% today. We heard from the company's CFO at the 2023 Bank of America Media Communications and Entertainment Conference. The company said it expects third quarter free cash flow in the $4.5 billion to $5 billion range and remains on track to generate full year free cash flow of better than $16 billion. Investors certainly happy to hear that news.
Yeah, Tim, I have to point out that it was challenging to find some decliners today, but I did do it. But they're not down super much. HP, though, falling as much as 2.5%. Looks like it closed the day down 1.8%, as Warren Buffett's Berkshire Hathaway disclosing that it had sold a close to $160 million stake. Remember, Berkshire Hathaway, one of the company's largest shareholders. So this adding to some of that disappointment around the outlook that it put out last month. Bloomberg Intelligence also saying that it reinforces rising concerns about the printmaker's ability to stabilize and grow free cash flow in the immediate term. Also looking at shares of Robinhood, they were down a bit more earlier in the session, but now closing down about 0.5%. They're reporting monthly active users for August at 10.6 million, but that's down from July's 11 million, and Goldman Sachs says that's below expectations. Also, finally, looking at Visa, this is an interesting one. We got news after the close yesterday in a filing that the company is exploring ways to allow some of the largest banks, which are shareholders through a very unique share structure implemented pre-IPO, to sell their shares up to half their stakes. So the market's kind of digesting exactly what's happening here. We're seeing shares down a little over 2.5%, but Morgan Stanley says this may reduce uncertainty. Meanwhile, Jefferies says they expect to see some near-term skittishness.
Well, as far as what went on in the yield space, interesting moves higher in yields pretty much across the board here. Your 2-year yield now moving a little bit deeper into that 5% territory here. And we should point out it was a pretty volatile day. Of course, anytime you have big economic data, you're going to see these big swings. But the net effect is a modest uptick in yields here at the close. 4 basis points on the 2-year, 3 basis points to 4 on the 5 and the 10-year, and your 20-year yield and 30-year right now also up about 3 to 4 points. So almost really, when I look at this now a little bit closer, almost a parallel shift here in the yield curve higher.
Yeah, definitely. All right, and of course, we talk about this idea that the case for a soft landing has been building. The Atlanta Fed GDP Now model now shows a move lower. They're now looking for a real third quarter GDP of 4.9%, so below that 5% mark versus 5.6%, a few weeks earlier. I wonder how you fold rising oil prices into that, right? Because that's just been going up and up.
All All right, I just want to get, we actually are getting earnings, believe it or not.
Still?
Earnings season never ends, as Kitty Greifeld always likes to remind me. Adobe crossing the wire right now. Those numbers coming in, at least as far as their fiscal fourth quarter numbers, the adjusted EPS, 410 to 415. That's the guidance that they're giving, guidance for the fiscal fourth quarter, 410 to 415. Now, even the low end of that range is above the average of analyst estimates here. As far as their forecast for fourth quarter revenue, 4.98 billion. We'll just round it up to 5 billion to 5.03 billion. And again, the lower end of that range is about on the nose, was what the street was looking for on average. Now, as far as the quarter that just passed, the fiscal third quarter here, also a beat on a couple of key metrics. Only minor beats, though. 409 on EPS, a minor beat there, and $4.89 billion in revenue, also a minor beat on that. Shares up 2%, about 2% here in after-hours trading.
Yeah, and what's interesting here is that analysts are going to be looking for some signals about how corporate budgets are looking. Corporate budgets have been tight, but do they see stabilization in the New Deal pipeline? We will hopefully get some more commentary on that as we hear from the executives later this afternoon.
We actually spoke to a president at Adobe yesterday. He was on our program. Adobe made a big announcement about Firefly and the corporate tools that they had available, the enterprise tools. What's that?
I used to love that show.
The show Firefly?
Yeah.
Well, look at what's on the screen right now, this generative fill that they can do, Romaine. We talk about AI and what companies are promising with AI.
Yeah.
They said they've been working on this for 10 years, and this is legit stuff here. Wow. I mean, they're literally generating images out of nothing. I mean,
it's really cool.
It actually is really cool. And there's some, they argue serious economic implications for the company of doing something like this.
I feel like this is going to be available on the iPhone in like 2 years.
Yeah, it's a really good point. You can search for just people doing demos of this on TikTok. It's actually a thing.
You know, one thing to keep in mind when we do get to the conference call is whether the company says anything about Figma, which is looking to buy, but of course the EU has been stopping them and saying, wait, we got to look into whether this dampens competition. And of course, this is a huge strategic purchase for Adobe.
I do want to go back to the Firefly thing, because I think we talked to the same person yesterday. And it's interesting, too, because there was always this idea here that most of these AI tools, at least in terms of being revenue generator, is going to be much more about selling to corporations, right? The idea that the applications there had much more profit potential. But Adobe had talked a lot here about kind of catering to just regular folks, if you will, the people that would use a Photoshop or Illustrator or something like that, and that there was actually a lot more opportunity there, at least in their view, than in some of the other spaces.
You know, but the challenge, I think, for the workforce, not so much for Adobe, is do people lose their jobs because they have all these tools at their disposal? Now, I will say the president of Digital Experience, who was, I think, on both TV and radio yesterday, didn't really answer this question.
No, he didn't answer.
Say.
No, I mean, look, we're all losing our jobs at some point, right? I mean, that's just the way it works.
Someday.
But
I'm doing decline.
Reality check there.
But in all seriousness, I mean, that's still so far in the future. I mean, in terms of like en masse, when it starts to really replace things. I think most people say that's so far in the future. But you had all these executives in Washington yesterday. I mean, not necessarily the right executives, but you had some big executives there. And I mean, my main takeaway is that there really are no guardrails right now. I mean, companies could kind of do what they want, and by the time Congress catches up, well, they're going to be behind.
Yeah, I think catches up is the key phrase there, Romaine. Do you think they actually understand?
No.
The members of Congress understand what,
No,
should be
I think
regulated,
I
should
seem
not
to
be
remember
regulated.
hearing from just 2 years ago where people were still trying to explain them, how Facebook sells ads, and that was just 2 years ago. So you think they understand AI?
Sir, we sell ads.
Yeah.
I think that's what Mark Zuckerberg said. Guys,
Just
that
a
is going to
series
do
of
it.
tubes, my friend.
That is going to do it for our cross-platform coverage. Coming up, we're going to be seeing you tomorrow, same time, same place. Don't go anywhere, though, because we got much more of our program coming up in a minute, and you guys are doing more on TV.
Seen the property market collapsing, dismal economic recovery post-COVID, any number of geopolitical squabbles with the United States. To discuss this, I'm pleased to bring in our next guest, Jim Chanos. He's the founder of Chanos & Company. Thanks so much for joining us. He's in studio, our Interactive Brokers studio. He says China's on a treadmill to hell. and shared those concerns with the House of Representatives Select Committee on the Chinese Communist Party this week. Talk to me about the hearing. You know, were you able to kind of get a sense of whether or not, and I know you weren't there physically in person, but you did offer your insight. Were you able to get a sense on what the committee's doing? Are they going to be successful? Are they going to do anything, in fact?
That's above my pay grade, and thanks for having me, as to the politics in Washington. And I do think that the committee is doing good work in calling attention to these issues. And you know, we've been pretty negative on China now for a better part of 13 years, and I think that the risks that China poses have morphed from purely financial to now beyond that into the political realm and the national security realm, and I think that makes this a bigger story, and the economic model risks as to how China sort of deals with those may in fact affect the politics.
Does the contagion spread beyond what I think most people are expecting at this point?
The good news is that the risks to the real estate market and the economic model do not have a lot of direct contagion risk to Western banks, and particularly American banks. Where the risks are in our equity and debt investments that you know, various funds hold, pension funds hold, retail investors hold, and I think that's the bigger issue as opposed to a 2008 type transmission from their real estate bubble bursting to everyone's real estate bubble bursting. They can keep that internal, but it's a big problem.
What are the threats beyond an economic collapse or a property collapse in China? I'm talking geopolitical threats, national security threats. Yeah. What's the stuff that keeps you up at night?
Well, the morphing from spending on the additional high-speed rail link that's unprofitable, or the next apartment building, and putting up and basically building another aircraft carrier. You know, the classic 1930s scenario where a number of countries, you know, ramped up their defense spending as a way to stimulate, and we know how that ended. And so I think that we saw reports even today, I mentioned it earlier, that Chinese defense spending may be a lot greater than we think, you know, as high as 4% of GDP. The US is 3% of GDP. So they are spending more money. It used to be directed internally with internal security systems and that, but increasingly now it's hard to miss that it's also external with the Blue Water Navy and increased tensions around Taiwan.
Well, let's talk about that. I mean, how much of a concern do you think that is right now, an invasion of Taiwan?
Well, as I said earlier, I think the real risk is something happens, right? An incident that's unexpected, right? You have now ships transversing, crossing each other's bows. You have you know, a lot of aircraft in the area, and all we need is someone, you know, a pilot to make a mistake or get scared or you know, a mishap of somewhat, and then you have an international incident, and that's, I think, as the temperature kind of rises in the South China Sea, I think that's the real risk, as opposed to a premeditated, you know, attack on a Western country or Western ally.
So you want to short China potentially?
Well, we've been short China for years. You know, paradoxically, we're less short China now than we were 10, 12 years ago, because China has gone nowhere. I mean, the stock market has basically been flat for 12 years. And as every other stock market has tripled or quadrupled. So it's been a very poor place for Western investors to park their money for years. I mean, not just for the last 12 years, but really for the last 20 years. And I think that's going to continue to be the case, broadly speaking. China does not treat Western capital very well.
How are you betting against China right now?
We have some direct shorts in the financial area. We have some indirect shorts that depend on China for a fair amount of their revenues. But as I said, our direct shorts are probably no more than 4 or 5, 6% of our portfolio. In 2010 and 11, it was above 20%.
We've spent a lot of time over the past few months talking about the struggles of the Chinese economy and the data that we get, or the lack thereof of data that we get, Jim. What evidence do you have that the Chinese economy is actually worse than what Beijing says or what markets already believe?
Yeah, the funny thing is that if you have an investment-driven economic model, which they do, the GDP is actually accurate. I noticed something over the weekend that Michael Pettis pointed out, that in an investment-driven model, GDP growth is actually an input. It's not the residual, which I think is a really interesting observation. That is, I've always joked that China's the only major developed economy that knows its annual GDP on January 1 of that year.
I saw that in your
tweet. Yeah, and so, you know, whatever the numbers needs to be, they will put enough stimulus in terms of new investment to hit that number, give or take. So I don't quibble with the actual numbers they're putting out, but it's the quality of the numbers, if you will. That if you never write off bad investments, the actual costs to GDP are sitting in your banking system in terms of bad debts. And you have to either inflate that away or recapitalize your banking system. And so that's the nexus of this economic model with economic growth. And it's a banking issue, ultimately. And so I think that's where I worry, that as long as the banks never write off the bad debts, that's where the quality, if you will, of disclosure is poor.
Let's shift gears just slightly in our last minute here before the break. You're sticking with us. The ARM IPO was today. Shares rallied 24%. Stock closed at $63.59. Your thoughts on the valuation?
It seems a bit high.
It's a bit high. Are you not convinced by the AI craze?
I think it's what 120 times earnings and I think revenues are $2.5 billion and went out at a $60 billion valuation.
And 25% of its revenues come from China.
Yeah, so almost 25 times revenue seems a little steep, but what do I know?
Are you going to short it?
Well, you can't yet, so it's a limited float, and but I'm sure at some point we'll crack open the prospectus.
Have you been thinking about shorting NVIDIA?
No.
No. Don't get in the way of the.
We have things that are perceived as AI plays that are trading much more expensive than NVIDIA does. So no need to go after the OG.
Well, stick with us. We're joined right now by a legendary short seller, Jim Chanos, founder of Chanos & Company. We're going to be back with more with him in just a few minutes. Simone Foxman, Tim Stenevec, this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. First day out for ARM Holdings' biggest IPO of the year. ARM Holdings today up by 24.7%. After the bell, Adobe forecast adjusted EPS for the fourth quarter. The guidance beat the average analyst estimate, but after ours, we're looking at Adobe down now by roughly 0.1%. Apple has named a new leader for its secret group working on a non-invasive blood sugar monitor, putting a veteran iPhone and Mac chip executive in charge of one of the company's most ambitious forays into health technology. The Walt Disney Company expects to fall tens of millions of subscribers short of its last publicly stated 2024 target for the Disney Plus streaming service, that according to sources. Also, sources tell Bloomberg Disney has held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. Disney shares up today by 1.2%. Stocks advanced after strong economic reports revive speculation the Fed will be able to engineer a soft landing, even if it keeps interest rates higher for longer. S&P today up 37 points, closing above 4,500 at 4,505, a gain today of 0.8%. Dow Industrials up 331, up by 1%. NASDAQ up 112, up by 0.8%. 10-year yield 4.28% with a 2-year 5.00%. Spot gold up 0.1%, $19.10 the ounce, and West Texas Intermediate crude closing above $90 a barrel. Right now, Brent crude, by the way, at $94. Brent, of course, the global benchmark. WTI today up by 2.3%. So again, recapping here, stocks higher across the board. First day out for ARM Holdings, up today by 24.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. Well, we're back with legendary short seller Jim Chanos of Chanos and Company. We were talking before we went to break about the era of AI. What kind of opportunities has this opened up as someone who looks at the market with a very critical eye?
Well, I think anytime we see one of these tectonic shifts in new technology, like the internet in the 90s, people at first embrace everything. Everything is going to benefit. But what you find out, of course, is that when it's truly a major shift, is that those technologies end up harming as many businesses as they create. And so if you think about the companies that were in the business of distributing analog physical products that became digitized, they went away. Blockbuster Video, Eastman Kodak. I mean, companies like that, record stores. I mean, and I suspect that if AI is as big as most people think it will be, you will see lots of businesses that had moats find out that the moats have been breached. So your software as a service, what prevents a corporation from having AI design its own software for various different applications, right? And there's lots of things that suddenly you don't think about. I kind of joked a little bit a few months ago when IBM's CEO came out and said that AI may make some of the IBM workforce redundant. And I joked, well, what happens when the clients find that same thing out?
Yeah, that's a really good point. I want to shift gears a little bit and talk about your strategy around shorting and what you're seeing in the market today. I think a lot of people, of course, understand your history with being a fraud hunter and going after companies like Enron in the past. I'm wondering if over the last few decades, with regulatory changes, you've seen fraud reduced, or are there increased instances of potential fraud out there?
I've called this the golden age of fraud. I think there's more fraud in the financial markets now than there has ever been.
Why?
And I teach a course on the history of financial market fraud. So the cycles go back to the late 17th century. I think that it always changes, but what really has me bothered now is that a lot of it hides in plain sight in the way in which companies report their business and their metrics. So prior to say 10 years ago, you really had to sort of, if a company was making unusual changes to its earnings statements, they would have to explain it away. And nowadays, adjusted earnings are basically the norm. And companies add back all kinds of things that they don't really
It is a little wild.
care to expense. Oh, it's amazing. Coinbase, in the fourth quarter of last year, I think share-based comp was almost 80% of revenues. And they just added it back.
I mean,
and so it's,
we go back to the why WeWork didn't go public the first time.
Yeah.
Community-adjusted EBITDA.
Yeah, that was...
At this point, it's a joke, but then it wasn't a joke.
I know, and investors lost a lot of money. And the SEC, promised kind of a crackdown on this a number of years ago. They admonished companies, as I recall, to not lead with these kinds of results. But I mean, for God's sakes, General Electric in the first quarter had 16 pages of adjustments on its earnings release. I mean, it's really, and companies that just take restructuring charges annually. Every year they take a restructuring charge. Well, if you take it every year, it's recurring. And I think that in Silicon Valley is in particular, pretty bad at this, where companies that lose hundreds of millions of dollars every quarter are reporting, break-even adjusted profits. And so you just wonder if they're really businesses or are they executive enrichment schemes?
Question mark for you. Although this is the golden age of fraud, activist activity has dropped by 85% since it hit a peak in 2015. These are numbers from Direct Market Intelligence. Yeah, it answered the question I posed just before the break. I mean, is the era of the short seller behind us?
I think everybody asks that during every bull market. 1999 and early 2000, it was the same sort of question. Will short selling ever work? And it's sort of the corollary: does value investing ever work again? When people pay higher and higher prices for questionable corporate assets. And the question is generally, it comes back, and businesses generally find their true value over time. I mean, just look at the meme stock, run up and now disaster from 2021 to today, and there was no price too high to pay for some of these stocks because they had a short position. And ultimately, most of them have come crashing down to earth.
We'll get back to that specific one in a second. But first, I want to ask about the, rising short seller in the market right now, Nate Anderson at Hindenburg. He's made big bets against Adani, or rather, he's said very public negative things about Adani, Icahn Enterprises. Do you see eye to eye with some of the calls that he's made?
Look, I think Nate and Hindenburg have done great work on a number of names, Nicola and others, and you'd be wise to at least hear what they have to say, even if you don't agree with it. If it's well researched and like anything, stock prices are opinions based on facts, and so at the end of the day, it's essential for a marketplace, whether they're positive facts or negative facts. And if you're a good investor, it behooves you to basically hear both sides of any story.
We'd be remiss if I didn't ask for an update from you on Tesla. Shares up 124% this year.
Yeah, we are short Tesla. We remain short. It's one of our 44 positions that we have. Look, Tesla is in many ways, I think, epitomizes this bull market. It's a hopes and dreams stock. It's trading at 75 times earnings, which aren't growing anymore. It looks like revenues are going to be challenged in terms of growth. So it's now, again, an AI story or a robo-taxi story or a battery story or a robotics story. It's whatever you want it to be. And it reminds me a lot of Cisco back in 1999 and 2000, where Cisco was a networking company. Tesla's a car company, but Cisco was going to get into everything else that had anything to do with the internet. And people put a higher and higher multiple on it. And ultimately, Cisco did okay, but the stock price, dropped 90%.
I'm going to do a quick lightning round of some stuff that has been reported that you are or have been short recently. Just have me yes or no's if you're still short. Digital Realty Trust?
We are short the data centers.
SL Green Realty?
SL Green is, we are short commercial real estate.
Okay. Tesla, you said. Sunrun, you said.
The solar leasing companies, I've called them science projects. They're absolutely hysterical. They lose hundreds of millions of dollars, huge negative free cash flow. And getting back to our early conversation about metrics, they report rather than a regular P&L, which would be embarrassing, they report these net present value calculations based on the panels they put up on people's roofs, and it's absolutely hilarious the way they do it. And I think investors are going to, find out the hard way about it.
All right, Jim, we're going to spend the last 40 seconds with you getting your thoughts on what you're watching, what you're streaming, what you're doing, and what you're seeing at the movie theater. New movie out, Dumb Money. It's got Pete Davidson in it. It's got Seth Rogen in it. Are you going to see it? Have you seen it? It's all about meme stocks.
I told one of your colleagues earlier, I don't see the need since I live Dumb Money 5 days a week in the marketplace. So at some point, I'm sure I'll see it. I think it celebrates the meme stock investors winning over Wall Street and the evil hedge funds. The sad thing is that most of those meme stock investors have lost large amounts of money, chasing these ideas, because, as we pointed out, a lot of these companies came crashing down to earth, and in some cases have already gone bankrupt.
Hey, Jim, really appreciate you taking the time and joining us, especially for such a long period of time. Jim Chanos, the founder of Chanos & Company, legendary short seller here in our Bloomberg Interactive Brokers studio.
Now let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Nance.
Thanks, Simone. The minutes are ticking toward the midnight deadline for a negotiated contract between the big three automakers and the United Auto Workers Union. The union wants to see pay increases, a return of benefits for new hires, and a 4-day work week for their 150,000 members. Joseph Foudy is a professor at NYU Stern School of Business.
This is really going to define kind of what pay and benefits look like in this industry for many years to come.
GM and Ford are waiting to receive a response on their offers of raises of 20%. Stellantis says it's also waiting for a response from its proposal to raise salaries 17.5%. President Biden is trying to distinguish his economic policies, now known as Bidenomics, with those of his GOP detractors. He spoke today at a community college in Largo, Maryland.
For all the time they spend attacking me and my plans, here's what they never do. They never talk about what they want to do.
But Biden did talk about what Republicans want to do. He says they want to cut taxes for the wealthy and raise costs for the middle class. He's now calling that MAGAnomics. President Biden's son, Hunter, has been indicted on federal charges that he purchased a firearm without disclosing he was unlawfully using drugs. The charges follow the collapse of a plea deal in which Hunter Biden agreed to plead guilty to 2 misdemeanor tax crimes and go through a diversion program for a firearms violation. Biden's attorney says the gun law under which his client is being charged is unconstitutional. Former President Trump will not need to stand trial on election interference charges next month. Today, Fulton County Superior Court Judge Scott McAfee ruled that 2 of Trump's co-defendants will stand trial in October, but he severed the remaining 17 cases, including Trump's. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Adobe shares trading lower after hours, down now by 0.6%. Adobe provided a sales outlook that met analyst expectations, but disappointed investors who were expecting demand for the company's AI tools to boost revenue. Stocks rallied today. The Dow, the S&P, and NASDAQ all moving higher. S&P closing above 4,500 at 4,505, up 37 points today. That was a gain for the S&P of 0.8%. Dow Industrials up 331, up 1%. NASDAQ up 112, a gain there of 0.8%. 10-year yield 4.28%, with a 2-year that's yielding 5.01%. Spot gold up $2 the ounce to $19.10, up by about 0.1%. West Texas Intermediate crude with a close above $90 a barrel. WTI 90.68 today, up by 2.5%. Brent, the global benchmark, closing above $94 now, 94.12, higher by 2.4%. So an update today for the Dow, the S&P, and NASDAQ. What's behind the rally? George Schultze is founder and CEO of Schultze Asset Management, and he was a guest right here on Bloomberg Business Week.
Yeah, it certainly seems like we're back in a risk-on move right now, and I think there's still a lot of cash sort of sloshing around the system, so people are getting excited, and the inflation figures earlier this week are probably giving people optimism that maybe we're close to the end of the rate hiking cycle, and possibly it's time to really put on risk again. So we'll see how it all goes.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. First day out for ARM Holdings, biggest IPO of the year. ARM today up by 24.7%. Recapping stocks higher. S&P up 37, a gain of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Steneveg and Simone Foxman in for Carol Massar this afternoon. We're live in the Bloomberg Interactive Brokers studio in New York. Well, it's the third largest pizza chain in the world. It's got stores in every state in the U.S. and 27 countries and territories. And for the second year, it's the official pizza sponsor of the NFL. We're talking about Little Caesars, the Detroit-based pizza chain known for, well, its pizza, and of course, the guy who says pizza, pizza.
Pizza, pizza.
It really is true. We're very pleased to have with us Paula Vissing, president of Global Retail at Little Caesars. She joins us from Las Vegas today. Paula, how are you?
I'm very good, thank you. And thanks so much for having me today.
You're welcome. Be honest with us about the pizza thing. That thing is something you hear all the time, right?
You would be surprised at the numbers of times I'll be on a plane and, you sort of chit chat with the people sitting next to you, and I'll tell people that I work for Little Caesars, and immediately they will say pizza, pizza. So yes, we hear it all the time.
There's a real marketing
That's
question
great,
Well, there's a real marketing
ahead,
question
sir.
that I have for you about this. I mean, that's something that I remember from my childhood when I was literally, under 10 years old. Talk to us about the marketing and how the staying power of that phrase and how it hasn't changed over time when so many other companies have significantly changed the way that they get their message across.
Right. You're exactly right. I mean, we're really so fortunate to have something that is so iconic, be affiliated with Little Caesars, be something that people understand and recognize. It's not just in the United States. As we open restaurants around the world in some of our biggest markets, we hear the same thing repeated to us. So we're very, very fortunate to be able to have something that is so recognizable to people that we can continue to utilize to communicate the benefit and power of Little Caesars.
I'm going to ask something more deep here because we got CPI data, or inflation data out earlier this week. And one of the trends that we've seen recently has been that food away from home still increasing at a much faster pace and a price perspective than, just eating food at home. I know it's always cheaper to eat at home. How are you seeing this, I guess, in your own company and in your own stores?
Mm-hmm. Certainly over the last 2 years, the same inflationary pressures that everyone in the industry is seeing, we've experienced. We've been able to manage our business very well. We've taken some pricing where that was necessary. But, you know, I think if you look at our business right now, we continue to offer a great value that's very important to us. And I've seen the same data that you've seen. And so, you know, if that's what folks are experiencing, that heading to the supermarket's a little bit more expensive, hopefully that'll give them more incentive to head to a Little Caesars.
Hey, Paula, sort of in the same vein as Simone is asking about, you know, it's always a challenge to cover private companies because we don't get the quarterly reports from you, and you've been family owned for years and are still held by the founding family.
Exactly.
Give us some numbers, though. Give us some numbers that we can work with.
Yeah, if you'd like to talk with me again, I'm gonna take a pass on that. But you know, want to be respectful to the ethos of our company, which is to stay, you know, to keep that stuff confidential. That's something that was very important to our founders, and we all continue to believe in that. I will tell you, our business is performing very well this year. We're very excited about it. Our franchisees are excited about it, and we look forward to that continuing.
Where do the franchisees see the costs increasing? What do you hear from them?
You know, as I said, the same things that we just talked about. Certainly that period last year and going into or coming out of 2021, where you had so much extraordinary commodity inflation. You know, I mean, we all experienced that. But again, I think the strategies that we've had in place, you know, we've taken pricing as many people in the industry have. We've just been able to kind of settle into the right place for us, where we still got the right price value equation that allows us to meet the needs of our guests and continue to offer a really affordable, great tasting product for them.
Are you guys preparing for the prospect of a true recession here, or have you done enough preparation that you feel like, well, we don't have to really do much more in case of a downturn?
I think it's a great question. I think that, you know, we're always try to make sure we're always mindful of what the economic situations around us could be. If that's something that happens, and I'm confident you've got other guests that are better positioned to offer a point of view about whether that's likely to happen, you know, we'll be prepared to continue to provide our guests with a great tasting product, a great tasting, affordable product.
Hey, Paula, when I was doing research ahead of this interview, I was really surprised to find that for so many years, you didn't do home deliveries at Little Caesars and started again back in 2020, which ahead of the pandemic, I should note. So it was kind of like perfect timing there. Give us an update on deliveries. Why did you take a multi-decade break from delivering pizza, and how's it going now?
Yeah, fabulous question, and thank you for that. And you're exactly right. You know, for so many years, we built our business off, you know, our hot and ready model, the most convenient way to grab a pizza, come in and grab it, and be in and out of the restaurant in 30 seconds. But as you said, in 2020, we made the decision to launch delivery. Just happened to be right before the pandemic, which was certainly helpful to our business there. But the reason is simple. You know, we consider one of our core values to be making sure that we are convenient to our customers. And the fact is that there are guests who want their product brought to them. And so that was really the guiding principle for that. It's been really great for us. We continue to move forward with that.
Sure, yeah.
You know, we hear great feedback from our guests that they really like it.
We've only got about a minute left, but I just want to ask, are you finding it very challenging or not as challenging to hire workers in this scenario? And are you doing anything different to retain them?
Yeah, you know, again, just like everybody in the industry, I would say certainly through last year, we experienced the same thing that many folks in the industry did. For us personally, we have about 600 company restaurants, and our franchise partners, we're finding things a little bit better. There are pockets where there are still struggles. And so we continue to move forward. You know, we believe, and this is something we work on with the company restaurants as well as with the franchise partners. You know, we think it starts with making sure the right culture is in place in the stores and really working hard to make sure that Little Caesars is a place that you want to work.
Hey, Paula, come on back, and especially when you're in New York, come join us here in the studio. We'd love to have you. That's Paula Vissing, President of Global Retail at Little Caesars, joining us this afternoon from Las Vegas. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. ARM Holdings, first day of trading up 24.7% after raising $4.87 billion in the year's biggest IPO. The chip designer, owned by SoftBank Group, sold 95.5 million American depository shares at the top end of a marketed range of $47 to $51 each. Again, ARM today rallying by 24.7%. Bloomberg Radio caught up with ARM CEO Rene Haas on the floor of the New York Stock Exchange.
AI is everywhere, and if it's your edge device like the Assistant or the Alexa or your autonomous vehicle, that's all AI. And now we're seeing it in the cloud and the data center with all the growth of NVIDIA. NVIDIA announcing one of their newest products, Grace Hopper, that is based on ARM. So ARM is everywhere relative to AI.
And you can hear more of that conversation on the Bloomberg Technology Podcast. You can download it wherever you get your podcasts. Again, ARM today up by 24.7%. Sources tell Bloomberg the Walt Disney Company has held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. Sources say the talks are preliminary and have not involved a specific valuation. Nexstar says it would be interested at the right price. And today, Disney up by 1.2%. Delta Airlines has reduced its expectations for third quarter profit on higher fuel prices and larger than expected maintenance costs, but it reaffirmed its full year guidance on earnings. And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Simone Foxman, Bloomberg TV correspondent, in for Carol Masser this afternoon. Let's go from New York to Washington, D.C. for a check on the latest world and national news. Nancy Lyons is in the 99.1 newsroom in Washington. Hey, Nance.
Hey, Tim. The United Auto Workers Union is ready to strike against all three Detroit automakers if a deal is not reached by midnight tonight. Bloomberg's Detroit Bureau Chief David Welch says UAW President Sean Fain is looking at a so-called targeted strike.
One strategy could be to shut down engine plants that would effectively shut down all of the assembly plants. But that would be the same thing as a national strike very quickly anyway. It's what they call a bottleneck strike. He could do something else like strike the pickup truck and large SUV plants. That's where most of the profits are made for these three companies. So by shutting down just a few plants, he does a pretty severe amount of financial damage to earnings.
Bloomberg's David Welch in Detroit. The UAW is at odds with the companies over wage increases, pensions, and job protections. Hunter Biden has been indicted on 3 federal gun charges.
The Justice Department alleges that Hunter Biden purchased a firearm without disclosing that he was unlawfully using drugs. The indictment follows the collapse of a deal in July that allowed the president's son to plead guilty to a pair of misdemeanor tax charges and acknowledge the firearms violation without a conviction. The plea bargain fell apart at the last minute when a judge questioned the terms and refused to sign off on it. House Speaker Kevin McCarthy this week instructed a House committee to open an impeachment inquiry against President Biden, based in large part on Hunter Biden's business dealings. Steve Rappaport, Bloomberg Radio.
Former President Trump will not head to trial next month in his Georgia election interference case. A judge today granted motions from lawyers Kenneth Chesborough and Sidney Powell to sever their cases from Trump and the other co-defendants and move for a speedy October trial, but the judge has not yet set a trial date for Trump. The death toll from flooding in Libya is now more than 11,000. Matthew Miller is with the State Department.
The United States, through the U.S. Agency for International Development, has announced an initial $1 million in humanitarian assistance. That's just a very initial payment to meet the most immediate needs on the ground.
Miller says the U.S. is also preparing to send a response team. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Simone and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Hey, one of the stories crossing after the U.S. equity market closed here in New York that's among the most read on the Bloomberg terminal is by our own David Voryakis. It's all about Ken Griffin, the hedge fund billionaire. He subpoenaed ProPublica and 5 of its journalists for documents related to the publication of reports that detailed his secret tax return information, Simone.
Yeah, ProPublica actually published tax information last year for many of the wealthiest U.S. taxpayers, and he's just one of them. But the specifics in those reports were that he had an average annual income of $1.7 billion between 2013 and 2018, and yet only paid an average federal tax rate of 29.2% during that time. And I think the idea here was really to drive into how much tax are billionaires paying, because the likes of Jeff Bezos, Elon Musk, in some years paid minimal or no income tax.
I think this raises a lot of questions about journalists and journalism, and to what extent journalists can get access to this information through anonymous sources. We should note a ProPublica spokesperson said it received a, quote, sprawling subpoenas from Griffin's lawyers, and it doesn't know the identity of the source who provided the tax information. Here's what the spokesperson said, quote, "We are deeply committed to protecting our sources who are the lifeblood of our journalism and the independence of our newsroom. This is sacrosanct